okay, Kelly? Jeff's car just pulled up, so it should be okay. Alright. Bye. See ya. Yeah, Kelly. Okay, I think I'm sending audio right now. Hey everyone, thanks so much for joining us today for today's Trader Summit. We're really excited about today. We've got 8 speakers, it's 8 hours long, it's going to be a lot to take in, and it's going to be awesome. We are coming at you today from our studio here in Salt Lake City. However, I'm at the control room, and for for local restriction reasons and for personal safety reasons, Jeff Gibby is out at his desk and he'll be broadcasting from his desk today. Anyway, we'll be starting in about 4 minutes. Hey, as you're coming on, make sure you go ahead and say hello and let us know where you're coming from. I see we've got quite a few people on already, and we'd love to know who's here and where you're coming from. And as the day progresses, don't forget we're simulcasting on both YouTube and GoToWebinar. So if you're watching this on YouTube, first of all, make sure you like and subscribe if you haven't done that already. We really appreciate your support. And if you want to receive the free additional offers that the presenters may talk about, all you have to do is go to metastock.com. There's a large banner on the top. Just click on that banner for the summit. Go there and register, and that's where you can receive you'll receive follow-up emails for freebies from all of the presenters today. Anyway, we'll be starting here in about 3 minutes. I'll go ahead and go on mute and make sure Jeff is okay on his end. But thank you again so much for coming, and successful trading.
I can hear you. No, I'm not. But we're coming through to me.
I'm also here.
Oh, there he is. Oh. Thank you.
Hey everybody, Jeff Gibby over at Metastock. Hope you're doing well. I hope you enjoyed the new office environment. I'm not actually in my basement today, so that's going to be funner. I want to welcome you. I want to thank you for coming. I hope you're doing well this morning. Let's read a legal disclaimer. Let's go. Today's demonstrations are meta software plugins, rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So there you go with that. Do want to say real quickly, I want to thank our sponsor, Stocks and Commodities Magazine. They've been sponsoring the Online Trader Summit for like 7 or 8 years now. I can't believe we've been doing them that long. But they're a great sponsor. They've been publishing articles since 1982. They've got 1 million plus subscribers. They've done 17,000 trading articles on trading, and I get a copy every month. It's a great thing. If you didn't, when you registered, I'd recommend that you go and take advantage of the free they offer, and you can do that at metastock.com/trader summit. Just fill out the registration form again, and you can sign up for any of the bonus offers that are available today. In case you're not familiar, we are Metastock. We're actually hosting the event today. We put it all together, something that we've been doing for Metastock. The one thing I'm going to say about that is for like 25 years in a row, it's been rated #1, and it does some pretty awesome things. I wouldn't trade without it, but it's going to help you scan markets. It's going to help you test trading ideas. It's going to do forecasting with our patented forecast process. And we're going to talk a lot about it today just because it's what we're using to kind of run the show and a lot of the analytics today. So in any case, let's go ahead and talk next about who our first speaker out of the way a little bit. Barry Burns has been a friend of Metastock for a long time now, probably a decade and a half. And he's going to talk today about the method, the 3 energy method of trading. He does a really good job, and we need to have him a little bit more often because he does do a really good job. So Barry, it's good to have you here today. How are you doing, my friend?
Well, thank you, Jeff. I am on top of the world and flying higher by the minute.
Okay. I want you to know I can hear you really good.
Good. I also have prepared my webcam. Is this an appropriate time to see if the technology is going to work for us?
Yeah. And I'm in control too for you.
All right, let's see.
Oh, there you are. Yeah. How you doing?
Hello.
It's good to actually see you.
All right,
let's show you. This is not working.
Okay, thank you. There's a little disconnect between the picture you showed and the picture I'm looking at on the webcam.
Well, you mean the ones that's on the screen right now? And
talking about like a decade of disconnect.
High school photo. I think it might be me, and I think I know how to fix it. So thanks for bringing it to my attention. I'll see what I can do here. Yeah, no problem. Barry, I can see your screen. I can see your smile, and I can hear you. So I'm going to get out of the way.
All righty. Okay. Oh, you can see my slide?
Oh, we can. Yes. Everything looks good.
Oh, okay. Because I can't even see the slide. All right. I can see it. Very good. By the way, the pinging, I heard that too. And what I noticed was when it went from one person to another here in the attendees or the various administrators, each time I flipped to a different person, that's when ping went on. So I don't know if that's helpful or not. But all righty, my friends. So welcome. I'm excited to be here. As Jeff, working with Metastock for many, many, many years. In fact, Metastock was the very first actual software that I started using, and I'm still here today using it. And my dad was a stock trader, so I grew up in it. I'm very, very young, as you could see, only 61 years old. And my dad started teaching me when I was 8 years old. So about experience, and I started, we didn't even have computers. Heck, we didn't have color TVs. We had vision. So training's changed a lot since then with regard to, and we didn't have computer software programs back in the day because we didn't have a little thing called the computer. Didn't have it. So we literally would use yesterday's newspaper. And when I first started really learning technical analysis, my first professional trader who was a teacher, he had us hand draw R's on a graph paper. And then we'd hand draw a little protractor there and all that kind of stuff. So that's how old I am. And so when Metastock came along, it was just amazing. Wow. All right, so just a little bit about me for Trend Trading for Dummies. Again, I got to say, Technical Analysis Stock is a great magazine. I've been receiving that for forever, every month, and thoroughly enjoy it. So, highly recommend the magazine, by the way. And so let me ask, who are you? So I can see the questions. So why don't you type in, since we're live, let's take advantage of it being live instead of just being a recorded presentation. Go ahead and type in, what are some of your most common trading problems? And maybe I can weave to the presentation today to make this more personal and helpful specifically for you. So go ahead and type those in. Let me bring my questions box over here a little closer to the camera so it doesn't look like I'm, let's see here, looking away. Jorge, no, the little shortcuts in the sound is not only on your side. I'm not sure what that is, but yes, I can hear that too. So
we are working on it, Barry. We're trying to figure out where that's coming from. So
okay.
We're aware of it. Thank you for letting us know. And yeah, it's fairly annoying. We're going to do our best to kind of get it resolved.
All right. Yep. Okay. Our IT experts are working on it. But thank you for letting us know. Okay. So now we get. I think there's a little lag here between the time I ask the question that I answer or you're answering, because now I'm seeing answers coming in. So let me read some of these. I think you guys can read them too, though. Let's see. So the problems that you're having are, James says, fear of loss is the most difficult problem to resolve. That's a biggie. Fear of loss, absolutely 100%. I can totally relate to that. Thomas, getting in before the crowd. Ooh, that's a good one too. Yes. You know, that's a really good one because there's an old saying that amateurs always get in, professionals always get in before amateurs, and that's true. And there's an interesting psychological dynamic behind that, which seems to be very counterintuitive. And I'll just share I'll share it with you real quick. It's 7 a.m. here in California. You know, it's early. In most things in life, it seems like you should wait for more confirmation, a lot of evidence in order to take action, right? But in trading, it's kind of the opposite. That's why it's counterintuitive. By the time everything is known, by the time everything is obvious in trading, then it's too late because everybody knows it and most everybody loses money. And that's when everybody who is losing money jumps on board. So that is a challenge. And in fact, it's similar to the old saying, buy the rumor, sell the news. That's true in technical analysis as well, not just regular news. So anyway, I like that one. Let's see, Gate, okay. Gordy, entry and exit points. Brian, we're to enter a put credit spread. Okay. Let's see, Srinivasa. Hopefully I'm pronouncing your name correctly. If not, I apologize. When to enter a trade. Arnie, I'm a newbie and have difficulties to know when to sell. David, entering a trade too late. Alan, staying in losing positions too long. Wow, we got both ends. We got people entering too late and some other people getting out too soon. You guys got a lot of problems. I'm just teasing. Carl, how to minimize losses and maximize profits. Roy, getting in a trade and getting stopped out just before the market turns back in my direction. Oh my gosh. Finding a strategy that works for me. One problem is after buying a stock, it goes nowhere and then it falls. That is a problem. Ramanada, trailing stop while in profit. And also avoid taking profit early and stay in profitable trades with trailing stop loss. Okay. Whoo-wee. All right. Well, I'll address as much of that as I can, and I will be able to address some of those things today. So let's get going here with the rest of it. So By the way, you're not alone. One of the things I want to say about this, please do not feel bad about your answers. Of course, there's really no wrong answers. If these are your problems, these are your problems. And I've had all these problems too. In fact, I think they're very, very common to all traders. So don't feel ashamed or don't feel like you're the only one. I actually did a survey a couple years back asking these very same questions to well over 10,000 traders. And here are the most common responses. And this is a little bit of a learning moment for you. So the most common responses, and I put them kind of group them together. Enter the market, then get stepped out, then the market goes in your original direction. Several of you mentioned something to that effect. Getting out of big moves too soon, and so not making a huge profits. Again, quite a few of you mentioned that one. Getting stopped out too often. Quite a few of you mentioned that. Not knowing the best place to exit the market. A lot of you mentioned that one. Trading a trend that doesn't follow through. You get in, goes nowhere, and then reverses. So guess what? What I wanted to share with you here experientially is that, first of all, I want to encourage you that you're not a uniquely bad trader. There's nothing wrong with you. These are common problems that everyone, including myself, has gone through. So the good news is there's a solution. Those of us who are successful, we've come out the other end. And that's where I'm here, or that's why I'm here to help you today. So the way that I have learned to do this is, frankly, there's no one solution. It's putting together a number of things. And this is why I call my methodology, it's measuring the energies in the market. I call it the 5 energy methodology. And it's not any one thing, but it's putting together all 5 of these things. So here are these energies. And when I refer to energy, I'm talking about the energy of money. Money flowing in, money flowing out of the auction place, we call the markets. So here are the 5 energies of money flow that I use. Number 1, trend, and I start there. Number 2, momentum, and that's the second one. These are in order, by the way. Then we go to number 3, which is cycles, and we're going to focus a lot on this one today, timing your entries. So this is especially going to be good for those of you who want to learn how to time when to get in and not get stepped out so much. Number 4, support resistance, and number 5 is what I call the fractal energy, or using the next higher time frame to confirm the shorter time frame. So in trading, again, there's no one answer. No one indicator, for example, makes you money. No one candlestick pattern. No one moving averages. So indicators, well, we call them indicators for a reason. They indicate. If they made us money directly, we call them money makers. So the way I trade is very simple. I look at those 5 energies. I've got literally a checklist. 1, 2, 3, 4, 5. That's all it is. Go right down the checklist. Takes a half a sheet of paper. And at any one point in the market, if whatever market I'm trading, and I trade stocks, forex, futures, commodities, options, trade it all, I ask myself this one question. How many of those 5 energies are all aligned, being bullish or bearish concurrently? Give each, set up a score of 1 to 5. Higher the score, the higher the probability of the trade. It's kind of like taking each trade to court. I need a preponderance of the evidence. So it's like having 5 independent witnesses testify. And when all 5 who don't know each other and don't know the accused, if they all agree, they all say the same thing, pretty good chance the dude did it. And so same thing here. Now, we never have 100%, but when we take 5 uncorrelated variables of money flow, supply, demand, imbalance, and all 5 of them are saying buy, there's a weight toward demand and not toward supply, then we have a statistical probability, which is the best we could do and all we really need to do. So here's a chart. Here's what it looks like. Let me get my little laser beam pointer here. So as you can see, we've got Starbucks coming down, and I use my 50 period simple moving average. Simple. By the way, I have not found that I needed to use anything real complicated. I've been through it all. I've used all kinds of very cool, complicated things, ingenious things, and I've come back to simplicity. So literally just counting to 5 all day long. I mean, everything I needed to learn about trading, I learned in kindergarten. Count to 5. Maybe a little more than that, because I had to learn what to count to 5 too. So 50 MAs angling up. Okay, that's trend is up. Is that enough? No way. But that's my directional bias. Then I go to number 2, momentum. That's over here, top dog momentum. Is this angling up? Yes, it is. Going up. Okay, so I'm looking to buy, by the way. So the trend means direction. Momentum means strength. So you can have a market moving up on weakness. You do not want to buy that market. If it's not going up on strength, that means that probably the professional traders are not involved because there's not a lot of money, demand, weight of money behind that order, behind those orders. It's probably just retailers buying. It might be very short-lived. So momentum tells us, okay, is there a lot of buying coming into this? And not just people, not the number of people, but the size of the orders. So, boom, coming on up. So now we've got what I call a strong trend. Those are the kind I want to buy. Now, 3, how do I know the best time to get in? So that gives me the general concept that I've got a strong trend up that I want to buy, but I don't want to get in too early or I could get stopped out. Don't want to get in too late, or as a lot of you said, could be chasing the market. So this little puppy doggy right here, this top dog puppy, this is a modified stochastic indicator. And this is what tells me to get in. It's this little pattern right here. Look at the black line is K, the blue line is D. When I see these little edges right here, especially this one where it goes down, up, down, and up, and see how that makes a higher low there? I call that a mini divergence. It's not a divergence between swing highs, like a lot of people teach divergences. Those might be fine too, but this is different. This is my surgical tool in my trading. This shows me where I want to get into the penny, to the pip, to the tick, and in this case, it's 1 penny above the high of that bar right there after this little pattern on K is created. And that's literally a momentum shift. We've got lower lows on prices just within these few bars and a higher low on K. Now, I want to be very careful here. My first job as your trading coach this morning is to do no harm. Like the Hippocratic Oath of trading. First, do no harm to your trading account. So I got to tell you, again, as good as this is only one part of the 5 parts. And each part in the system has its function or its purpose within the overall system. This is just to nail with precision cycle highs and lows. But I wouldn't, if I had this pattern, well, for example, we do, look at this. We've got the same kind of pattern up here, right, that little mini divergence. Would I go short here? No. Why not? Because I'm trading against the trend if I do that. So that's why that's not step 1. That's not step 2. That's step 3 in the process, and we don't trade it alone. We only trade that in the direction of the trend. Okay, so we got support of the 50 MA. That's level 4. That's step 4, support resistance. And then number 5, we go over to our next higher time frame. So this is a 10-minute on the left, a 30-minute on the right. And what do I need over here? Well, momentum and the cycle on the longer term time frame are moving up as well. And that's what I want. Now, even though number 5 comes last, it's actually most important. Now, in a trading system, you have what's called filters. And filters are designed to keep you out of otherwise good-looking trades. So everything looks great here in the 10-minute. But as you know, you can trade different time frames. And different time frames will have different signals at different times. So, for example, look, our 50 MA, the red line here is angling down right at that point, kind of flattening out on the 30-minute chart. Well, it's going up on the 10-minute chart. So I get asked this a lot. Well, what's the trend? Is it up based on the 10-minute chart, or is it down based on the 30-minute chart, or flat? And the answer is it's all relative. Each chart has its own relative energies to that time frame. So this is where, you know, the Einstein of day trading comes in. Everything's relative. Everything's relative to that time frame. So we're not worried about trend on the longer term time frame because that's a lagging indicator that's very, 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 very slow. And so it eventually turns up, but I don't want to wait till it turns up. I want to get in earlier. I want to get early with the pros. So momentum is a faster indicator. It responds faster than trend does. And so it's already going up. And we got our cycle low. This is called concurrent cycle lows. I got a cycle low on the short-term chart, cycle low on the higher term chart. momentum up on both, good to go. But it's mainly momentum that I'm interested in on the longer time frame. Okay, so that's a little, that's an overview. So my favorite trading technique is having this cycle indicator that I talked about, which is a modified stochastic. So let me show you how I set it up so you guys can set it up on your charts too. All right, so here it is. You just pull up the good old-fashioned stochastic oscillator. By the way, I do want to be careful here to let you know that there are many variations of the stochastic. There's Stoch RSI, there's double stochastic, there's fast stochastic, slow stochastic, all kinds of stochastics, stochastic momentum indicator or index. Those are not the ones we want to use. So if you're using Metastock, you want to use the stochastic oscillator. If you're using something else and you got several choices, then either use stochastic full, if you have that, F-U-L-L, or if you don't have that one, then use stochastic slow. But it's got to be one of those. If you use any of the other derivations of stochastic, it will not form the patterns that we look for to trigger us into entries with this surgical precision. So we're going to change the parameters. Even though we're using a standard indicator, we're using heterodox parameters. So you go in here and K, we're going to change to 5. Slowing of K, we're going to change to 2. And then percent D, see right here, D and K, yep. We're going to change that to 3. The moving average type is simple. And the rest, well, that's just personal preference, line thickness, colors, etc. All right. Also, I like to put in horizontal lines at these 3 levels, 20, 50, and 80. 20, 50, and 80. Right? There for a second. Let me look over here real quick. See, okay, to see if there's any questions. All right, so that is, yes, you have some horizontal lines there. Excellent. So, again, by itself, I have to emphasize this because, boy, I've done this presentation before. I've had people write to me. They say they've tried to trade just this indicator. And I said, you know, I told you, you can't just trade one indicator. But for some people, they try it anyway, and then they wonder why it doesn't work. Being very transparent and telling you right now. So we have to trade cycles in the direction of the trend, but also early in the trend. You know, you've heard the saying, the trend is your friend until the end. Well, that is a very, very specific statement. Unfortunately, it's presented in a very general manner, but the details are there if you really think about it. So what does that sentence mean? It means that the longer the trend continues, the less probable it is to continue. So that's the meaning of it. The trend is your friend until the end. It's based on a statistical model that, again, as professionals, we want to get in early to a new trend and not late. So these signals that we take on the stochastic indicator, these little mini divergences, we only take them early in the direction of a new trend. We only trade these cycle patterns that have momentum behind them, because momentum is a longer term. See, cycles are the smallest term signal. And then you go into momentum, and then you go into trend. And so when we put all these 3 together, then we can create a good risk-reward ratio, because our risk is based on the cycle, our reward is based on the trend. So we want to have the market pop out of these cycle lows with great strength. That's why you got to have momentum. And then again, last but definitely not least, I only trade when I've got the momentum on the longer term time frame in my direction. In fact, as I said before, that is a filter. Well, what that means is if I don't have that, I don't take the trade. That is like the presidential veto. That will veto out an otherwise perfect looking trade on a shorter term time frame. That's how critical it is. So in that way, I guess you could say it's the most important of the 5 energies. All right, and then we trade the second chance, or what I call mini divergence patterns. So these second chance patterns or mini divergence patterns indicate a small momentum shift at the top or bottom of a cycle. So as I said, I call it a mini divergence. I've actually have 5 other patterns. There's a total of 6 of these cycle low and cycle high patterns. But today We're just going to talk about the mini divergence. So let me show you what demonstrate actually some of the problems you guys said you had earlier and the solution that I've come up with. So what we want to avoid is having the market come down, make lower lows, lower highs, lower lows. And then here's our cycle oscillator, our stochastic oscillator. And we don't want to go short here. Because if we go short here, then we get stopped out if we put our stops up here, which would be typical. And then the market goes up here, and then we get stopped out in a higher time frame before the trend resumes. All right, so how would we know this is not the right place to enter? We could have gotten stopped out. So this is where these patterns come in, okay? So look, here we've got an uptrend now, and we've got a higher low on the stochastic, but we've got a little bit of a lower low there on price. See that? And it's just within a few bars, like 1, 2, 3, 4, 5 bars. Just that little boop, and then just a little lower low and up. But this is the key. This is, in fact, George Lane, who created the stochastic indicator, created it to measure momentum, but on short-term time. So literally, we're measuring it within about 5 bars. So I want to see this thing come down, momentum to shift, and then wait for this point. In fact, I would enter as soon as K angled back up right there. Literally 1 penny per tick above the high of that bar, depending on which market I'm trading. This is a stock, so it'd be 1 penny above the high of that bar. Where would my protective stop be? 1 penny below that low. That's how I keep my stop so tight, right? Less than the range of 1 whole bar, about 1.5 bar range. So that's my risk, and that's the beauty of these little momentum shift patterns, is that they're literally mathematically, because that's what indicators are, they're math formulas, and the data from that market relative to that time frame is going into that empty math function, being crunched by the math function, spits out a plot, and it says, okay, what's happened here is we've come down, whoops, now the strength to the downside has gone away, it's starting to move to the upside, and that gives us a real precision entry for that. So this is a better entry, and my risk when I do get stopped is very minimal. And now we switch over to trend for the reward, and well, off to the moon. All right, let's look at another example. So that's a trend trade. Now, we talked about getting into trend trades early. Well, the trend is your friend until the end. So what is it at the end? Well, it's your enemy. But you can turn an enemy into a friend. And how do you do that? You trade against it. So when we're looking for trend reversal trades, we look for them after long extended trends when the probability of that trend continuing has diminished. So now we're in an extended trend. Obviously, you can't see the whole left side of the screen here, but we can use these same little momentum shift patterns, these same little mini divergences, the same little second chance. By the way, the reason I call them second chance is because it's kind of like you got the first chance to go along here. We don't want that. This is the second chance with a higher low. So that's where that term came from. All right, so again, first rule is not to this. This is step 3. Step 1 is, where are we in the trend? Early or late? Late, looking for trend reversals. So now, comes down, lower low on price, higher low on K. Okay, and off to the races we go. That's how to trade cycles accurately. It can even work for contraction patterns. So even if you don't have if you're not early in a new trend or late in an old trend, and you're in a contraction pattern, and these are really cool because markets contract a lot. Right? A lot of people say markets only trend about 20% of the time. So what are you going to do the rest of the time? Well, markets expand and contract with volatility. If you've ever looked at Bollinger Bands, for example, they visually represent this very well. So we've got a market that's been moving sideways. The red line, the 50 EMA here is moving sideways. 15 EMA, that's my black line. That's all just kind of hovering around it. That's indicative of a market that has not had any significant price difference over the last 15 or 50 bars. So that is by definition consolidation. We wait, but the cycles will continue to go. Cycles will continue to make highs and lows. So we get a cycle high. Look, we got to move down lower high on K. See how kind of flattened out there, but it's making a lower high. Higher high on price. And talk about getting in early. Boom. And then, wow, the gap really helps us out a lot. And it still continues to go. So these are just incredible patterns. So the summary of high probability trading. We're waiting for the alignment of 5. And I'm going to add the word uncorrelated energies. That's the operative word, uncorrelated energies. You cannot just put any 5 indicators on the chart and think, oh, I got a nice 5 energy method here. Well, maybe you do, maybe you don't. Depends. Do you have 5 trend indicators on there? If you do, then it's not a good method because you're just, it's like going to court. We used the court example earlier, right? So it's like going to court and somebody stole a banana. You've got 5 people go up to testify and say, no, he didn't steal the banana. No, he didn't. No. All 5 say he did not steal the banana. But one of them is his brother. The other one's his best friend. One of them is his girlfriend. One's his uncle and the other one's his mommy. Okay, well, they all know the accused and they're all related to each other. So probably not going to be too convincing to the judge. So same thing in trading here, silly example, but the key is in the markets, there's only one thing that moves markets. There's only one thing. It's not all that complicated. It's supply demand. And there's reasons behind that supply demand, obviously. Sometimes there's reasons a lot of demand comes into the market. But I got to tell you, those reasons are not always logical. This is where a lot of really smart people have a hard time with trading because they're very logical people. That's a good thing. I like to think I'm logical too. Unfortunately, the markets are not always so logical. In fact, there's an old saying that says the market can remain irrational longer than you can remain solvent. So if you're expecting the market to be rational all the time, you're going to really have a hard time trading because people, we're dealing with mass psychology in trading. Not individual psychology. It's a different field, related but different and distinct field, mass psychology. Because we got masses of people all over the globe, different data feeds, different techniques they're using, different indicators they're using, different time frames they're using, all different time zones, right? The markets these days are just crazy. They're crazy great, but you got to understand that people are trading for all different reasons. And some people, like if there's a stock that's a very exciting stock, has a very exciting product, people get very emotional about it, they'll just buy and buy and buy and buy that thing beyond reason. Beyond reason. And there's great companies out there who are very solid companies financially and fiscally, but their stocks never go anywhere. Why? Because the traders, they're just not that interested. It doesn't excite them. So we all know, we've heard Alan Greenspan talk about irrational exuberance. And he was right. He wasn't wrong. There was irrational exuberance. Did that keep the market down? No, it went up and up and up anyway. So as traders, now as long-term investors, it's different, okay? But when you're trading and holding onto stocks for decades, that's a whole different scenario. I'm not addressing that. I'm talking about real short-term trading, day trading, short-term swing trading. The emotion of the market is very important. But again, all you really got to do is follow the imbalance of supply demand. Whatever is making that happen at that moment, it doesn't even matter why. You'll find out later and say, oh, that's interesting. But at the moment, all that matters is, are there more people buying than selling, more people selling than buying, or is it balanced? And so that's all we're measuring because that's all we have to do. Just follow the money, honey. All right. So I wait for the alignment of the 5 energies to put the odds on your side. And here's my whole methodology in one sentence. I'd highly encourage you to write that down. Again, my methodology is very simple. So you can just write this down. Trend, that is strong momentum. So trend, early in a new trend, let's make that distinction again. That is strong. That's the energy of momentum. At the right time, it's your cycle indicator or the modified stochastic indicator with support at your back. So that's support resistance levels, by the way. That's number 4. We use support resistance levels. Confirmed by the bigger scale, and that's momentum on the longer time frame. And that's my whole methodology in one sentence. So let's talk just quickly more about this early in the new trend that is strong. Now, momentum. I'd like to see a little bit more about momentum. So what really is momentum? Momentum, I said, is the strength of the market. And it's true, a little simplification though. So think of a bullet train. You're standing by the side of a train track, and a bullet train comes screaming by you at 100 miles an hour, and it weighs 700 tons. And you can feel the power of that bullet train as you're standing by that train tracks. And that bullet train literally has momentum. Momentum is velocity times mass. So that bullet train, 100 miles an hour, a lot of velocity. 700 tons, a lot of mass. Strong. Now, think about that for a second. If I were to hand you the emergency brake to that bullet train, and you press that emergency brake, you know the future. Isn't that crazy? But you do. You know the future. And you don't have to have a crystal ball. You don't have to have an astrology chart. You don't even have to be one minute homeopathic amount of psychic. You just know kindergarten physics. And you probably know more than that. I know I got a C in physics. So if I know this, you guys definitely could get this. So velocity times mass. The fact that that bullet train's going 100 miles an hour with all that weight behind it, you just know. Press that emergency brake, the train is going to continue its trend, its direction, after you apply the after you apply the brake. It's not going to stop on a dime. Not going to stop on a dime. There's just no way. If it did, it'd be a big problem. So it will. The trend will continue. Now, how does that apply to trading? That's an analogy. So in trading, there are correlations. The velocity in trading is the speed of the orders going through the exchange, whether they're coming from humans or computers or algos or quants or whatever. Are they coming through? And you've seen this, especially if you're a day trader, you've seen velocity in trading. Either the orders are just coming through real slow and just kind of plodding, it's kind of boring, and they're just coming through buy. And then other times, especially recently, it goes by so fast, it's like, it's hard to even catch a trade. Buy, right? It's going fast and furious. So that's velocity in the market, the speed of the orders going through. Now, the other aspect of it, the mass of momentum in the market, that equates to volume, the weight of those orders. So think about that. You could have a lot of orders, but they could be retail orders, and therefore low volume orders. Now, most retailers lose money. Most professionals make money. That's the difference between the two people. So, but who has bigger trading accounts? Retailers or professionals? Professionals, especially the institutions. And so that's mass. When you get those big orders coming in, block trades, as we call them, then you put those two things together, we got fast orders coming through fast and furious with big professional orders, block trades. That is momentum in the market, and that's where you tend to get the stair-step pattern in trades, in trade patterns where the market makes higher highs, higher lows, higher highs, higher lows. It's going up, a little bit of profit taking. Goes up again, a little profit taking. And it's accumulation because the people are bringing in the big money. They can't bring it all in at once, otherwise the market would just shoot up vertically, and they'd be getting filled higher and higher and higher. They don't want that. They want to get filled at an average of lower prices. And this is where your VWAP comes in and so forth, stuff that is BMI talk today. So that's what causes that. So we wait. We wait. A lot of people complain, well, can't compete with the pros. The institutions, the banks, they have all these big advantages over us, the hedge funds. Yeah, they got some great advantages. Now you got a choice. Now, you can either complain about it. That's one attitude. Is that going to serve you? No. So what's a better attitude that could serve you? It's one where you would say, well, okay, if I can't beat them, maybe I'll join them. So this is what we're doing. We're using the map of the market, the chart, and these indications, which includes price patterns, bars, moving averages, couple indicators, volume. We put all that together as evidence to see, all right, when are the whales coming in? And then I call this just hooking my wagon to the whales. I take my money, put it in my little red wagon. I tie a rope around the handle of the wagon, tie the other end of the rope around the tails of the whales. And it just says, go for it, guys. Just take my money with you. It works. It works. And by the way, it's robust and adaptable. Because all we're doing at the core, at the bottom of all this, the logic behind it is just pure supply demand. It is robust and adaptable for any market. I personally trade stocks, commodities, options, currencies, and futures. They're all auction places, and they all operate on bid and ask, supply and demand. Works for any time frame. Again, it's just relative to that time frame. So basically, there is no such thing as the trend. Again, people will ask me, well, I got one trend on the daily chart, I got another trend on the 60-minute chart, but I got no trend on the 5-minute chart. Which one's right? They're all right relative to that time frame. So you just have to start with saying, okay, I'm going to orientate myself, my trading, orient my trading toward this time frame. And that's the scale I'm trading. Someone else who's trading a different scale of time in the market, they're going to get different signals, and that's fine. All right, so by the way, I do investing, swing trading, and day trading, and I use the same methodology. All my charts look the same. I set up a template of my chart, and then I just can reproduce that. So my eyes, this is very important, your eyes get used to seeing the same patterns over and over and over and over, and after a while, your mind gets pattern recognition built into it through repetition. If you're changing your charts around all the time, that's going to just delay your profits and your success. So it's simple, it's objective. Like I said, everything I learned about trading, I learned in kindergarten, well, at least how to count to 5 part. It's 5 energies. So let me show you a couple of things here real quick. This is so awesome, I just am beside myself with excitement. So for Metastock specifically, look at what we got. This is so cool. So with Metastock, now I've shown you some things here today that you can use on whatever trading platform you have. Now let's take it to warp speed now. Let's take it way to the next level. I've worked with the people at Metastock, and they're programmers, and they're whizzes. I'm not a programmer, so I'm always amazed when people can do stuff like this. So they have actually created custom programming for the Top Dog trading system, and look at this. It counts your waves for you. 3, 4, 5, 6, 7. Now you can say, wait, 9. But Barry, Elliott wave doesn't have 9 waves. I know, this is not Elliott wave. Okay, these are not Elliott waves. These are, well, Barry waves, for lack of a better term. So I have a different way of counting waves than Elliott wave. Elliott wave is great. I have nothing against it whatsoever. Got a good friend who trades it and does very, very well. But I just created my own trading methodology here that I like. It's very objective. I'm not forcing any certain number of waves onto trends. And this helps me, like if I'm in a 9 wave, I know that's an extended trend. So before people ask, well, how do you know if you're an extended trend or not? Great question. And that's what my proprietary way of counting waves does. Because we don't impose just 5 waves on a structure and a trend, we have a way that lets us know, oh, if you're in wave 9, you're in an extended trend. Okay, and then we've got our volume down here, of course. Look, they created this great thing just right here. Trend is up, here it's choppy, and it's very clear. Okay, there's the modified stochastic oscillator. It's already set up for you. And what's really awesome is, look at this. You get the commentary over here. So as we go over here, this says wave 9 reversal short. And that comes right at that dot. See that blue dot right there? That's where that's when this popped up. That's when this popped up. So wave 9 reversal short, the basic setup. We have a wave 9 high, 50 manually up, %D, blah, blah, you can read it all. So this is the basic setup. It just tells you what it is. And then commentary, and then confirmation, the next higher time frame. Entry tells you exactly where to enter, where to place your initial stop, and your profit targets. I mean, wow. I wish I had this. Well, I do now, but this is just incredible. I never had this until Metastock created this for me. So, and it goes even deeper than that. And you can scan for these opportunities with Metastock as well. You can scan for them. And so it'll just bring the trades to you. You don't have to sit there and stare at your monitor all day and just sit there and bored or go through chart after chart after chart after chart. No, just push the button on Metastock, goes through all the stocks and says, here's all the setups for you right now. So Jeff's going to talk a little bit more about that. Before I turn it over to him, and I think I'm right on time here, I want to give you all a freebie for being here and spending this time with me. So if you need to contact me or if you just want to contact me, feel free to send me an email over at barry@topdogtrading.com. That's my personal direct email address, and I'd be happy to answer any questions that you might have. And I'm also going to give everybody today one of my favorite trade strategies called the rubber band trade. This is a trade I still trade to this day. It's not an old has-been that I'm giving away for free. It is incredible. Again, it's a mathematical model called reversion to the mean model. Super high win-loss ratio, which is why I give it to new traders or people new to Top Dog Trading to prove to you, to demonstrate to you that, yep, you can make money with Top Dog Trading. It gives all the rules, where to enter, where to exit. It's part of a little mini course that I'm giving you, how pros trade different than amateurs. We talked about a few of those distinctions today. This course goes into the details of how pros and amateurs trade differently. And then also I've got a recording that goes even deeper into that modified stochastic that I call the cycle indicator. And you can have access to that recording. Just go to topdogtrading.com/ guess what? Free. And you can get everything there all just at that one link right there. And that's it. Hope you found this valuable. Jeff, I'll invite you to come back on. You directed me, my friend. Do you want me to answer some questions? Or I know you also have a few things to share about the plugin. You're the director here today, so I acquiesce to your leadership.
All right. Can you hear me okay?
Absolutely.
Let's do some questions. Okay. So Brian Johnson in GoToWebinar wanted to know if you use Bollinger Bands or Keltner Bands at all.
I do. Yeah, they're both good. They're both great. I personally prefer to use Bollinger Bands, but they can both be used very effectively.
Joe wants to know what time frames do you particularly use in your charts?
That's a big question. So it depends on the market I'm trading. I'll use different time frames for different markets because of the different average daily volume that they have. So that's one aspect. Another aspect you have to think about if you're day trading, which it sounds like you might be, then you have to also look at, well, how fast can you analyze a setup and really make a confirmation on it, feel comfortable with it, and execute a trade. That's a personal issue, but I've got an article on that rather than going into great detail. I've got an article on my blog that goes into the 3 considerations on how to choose the best time interval for your charts. So you or anybody else here who would like that article, just send me an email at barry@topdogtrading.com, ask for the blog article on how to choose the best time intervals for your charts, and I'll send you a link to it.
And then I think we've got one more question that I'm going to have you kind of talk to. What was the metastock wave that Barry is referring to? And I know from helping you code it and helping William code it, because William did our programmer did most of the work for it. That it's a very simplified kind of wave counting that looks at at a moving average. But do you have a special name for it?
I do.
What is it?
It is the Top Dog Trading Wave Indicator.
Oh, okay. All right, very good. Now we know.
It's I mean, it's not that complicated, but it's more than I can share right now. I'm happy to share it, but it's just more involved than we have time for right now. So, but it ties in with, yeah, moving average, ties in with the 50-period simple moving average. It ties in with the cycle indicator that we talked about, but then it also ties in with price structure of higher highs and higher lows based on some candlestick formations. So it involves all of that.
All right. Our friend up in Canada, Scott, says, I always like listening to Barry Burns and learning new things. So thanks for coming today.
You. That's nice. Thank you.
We appreciate your time. I am going to spend just a few minutes talking about like the add-on and what you can get. Barry, always great to have you. Thanks for coming in.
Thank you, Jeff.
All right. Let me go ahead and kind of take over the screen here. And I'll go ahead and show my screen. We'll go ahead and kind of get right back over here. And I'm just going to go ahead and do this. And there we go. All right. Very good. So what I've got here is, what I've got here is a chart of a company you may have heard of, Tesla. This came up, as you can tell, it came up in an exploration today. So that's why we're looking at it. Wanted to kind of show you kind of everything that was kind of involved in the add-on, because there's quite a bit that's in here that's kind of goes into the calculations and is automatically considered for you. So you'll notice here it's got automatic support and resistance levels. I believe these are Fibonacci wave counts. Yep, automatic Fibonacci levels. He's got some moving average that he likes to look at. And as well, it's going to automatically put in what he calls swing lines on there. Based on the wave counting method that he uses, you're going to notice that it's either going to be in an uptrend, counting up waves, or it's going to be in a downtrend counting down waves. So right here, if we're looking, we can see this was your first wave in an uptrend. This is your second wave down, 3, 4, and then you have your little failure waves as well. Depending on kind of like what kind of a pattern you're in, if you're early in a trend, like in a wave 2 or a wave 4, you're probably going to get trend continuation waves. Whereas if you're kind of late in the cycle, like in a 7 or plus wave count, you're going to kind of get more short signals, just based on the fact that you're looking for kind of a reversion to the mean. The move might be a little bit slower, and we're expecting more downside than upside, and this is automatically done for you. The thing about the expert advisor is every time there's a short opportunity, you saw there was one right here, a wave 7 reversal. This was a short opportunity, and then you'll see there's a couple shorts that are just kind of lining up within the last couple of days. And if I hover over them, it's going to tell me this is a triangle short opportunity, this is a triangle short opportunity, and this is a first cycle high after DAD turns down. And these go into good detail in terms of what the thing is, but basically we had a little bit of a sell signal right here before it kind of sold into wave 8, and now we're in the wave B. We're actually getting some short signals and expecting some downside. Barry did show this, but I'm going to show it as well because I have a little bit of time to show it to you, and it's one of my favorite things about Metastock. You know, we're going to talk all day about how Metastock has been rated the #1 software for 25 years in a row, but there's certain things in here that I just couldn't live without. And one of those things is the expert commentary. So I'm going to go ahead and click on View right here and go to Expert Commentary. And that's going to open up a little bit of a window here for me. And you'll notice right here, there's a little bit of a triangle. It's underneath that sell signal. So you can see the underline of a blue kind of triangle that shapes down. Okay, since this is a triangle, we're basically going to give some advice in terms of what we would recommend that you do with it. You're going to look for an initial entry at about 435.31. Okay, so if this goes down, I believe the close here was 442. So you're going to try and get in at 435 or lower. You'll put an initial stop. So we're going to put in a stop loss as soon as we get into a trade at 461.94. If you're looking at a Forex instrument, he actually gives you the calculation that you'll want to do for your entry price and your stop. Okay, he's going to tell you what your targets are going to look like. And one of the things that we did with this, Barry wanted to provide so much information as part of this expert advisor that we actually couldn't, we actually kind of put a little bit of it in HTML files just so we could fit all the information Barry wanted to put in here. So if I put in, if I actually click on this, it's going to open up. It actually opened up over here, but it'll open up a internet page for me. This is actually stored locally on my machine, but it's going to tell you setup. the confirmation, what we're looking at, how we're calculating that entry, so your initial stop, how we're looking at targets, and then other things you could look at to increase your probability of success. So it does a really, really good job of that. We'll talk a little bit more about it as we kind of get into the day, but yeah, as part of Metastock, you're going to be able to go in here and you'll be able to scan for signals as well. So you'll be able to go in and say, well, okay, I personally am an optionable trader. I want to find any stocks that have an option that have either like a wave entry or a wave loss. And I can actually go in, and that's something that Metastock will just sift through all the garbage and allow me to focus on the opportunities that actually exist. And that's another really, really cool part of Metastock, another thing that I think is just incredibly helpful. And so we'll talk a little bit more about that as we go on into the day. What I really want to kind of show you is kind of how Barry's stuff fits so well into Metastock. And you're going to automatically have everything that you need to kind of look at it. So let me go back kind of to the picture of Barry from high school, and we'll go a little bit further. He does use his trend, momentum, cycle, support, and resistance, and scale. All of those are automatically incorporated into the Top Dog Trading Toolkit. And basically, the different types of patterns that it's going to look for is new trends, momentum trends, stuff that's a little bit longer term trends, stocks that are trades that'll be reversion to the mean. So if it's extended pretty far and it's given us a setup, we're going to be looking to kind of go back to the kind of the middle, and then triangle pattern trades. So there's quite a number of patterns that are in here. Again, the use of it is very, very simple, though. You attach the expert advisor. It's going to tell you how to take advantage of that trade, and you can run the scans, and it'll actually kind of give you the advice on terms of how to do those. So with Barry Burns' Top Dog Trading Toolkit, it is an add-on that we developed to work with Metastock. We do offer it at $4.99. So if you go up and order it as part in our catalog, you can pay $4.99 for it. We are doing a summit special today where you can pay $399. The other thing that we do with that I think is just the coolest thing in the world is we give you a money back guarantee on this. So you can order it. If you don't have Metastock already, well, we're going to be talking about why you should maybe have Metastock all day long today. I would remind you it's the best software in its program price category for 27 or something years in a row. So but it'll help you make better trades. If you don't have it already and you want to try out Barry's toolkit, we'll include for free a version of our Metastock real-time program, as well as the data that we get from Refinitiv, who used to be Thomson Reuters, who used to be Reuters, one of the best providers of data out there. So to take advantage of this, what I would recommend you do is give us a call. You can call us at 800-882-3040, or you can visit us online at www.metastock.com/saleschat. So, and it is going to be part of a big bundle package. We have a lot of experts that are really good today that are coming in. And what we're going to do is we've put together a package of all of their systems, all of their methodologies. And if you would have come to our website and order everything separately, you'd pay about $5,000 for everything that we include in this package. But just to be real quick about what we're going to include in it, we're going to include the real-time version of Metastock. We're going to include that Zenith data, basically 3 months of it. We're going to include Ed Downs' Fulgent AI, which is a really cool artificial intelligence program that we're going to be showing today. We're going to include Trade Trend, which is Jeff Tompkins is going to talk about in just a few minutes here. Rick Sadler's Patterns for Profit, the Barry Burns Top Dog Toolkit. We're going to include a premium subscription to a website called learnmetastock.com. And we're going to include 2 years of Unleash the Power of Metastock, 2 years of Task Magazine, my mistake, a free home study course called Unleash the Power of Metastock. And we're even going to have one of our service technicians give you a phone call, help you get everything set up with like what we call our White Glove installation service. So again, everything separated would be like $4,805. As part of this package today, some of the best add-ons that we offer with our award-winning software, you can get it for $19.85. And a big chunk of that is covered on our money-back guarantee as well. So to get more details on it, give us a call, 882-3040. You can chat live with us at metastock.com/saleschat. And you can also order this online at metastock.com/summitdeal. So get in touch with us in the way that you prefer, 800-882-3040, metastock.com/saleschat, or metastock.com/summitdeal. Any of those will actually kind of help you get that set up. So with that being said, I do want to say thank you to Stocks and Commodities again for sponsoring our summit today, first sponsoring it for the last 7 years. If you didn't, when you registered, or you want to take advantage of some of the freebies that all of the presenters offered, or maybe you're on YouTube and you didn't actually register for the class, if you come to metastock.com/traders-summit, traders-summit, you can go ahead and sign up. There's all kinds of really cool bonus offers that are put together by all of our presenters today. And while you're there, you can also sign up to get a free issue of Stocks and Commodities magazine delivered to you. So there you go. Thank you for the sponsorship, Stocks and Commodities. So our next guest today is Jeff Tompkins. He has one of the things I'll say is he has a very, very good first name. The second thing I'll say about him is he does a really, really good job with presenting. I particularly like what he has to say about the MACD. I particularly like of the people that we work with, his tone, his tenor. When he says something, I find him very, very understandable as a coach. We've been working with Jeff for 2 or 3 years now, and he's just a pleasure to work with. When he promises something, he always delivers it, and he's a friend of Metastock. I guess that's what I'll say here. So, Jeff, let's go ahead and bring you on here. How are you doing today?
Hey, good morning, Jeff. I'm doing well. How about you?
I'm doing great. Congratulations on being a friend of Metastock. Let me go ahead and turn over the presentation for you. I do mean it, though. You're such a good business partner.
Likewise. You're a friend of mine. So
we love the methods you've put into the program. You've done a great job overall. So I can see your screen, and I've done a good enough job butching your introduction. So I'm going to get out of the way.
Yeah, let me make sure. I'm going to advance to the disclaimer slide here real quick, just to make sure it's advancing. Okay, does that look okay?
I can. Yep, absolutely.
Okay, great. Once in a while that has a hiccup. So anyway, but yeah, thanks for the kind introduction. As Jeff mentioned, I've been working with Metastock for several years now, and just love everybody over there. It's a great team. I can speak for our current customers who. We have many of which use the Metastock platform, and all the feedback is resoundingly positive, and just want to kind of reciprocate those kind words that Jeff gave me on the introduction. So anyway, I don't want to waste a whole lot of time on intros, because I do have a lot of really good stuff to cover. So I'll go ahead and jump in. I'm going to be revealing something new, actually, that I haven't done on a Metastock event before, and it's a really cool setup that you guys are going to love, that can be applied to any market in any time frame. And I call it the Slingshot setup. And what it does is it helps us identify areas of opportunity to buy low and sell high within markets, especially volatile markets. And this is really relevant to our current market environment, of course, because implied volatility has, the VIX has remained quite high since we saw the crash in February and March from COVID-19. And of course, the upcoming election. So I think it's likely to stay high through the rest of the year, at the very least. So this is really relevant and timely information for you guys. So before we get into my Slingshot setup, I'll read our quick disclaimer. Trading securities and options does involve risk. And of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. Of course, we do need a broker to trade securities and must meet suitability requirements. We will be going over some trade examples and results today. We don't guarantee that anyone will mirror the performance numbers that we share. And of course, due to the time critical nature of trading, brokerage fees, etc., there is no guarantee that anyone can mirror an exact performance of any alert service or signal software out there. But we do show performance numbers that are based on trades that could be entered based on our signals. All right, so we're going to start out by looking at some familiar faces, probably familiar to a lot of you. and you probably recognize these as famous traders and investors. And there's a lot of things these guys have in common, but there's one thing in particular you might not guess that all 5 of these guys have in common. And that's that they've all actually bought high and sold low. So they've all made mistakes. And although they're all very successful in their investing and trading careers, some of them are big hedge fund owners, Warren Buffett, of course, Berkshire Hathaway. These guys are obviously very successful, but they've all made big mistakes. Okay, they've all bought high and sold low at some point. They've made bad investment or trading decisions. So why is that? It's simply because they're human. And this is going to be a core focus of our time together today on the session, because it's really at the core of why the markets are so difficult to trade. And that is that really much of it can be boiled down to trading psychology. And the decisions that we use to make moves in the market, if we're going to buy or sell a security, are often centered around psychology. Even if we have a system in place, it's nearly impossible for psychology not to come into play. And we're going to talk about why that is and how we can actually use it to our advantage instead of have it being more of a detriment to our results. And so what you see on your screen here is basically a trading psychology curve. And it's a common roller coaster of emotions that we go through as traders and investors. So on the left side of the curve, you see that when we're entering a trade, we often start out optimistic, enthusiastic. We even can become exuberant and euphoric. Of course, we never would invest or enter a trade if we weren't optimistic or had some degree of confidence that this trade was going to work out in our favor, right? And so unfortunately, often when we get into a trade or into a position, we are getting into the market when there's actually a high level of financial risk. So we're being greedy when we really should be fearful. Okay, and then anytime there's any adverse move in the position, in the trade, or in the overall markets, that can quickly turn into anxiety, denial, fear, despair, panic. And then we end up selling when it's really the best time to be investing. And this is really a vicious cycle that we all face. And I've certainly, I'm just as vulnerable as anybody else because I'm a human as well. But what we're going to do is address some of these issues. And we're going to talk about how we can actually turn this around to our advantage. So basically, in order to understand this concept, we need to know that anytime we enter a directional trade, of course, our goal is to buy low and sell high, right? We're obviously getting into a trade, as I mentioned, because we want to make money. Unfortunately, what that does is it goes against our human instinct. And even if we have some set of rules or instructions telling us what to do, our emotions can very easily get in the way of those. And so instead, when a security is going down, we often sell it. And when it's already gone up, we often buy it. And we're going to look at this concept on a few charts together. And you're really going to be blown away by what happens if we kind of turn the tables on the psychology curve and take a contrarian approach, and the difference that can make in your results. Because often what happens with the majority of traders and investors is they panic when price is falling because, of course, they're afraid of losing money, right? None of us want to lose money. And then we buy when it's rising because we're afraid of missing out. It's that whole FOMO mentality, fear of missing out after a security's already gone up in price. And then to compound these problems, we're wired to repeatedly make this same mistake. So we buy high and sell low because that's what our emotions tell us to do. It's why famous traders and investors like Warren Buffett or Carl Icahn or some of the other familiar faces we saw earlier have all made these mistakes because they're all vulnerable to these human emotions. And then, of course, without a solid trading plan, we're vulnerable to make these same mistakes over and over again. In addition, if you're lacking a strategy that can identify momentum shifts, meaning you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors. And we're going to offer you a tool today that will help overcome this component of the psychology curve. So what we're going to do ultimately, and what you're going to get out of our session today, along with my proprietary Slingshot setup, is which by the way, very closely, and it ties into this whole psychology curve and helps us overcome it kind of by default, is we're going to turn the tables and be fearful when others are greedy. So when there's a high level of financial risk and other people are overly exuberant, enthusiastic, euphoric, we're actually going to be looking to get out of the market and take profits. And then when other people are panicking, as they did in February and March, during the Corona crash, when the markets, lost over 30% of their value in a matter of a couple of weeks, we're going to be greedy when it's really the best time for investing. So it's that whole Warren Buffett adage: be fearful when others are greedy. And conversely, we're going to be greedy when others are fearful. And then we're going to offer a tool that helps you, basically prevents you from repeating that mistake over and over again that most, 90% plus of traders and investors make. All right, so here's what I'm going to give you guys today to make it easier. We're going to reveal the slingshot trade that's worked 100% of the time. So this setup doesn't present itself real frequently. It does across the broader markets. There are a lot of opportunities, but if you look at, for instance, a single index or a single security, it doesn't happen real often, but when it does, it plays out 100% of the time on the broader indexes. So I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Of course, you can never get in right at the bottom and right at the top. Anyone that tells you that, run the other direction. But this setup does allow us to get pretty close. And I'll show you how to apply the setup to any market at any time frame. And that's important because we have a diverse group of traders and investors on our session today. And I realized that we don't want to provide a one-size-fits-all. Everyone trades in different with different styles and in different markets and time frames. The good news is this works across all. And then I'll show you how to eliminate the majority of your losing trades using a really cool, simple trick that I use myself. And we'll go over some trade examples together. And then if you stick with me to the end, I'll show you guys how you can copy my success and get my trade signals I use to make a living in the markets. I do trade for a living. I am a professional trader. I also run a hedge fund, and I'll talk to you a little bit about some of those things together today. So I want to start out by imagining if we could buy low and sell high without any guesswork. That's really every trader's ultimate dream, is to be able to get in near the lows and out near the highs on a directional trade without having to guess when the market's bottoming and when it's topping out. And so there is one volatility study that has made this possible since the beginning of the markets. And we're going to take a look at that here in a minute. And it's a unique setup I call the Slingshot. So I've developed this proprietary setup around this volatility study. And what it has ultimately allowed me to do, as well as our other members at Altos Trading, is to buy low and sell high with 100% accuracy. So that doesn't mean that every time we enter a trade, we're gonna win the trade. What it does mean is when this Slingshot sets up, that we know with near perfect accuracy. And if you go back to all the market corrections, market sell-offs, black swan events, bear markets, etc., that this setup plays out 100% of the time the way I'm going to show you. And there's really not much. I've been trading for over 2 decades now, and there's not much out there that can provide that degree of accuracy. So when you see this, you're going to be really, really impressed and really happy that you have this information, especially in these types of volatile market conditions, because it also warns us of potential market sell-off. So we can use this to help us get in near bottoms after sell-offs, but we can also use it to warn us of potential market sell-offs, which is pretty cool. So once the bands are, basically these are volatility bands, that I'll show you here in a minute, once they can't be stretched any further, they have to bounce back. So it's one of those inevitabilities in market cycles or price action movement in the markets that has to take place in order for there to be movement in the market. So when I develop strategies, and I've developed a lot of strategies over my career, I look for inevitabilities, things that have to occur for there to be movement in the markets. Because if it's something that just can occur, then you're really coming down to chance, boiling it down to chance and guesswork. And I don't like to use guesswork in my trading. I like to use certainties, and there aren't a lot of those. So what I look for is inevitabilities that have to take place for price action to play out in the markets. And that's what this Slingshot effect accomplishes. And the rubber band effect that takes place within the slingshot actually makes it possible to accurately identify tops and bottoms in the markets, okay? So let's take a look at that in the context of the recent Corona crash. This is a daily chart of the S&P 500, okay? And you can see, and if we were all in a room together in person, I could probably, we'd probably see a lot of like cringing faces and heads going down and stuff, because this was a painful time in the market. If you guys were trading earlier this year, especially after this unprecedented 10-year bull run that we've been in, we're hitting all-time highs in the market on February 19th, and we top out, and then the market loses 30% plus of its value in just a matter of a couple weeks. Okay. This can be very painful if you're not prepared for it, but I'm going to show you how you can be prepared for this. So remember that psychology curve that we looked at earlier. This is when you want to be fearful, but think about it. The market's been going up. It's in this nice steady uptrend. We're hitting new all-time highs. What are 90% plus of traders and investors doing right now? They have the FOMO mentality, fear of missing out. They see all the profits that have been made in the markets, and they don't want to miss out on any additional profits. So they're getting in when the market's hitting new all-time highs. Now, as a hedge fund manager myself, and kind of having that inside contrarian knowledge, I can tell you that large hedge funds, institutions, the smart money is not buying at these market highs. This is when we want to take a contrarian approach and take profits and sell when most other traders are buying. And I'm going to show you how to do that here in just a minute. And then we want to take a contrarian approach on the other side of the trade. And we want to buy when most traders are selling. And I often get asked, Jeff, how did the market go up so much from these bottoms back in March and reach new all-time highs in the midst of a major pandemic, when the economy's been shut down multiple times? There's been all this significant economic damage done to the economy, and the markets are going up because the markets are not rational all the time, and they're driven by fear and greed. And the big players, the smart money, knows when to come in and buy when other people are panicking, and that's ultimately what drives the markets back up. Fundamentals, technicals can work for a little while, but over the longer term, it's fear and greed that really drives trends in the market. Okay, so it's psychology. So wouldn't it be cool if you could buy near the bottom of these sell-offs and then get out when most traders are starting to buy again? Okay, so hopefully you can kind of see the psychology behind these types of situations. And this is what the slingshot setup looks like. And we're going to get into this a little bit deeper in a minute and show you exactly how it works, the mechanics of it, and how to trade it. But ultimately, what I want you to understand is this is what we want to do, which is opposite of what most traders or investors are doing. Okay, so I'll reveal to you exactly how to trade this and how it works in just a minute. I'll give you a little bit of background on myself before we get into that. I am the chief investment strategist at Altos Trading. I have 20 years of experience trading the stock options and futures market. I started when I was 5 years old. I did receive my professional training at Morgan Stanley, and we currently have over 30,000 members across the globe, and I think over now 110 countries. And a lot of those members are very loyal Metastock customers, which we love because we love the Metastock platform. And so we're going to be talking about that on our session today as well. I mentioned I'm also a hedge fund manager at Altos Capital, so I do manage money professionally for my clients. I won't be talking really any more about that today. We aren't necessarily accepting clients into the hedge fund, but I will show you some tools that I do use in my hedge fund that you can use yourself, which is pretty cool. And I also am the founder and creator of the Trade Trend Signal software, which we'll be discussing today. And I developed that in partnership with Metastock. All right, so by the end of our session, you're going to discover one trade setup that's produced massive returns going back to the beginning of the stock market. And I always challenge everybody who learns this setup after our session today, go back on your charts and look at all of the market sell-offs, black swan events, bear markets, etc., that this slingshot setup presents itself, and you can actually verify that it's worked 100% of the time. So pull up one of the indices, the SPX, the Nasdaq, the Russell 2000, the RUT, and you can verify this for yourself, going all the way back to the beginning of the markets. It's not failed even once, including in the recent Corona crash, and we'll look at that again here in a minute in more detail. And it happens over and over again with astounding predictability. And really, this is what the professional traders are waiting for. This is what we're, myself as a hedge fund manager, I hate to see people lose money in the markets, but I am very astute to when the opportunity presents itself and markets have sold off and people are panicking, to taking a contrarian approach and coming in and buying markets at the lows. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So what you're going to discover here in just a minute is why volatility is one of the only leading indicators of market direction. I'm going to show you how to identify when markets may be vulnerable to a sell-off, and I promise this will completely turn your trading around, because you're going to be able to use a contrarian approach to basically do the opposite of what 90% of losing traders and investors are doing. And then I'll show you how to identify when the market is likely to go up, how to determine exactly how far the market is likely to go up. And to me, this is like really one of the biggest, most valuable pieces of information in the Slingshot setup, because it's what I call the trader's dilemma, right? You get into a trade. We all have at some point, if you stay in the game long enough, you're going to have a winning trade. The dilemma is how far do you let that thing run? I mean, none of us have a crystal ball. We don't know the potential once we get into a winning trade. And the dilemma is basically psychology based. You don't want to get out too early and leave profits on the table. And you also don't want to stay in too long and have the trade reverse on you and wipe out all your profits. So that's the psychological impact that this trader's dilemma has on us. And it makes it very difficult to make that decision. The nice thing is, the good news is that the Slingshot setup solves that problem for us. So I'll show you how to use that. And then I'll show you guys how to get your hands on a tool that can change your trading forever, because it has changed my trading forever. It allows me to trade for a living, make consistent money in the markets, and run a successful hedge fund. So let's start out by imagining a slingshot. So I like to use this analogy because, as you'll see here in a minute, it really does apply to the markets, and it's familiar to basically all of us. If you've never used a slingshot, I'm sure you can imagine how it works. But basically, as you pull back the bands of the slingshot, the muscle energy is transferred to elastic energy in the bands of the slingshot. So once we release the bands, that elastic energy is transferred to the stone as energy of motion, right? So that stone is released from the slingshot and it moves forward. And that's referred to as kinetic energy in physics. And we can actually apply kinetic energy to the markets in the form of supply and demand. So demand, of course, would be buying pressure and supply would be selling pressure. And the key here is that once the band becomes overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. So it's really interesting how this kinetic energy actually plays out in the markets almost identically to how it would in physics with a slingshot. And that's why I call it the slingshot setup. So let's take a look at it. Again, this is a volatility-based setup using a very familiar indicator that is available on the Metastock platform for free called the Bollinger Bands. And I'm going to show you a really unique way to use these that virtually no other trader that I've ever seen uses in this way. We'll look at some of the common ways they're used and why they're not so great. But basically, what we need to understand is that volatility is really one of the very few forward-looking predictive indicators that we can use in the markets. And it tells us when prices move too far from the mean or the average and is likely to reverse direction. And the Bollinger Bands, which have been around a long time, are really an incredible tool for accomplishing this if you use them correctly. So there are a lot of ways to use the Bollinger Bands, just like there are any other indicator. But this is a very unique way to use them when we apply it to the slingshot setup. And it can be very accurate when you use them in a contrarian approach. But basically, this is what kind of the slingshot setup looks like. So this is, again, a daily chart. I think it's of the SPY, the SPY. And you can see that price is trading near the lower band. And I'm going to get into the Bollinger Bands here, just the kind of the nuances of the bands here in a minute if you're not real familiar with them. But Basically, you're comprised of 3 bands, a middle band, and 2 outer bands. So price is at the lower band, and you can see that oftentimes traders will start buying at the lower band, okay? Unfortunately, these bands can fail, as you see here in this chart, especially in the context of a market sell-off. And so this is where we would actually be looking to take profits or get out of positions using a contrarian approach. And then as the market sells off, we would be looking to come in and buy as the price rebounds back up to the breaking point of the band. Okay, so this is, again, what the slingshot setup looks like in practice. So we'll get into this even deeper here in just a second. But for those of you who aren't familiar with the Bollinger Bands, I want to give just a little bit of background on them so you have some kind of baseline understanding of why this works. So in order to calculate these, we take a simple moving average of the securities price. That's the middle band that you see. And then we take the standard deviation of the securities price. And standard deviation is basically a mathematical measurement of average variance. So those are the 2 outer bands that you see. And what the standard deviation does is it measures how spread out numbers are from the mean or the average, which is that center band. And it can be calculated by taking the square root of the variance, which itself is the average of the squared differences of the mean. Now that sounds kind of complicated. Not to worry, you don't have to do any of this. It's all done automatically for you in Metastock by simply applying the Bollinger Bands to your chart. I just want you to have kind of a basic background understanding of what these are and why they work. And so we add and subtract those 2 standard deviations from the simple moving average to produce those outer bands. And because the standard deviation is a measure of volatility, when the market becomes more volatile, the bands widen, and when the market's less volatile, the bands contract. And that's really important information to have, as you'll see here in just a minute, okay? And then I'm going to go ahead and give you my settings for the bands. And these are actually just the default settings you're going to find on most platforms. I believe this is what they default to in Metastock. And that is a 20-period simple moving average for the middle band and a 2 standard deviation setup for the 2 outer bands, right? So you're going to have equidistance between the upper and lower band from the mean or the middle band. So those are the settings. Again, don't worry too much about all the little nuanced kind of explanations of the Bollinger Bands because it's all done for you automatically in your platform. What I think is more important is to discuss some of the bands in practice, or some of the ways that they're commonly used to trade in the markets. And then we'll hone in on the slingshot setup, which I've developed, and it's really a unique way to use the bands to identify high probability buy and sell points. So the first common way that the bands are used is one we just looked at, is to buy at the bottom band and sell at the top band. But the problem with this approach is that, as you saw in that chart a second ago, price can hug the upper or lower band for extended periods of time, right? So this can work in ranging markets and sideways markets pretty well, but unfortunately it can wipe out all your profits on just one failed trade. And so for that reason, we don't use the buy at the bottom band, sell at the top band approach. Another common way that they're used is band contraction and expansion. And this is actually really good information, as I mentioned, because when the outer bands are close together, it means we're in a low volatility environment, and inevitably volatility will expand and we'll see the bands diverge. And it can be a good indication of an impending big move in a security. And I'll show you how you can kind of look for that. But the problem with using this as an actual method to get into a trade is that we don't know in which direction the move will occur. All it tells us is that there's a low volatility market environment, and there's inevitably going to be a volatility expansion, but we don't know if it's going to go up or down. There are strategies out there you can use, like straddles and strangles, to kind of take a non-directional bias or approach, but those require a lot of other special skills, like analyzing option pricing and implied volatility, etc., to make sure that you're not overpaying for your options premium. So that can become very complex. But for those reasons, because we don't know if we're taking a directional bias, which way the direction is going to go. So we don't use it for that reason. Another common approach is to buy or sell at the middle band. And this actually can be a pretty good tactic in strong trending markets. But since markets don't trend most of the time and strongly, I think, the kind of key frame of reference is about 30% of the time we're in a strong trend, and about 70% of the time we're in sideways or weak trends. So it can work in strong trends, but it often fails during sideways ranging markets. So it can, basically provide you brief periods of success with longer periods of failure. So for that reason, we don't use this approach either. And then the fourth and final one is my slingshot setup, okay? And what we do with the slingshot is we wait for the lower band to break, and we wait for price to hug the lower band and ultimately rebound to where the breach occurred. And in all my years of trading and investing, this is really the most reliable approach to using the Bollinger Bands, and it's a contrarian approach. And generally, contrarian approaches are doing the opposite of what most traders and investors do, because most of them do fail over the long term. Is really your best bet. It's the best way to approach the markets, and it's really the way the smart money approaches the markets. All right, so we're going to use the Bollinger Bands to buy low and sell high. And again, we kind of went over what those are and how the lines are plotted. They were developed by John Bollinger, I think back in the 70s. So they've been around a really long time. They are used by smart money traders. They're used by hedge funds, institutions, etc., because they do give us very good information in terms of volatility. But they're not commonly used in the way that I'm about to really dig into with the slingshot setup. So with the slingshot, again, we're going to take a contrarian approach, thinking back to that psychology curve we looked at the beginning of our session, and we're going to sell when other traders are getting greedy and buy when others are fearful. And we're going to do that by looking at the Bollinger Bands in a very unique way and analyzing price in a unique way. So again, price can hug a band envelope for prolonged periods of time during strong trends, right? So when we're in a sell-off like the Corona crash back in February and March, these are the types of scenarios where this slingshot setup plays out and gives us opportunities to make a lot of money. So what we do is we wait for the lower band to break, and then we wait for a buy signal. And then we exit when price returns to the breaking point of the band, okay? So let's kind of look at some examples of when this is played out, and then we'll look at it on the charts. So believe it or not, the major market indices have returned to the initial volatility breakout with 100% accuracy. And that includes all four major corrections of 2018, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis. That's when the market lost more than half of its value in a very short period of time, if you guys were trading back in 08. The 2000 .com bubble going back 20 years ago, even the recent Corona crash, every black swan event, market correction, major crash, bear market, you name it, this has worked with 100% accuracy, and you can verify it for yourself. So let's look at this now in detail. I'm going to show you actually how to trade this using the recent Corona crash as an example. So again, we've got this chart that we looked at earlier of the S&P 500 pulled up. And it's a daily chart of the SPY. Sorry, this is actually the SPX index. So we've got the chart starting in February. So you can see it on, I think it was February 19th, we hit the all-time high in the market. And the very next day, we start to make lower highs and lower lows, and then the market turns over and starts to crash. So if you weren't aware that there was a potential market crash happening, and of course, none of us have a crystal ball, you may have started to buy because we got a little bit of a pullback here. We've been in this 10-year bull run, and a lot of people would see this as a buying opportunity. Now, taking a contrarian approach and using the slingshot setup, this is where we would actually look to get out of any open profitable trades or put longer term positions and take profits and we're going to sell when others are being greedy. So what happens when this slingshot setup occurs? And so you'll notice here the price is hugging the lower band. And this is where we want to either get out of profitable positions or take a short bias and short the market, which is actually what I did during the Corona crash. I shorted the E-mini S&Ps and NASDAQ futures. And so this is where we want to actually be fearful when others are greedy as the price is hitting the lower Bollinger Band. And then as price sells off and the sell-off accelerates, we want to start looking for opportunities to buy and be greedy as other people are panicking and fearful, which is what causes price to go back up as the smart money comes in and buys at bargain prices, driving the price right back up to the lower band where the price initially broke the lower band. This is the slingshot setup. So on the left side of your chart, the band gets pulled back, the market sells off, the stone gets released at the buy point, it fires off, price goes back up, and because of kinetic energy, we return right back to the breaking point of the band. So it's kind of like a triangle. This is the slingshot setup, okay, during the Corona crash. Let's look at another example. I often get asked, does this work on individual securities? Absolutely. This is a daily chart of Apple. Look at that nice uptrend on the left half of the chart, and think now back to the psychology curve and what people are, traders and investors are doing and thinking as this nice uptrend is playing out. Let's get into this stock. I don't want to miss out. I have a fear of missing out of future profits. This thing went from a bottom of 160, around 164, up to 216. We've got a nice little pullback there in the middle of the chart. This is a great opportunity to get in. In fact, if I had gotten in on that earnings release on the pullback just about a week ago, I would have made a bunch of money from just below $200 a share, capping out to about 216. Let's get in now again. There's a nice opportunity. Not so fast. As price hits the lower band, and actually this is, a lot of people probably would have gotten in on that bullish reversal candle. It's a nice little doji or pin candle down there at the bottom band. But what happens? The stock sells off. Apple tanks, bottoming out around 168 a share. Again, we see a double bottom. So this is where the slingshot actually starts to set up. The stock sells off. This is where we would come in and buy. What happens? It rebounds right to the initial breaking point of the band. There's the slingshot setup on an individual stock. Here's another example of the QQQ. This is one I like to trade. Here we have on the left part of the chart, you see how the bands are close together and horizontal. That's a volatility contraction. That tells us that market volatility is relatively low. And this is a point where a lot of traders and investors would come in and buy the QQQ. Unfortunately, this would have been a bad time to buy the QQQ. This is one of the corrections towards the end of October, or towards the end of 2018 in October through December. And the market sells off. This is where we come in and buy. What happens? Price goes right back up to the breaking point of the band. Another beautiful slingshot setup. I often get asked, does it work on intraday timeframes? Absolutely. So this is, we looked at a few ways that the Bollinger Bands are commonly used. One is to buy at the bottom, sell at the top. That would have worked really nicely on this chart for a few trades here. You see price on the left-hand side is bouncing off the bottom, going to the top, bouncing off the bottom. You would have had 2 or 3 nice trades there until this one. If you had bought at the bottom here, A&D sells off. So if we take a contrarian approach and use a slingshot setup, we get in near the bottom and hold. Remember that trader's dilemma I talked about? When do we get out? We get out using a contrarian approach when other people are starting to identify that there's a trend in place and they're getting greedy and they don't want to miss out on any future move in the security. They're buying, but we're getting out because we bought way down at the bottom. And there's the slingshot setup again. So the key here is, how do we identify the buy zone? The sell zone is, or the sell warning is easier. We become cautious or fearful when price hits the lower band. That's when we start to watch it very closely to see if there's going to be a sell-off and price is going to follow that lower band. But the trick is to identify when the band is overextended and ready to snap back. And there are a lot of ways to do this. And due to our limited time on our session today, we can't get into all the different techniques and nuances of when to get in, but there are a lot of ways you can do this. One is to wait for, a couple closes back into the band channel to get in. You can look for bullish candlestick patterns like bullish engulfing patterns, etc., to get in off the lower band. You can look for lower support levels, are a good way to get in off the lower band. you can use what I call a 2-bar entry and use a buy stop to trigger on a break of the high of the last 2 bars. There's so many different ways to do this. But I've actually developed a much easier way than having to use all these different techniques of determining when the best time to get in on the lower slingshot rebound. And what I've done is I've spent over a decade and thousands of hours testing this to determine when momentum is actually going to shift off this lower Bollinger Band and reverse the trend for the slingshot setup to play out. But once I got this formula dialed in, the challenge was then, of course, to figure out how to get it to work across all time frames and then duplicate the success across all markets, because all markets act a little differently and have different personalities and characteristics in terms of how they their price action portrays itself. And so what I've done is I've developed an adaptable algorithmic formula that can actually predict these market shifts with a really astounding accuracy, especially when you apply it to the slingshot setup. So the result is a tool that's available on Metastock that gives you accurate buy and sell signals near the outer channels of the Bollinger Bands, and it does it up to 3 candles in advance of the move. So as we're getting a sell warning off the lower band of the Bollinger Bands, it will tell us up to 3 candles in advance whether the likelihood is for that slingshot setup to take place and the market to sell off. And then if it does, it gives us accurate buy signals at the bottom band before the rebound takes place. So the cool thing is when you actually formulate the right combination of momentum indicators like we've done in the Metastock platform and combine them with volatility studies and price action setups, you can accurately identify buy and sell signals at the outer bands of the Bollinger Bands. And this is what we programmed into the Trade Trend signal software for Metastock. So Trade Trend, again, accurately gives you buy and sell signals near the outer bands of the Bollinger Bands with the slingshot setup. So it's really an incredible combo applying Trade Trend to the slingshot setup that I've taught you on our session today. And it does it with a proprietary blend of momentum indicators that can not only warn you of market sell-offs, which is to me is invaluable because being able to protect your capital, go to cash when the market's selling off, or even implement a bearish strategy and take advantage of a bearish bias in the market can make the difference between success and failure. So having a tool like this is really invaluable, and it can help you predict short-term and long-term trends with astounding accuracy, especially when you apply it using the slingshot setup that I've taught you guys. And the cool thing is that it works across any market. So whether you trade stocks, ETFs, futures, Forex, this can really be applied to any of the markets. And the Metastock platform has a really powerful screening engine. You can actually use this tool to screen for buy and sell setups really in any market that you want, in any time frame that you want on the Metastock platform. And they also have a really robust, in fact, probably one of the most robust backtesting engines I've ever seen on any charting platform in my career. And you can use it to backtest. And I love to use this tool and backtest in all these, market sell-offs that I'll go back, the .com bubble, even back to some of the, the crash in the 30s and stuff, and backtest this and see how well it did, applying it to the slingshot setup. We have a lot of members who use it to supercharge their option strategies. In fact, we have a lot of members who will use Trade Trend to simplify their option strategies and go from trading like more complex multi-leg strategies like butterflies and iron condors and things of that nature, ratio spreads, and just buying calls and directional calls and puts off these buy and sell signals. But ultimately what Trade Trend does is it helps you trade without any guesswork. And that's really powerful. Now, I mentioned in the beginning of our session, I was going to give you a little trick to help you eliminate a lot of your losing trades. And this is something we've actually programmed into Trade Trend on Metastock. And it's a trick that I use in my own personal account as well as my hedge fund. And what that is we use a buy stop order to enter long trades and a sell stop to enter short trades. And it helps us filter out false signals and improve consistency and profitability. And it actually can be applied to really any system or strategy. So instead of using a market order or a limit order to get into the market when you get a signal, instead, we want to make sure that there's follow through with our projected momentum or trend. And so we'll place a buy stop order above the high of the candle on the buy signal, or a sell stop below the low of the candle on a sell signal to confirm market direction. And that way, if there's no follow through, we don't get into the trade. And that really actually can help eliminate a lot of these whipsaws, choppy market conditions, or false signals, really with any system or indicator. And we program this into the trade trend signal software. So I often get asked, Jeff, how did you do using trade trend in the recent Corona crash? So what I did is I took real live screenshots from a real money TD Ameritrade brokerage account back in February and March. I was being pretty cautious back at this time because we were aware of the coronavirus. We didn't know necessarily the global impact at the time, but usually when something like this is new and emerging, I'll be pretty cautious. So I was mostly in cash in February. But at the end of the month, as the market started to tank, I did fairly well. I made over $13,000 in profits using trade trend. And then in March, as the sell-off accelerated, this is where I really started to pick up on the fact that the slingshot setup was starting to play out. And this is where I started to get more aggressive. So at the end of March, as the market was starting to rebound, I was already in the slingshot trades using trade trend. And at the end of the month, I made over $27,000 using trade trend and the slingshot setup. So this is real money results, guys. They're not hypothetical. In February and March during the Corona crash, I made over $40,000. And this is not to brag. It's simply to show you the power of trade trend as it applies to the slingshot setup. And this is how I did in my actual real TD Ameritrade brokerage account. Here's some more examples. This is kind of what the signals look like. You get a warning signal and then a confirmation signal. So I told you that trade trend gives you up to 3 candles of advanced warning. So if you're trading off a daily chart, you'll get the buy warning and you'll also get the entry price in the commentary on Metastock. And this is basically what it looks like. And these are some gains from options trades if you were to take buy at the money calls and puts on these setups. So the cool thing is trade trend works in any market, any time frame, any size account. You can apply it to all of these different metrics based on your risk tolerance, your account size, etc. in the Metastock platform. And what it does that makes it unique from other Metastock add-ons or indicators that you see out there is it provides buy and sell signals before the move occurs, up to 3 candles in advance. So if you're an intraday trader and let's say you're trading off an hourly chart, you know up to 3 hours in advance your exact entry price, the anticipated direction, whether it's to the long side or the short side. And it also gives you trailing stops to help you manage the trade as the trade plays out. So there's no guesswork involved. And again, it's a unique entry. It provides unique entry signals because again, most indicators or add-ons give you a buy or sell signal, and then you've got to jump in with a market or a limit order when you get the signal. And trade trend is different. It gives you the buy or sell warning, and it gives you the suggested entry price. And then we use a buy stop or a sell stop limit order to place our trade. And then we simply wait for over the next 3 candles to see if it triggers. Okay, so we don't need to jump in the market right at the time that we get the signal. And it's predicted every market crash, every rebound in the history of the market with 100% accuracy. And I challenge you to go back and verify that for yourself. If you look at all the major black swan event market crashes, bear markets, trade trend has given us sell signals before the market crashed. This is an example of the flash crash back in August 2015. The market's in a sideways channel. We're in a sideways trend. Trade trend flashes a sell warning on August 19th. The market tanks. I don't have the slingshot setup plotted here, but hopefully after our session today, you guys can spot that now. There's the sell-off. There's the buy signal. This is the 2008 mortgage crisis going back over a decade. Kind of same thing. We're in the sideways price action. We get a sell warning from trade trend on May 21st. The market loses more than half its value. This is the slingshot setup. There's the buy signal from trade trend. Now going back a couple decades to the 2000.com bubble, traders are greedy, overly optimistic, exuberant. They're buying in to all the .com bubble madness that is taking place. We're taking a contrarian approach. We get the sell signal from trade trend. Using the Bollinger Bands, we spot the slingshot setup, the buy signal, and the market rebounds. So virtually every system will produce winning trades. There's no question. The problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trade. So that's what the slingshot setup and trade trend are designed to do together, is to give you the opportunity to get into the markets or out of the markets at the right time using a contrarian approach. These are more real money screenshots from my TD Ameritrade brokerage account, not hypothetical, using the trade trend signals in the context of the Slingshot setup. You can see that not every trade that I make is a winner, but the nice thing is trade trend helps contain losses and let profits run in these big trends. These are also results from my recent monthly results from August, so last month, for my Altos Capital hedge fund. I did nearly 6.5% in returns for my investors using the trade trend signals back in August. So here's my promise to you guys. I want to help you guys have days just like these, and I'm going to give you access to a tool that lets you copy my trades that Jeff will give you some details on in just a minute. But ultimately, I want you to join me to discover how I make consistent income in the markets day after day and week after week. And I reveal every one of my special techniques and indicators like the Slingshot setup that make profits like this possible. I don't hold anything back. I like to show you guys exactly what I do to be successful in the markets. So we put together a special package for you guys today. Jeff's going to talk to you here in just a second about how you can get access to trade trend on the MetaStock platform for stocks, futures, and Forex that gives you exact entry and exit signals live. We do hold live interactive trade sessions. These will be held outside of MetaStock, but we do offer this for anyone that purchases trade trend on the MetaStock platform. We hold these a few times a month. In fact, we're holding our next one Tuesday, this coming Tuesday. So hopefully you guys can join us for that. And I do hold those and run those myself with my partner Richard, and we go through strategy and etc. using the trade trend signals. And we do post all those recordings to our members area, which you'll also get access to if you try out trade trend on MetaStock. And so if you can't join any of our live sessions, those are all posted in the members area, no worries. And then I provide full support and personal coaching to all of our members and our live trade sessions via email, etc. We also teach trade adjustments to fix losing trades. I'm going to throw in a bonus here for you guys today if you try out trade trend on MetaStock. And that is our online professional trading series, which teaches how to adjust losing trades. And I also give you guys a list of my most profitable tickers to trade on our live interactive trade sections. So again, here's everything you get with trade trend, accurate buy sell signals that you can use with the Slingshot setup that I've taught you guys on any market and any time frame. You can use it to back test to see results, supercharge your option strategy, and trade without any guesswork on the MetaStock platform. And ultimately, it helps you cut the learning curve and trade like a pro starting as early as tomorrow. So ask yourself, if you're able to buy low and sell high and even beat the pros, and guys, you can beat the pros. As I showed you, using some of these techniques, I did nearly 6.5% of my hedge fund back in August in 1 month. If you look at some of the top hedge fund guys, I'm trying to remember, I think it was Greenlight Capital, which is one of the bigger hedge funds out there. Across all of his funds in August, I think he only did like 0.5%. Guys, I beat one of the top hedge fund managers out there in August using these tools, and you can do it too. It's not difficult if you follow the the setups that I've showed you and use the trade trend signals. So it's possible. And here's proof of some of that with what our members are saying who use trade trend. Jay Thomas says, very impressive results. Well done. Thanks for helping us little guys with small accounts who dream of growing our accounts over time. Our Julian sent me this recently. He said, this is an excellent indicator. So far, I've made over $11,000. One of the most powerful indicators I've used. I use it for the Great British Pound pairs on Forex and Bitcoin, and I recommend it for anyone who's serious about winning trades and making consistent money. Frank says, how refreshing to have someone produce a product that does what it says. I thought it was too good to be true at first, but you've proven me wrong. Thanks, and keep up the good work. This one's from Brian, one of our Inner Circle coaching members who was really struggling in the markets last year and was actually down around $42,000, and said he's now happy to report that he's recouped all those losses and is now net positive over $47,000. So he made over $90,000 in profits in only 90 days using trade trend. Okay, that's pretty incredible. He said he's thankful to the good Lord for leading him to our good system. Alan was one of our early beta testers when we first launched trade trend on MetaStock, and he's been involved with lots of software testing. He's a software engineer, I believe, and he says trade trend does exactly as it says, and he's found some nice setups. So I'm going to pass it over to Jeff here in just a second and open it up to Q&A. But I mentioned we're going to throw in a couple bonuses if you try out one of the packages that Jeff will tell you about here in a minute. That is our professional trading series. This is a 9-module online course that we'll give you access to. that contains all of our best options, stocks, futures, Forex strategies. And then I'm also going to throw in a second bonus, how to create risk-free trades and let your profits run with little or no risk. This is a cool technique I use in my hedge fund and my own personal account to mitigate risk in trades and even sometimes eliminate it completely. All right, so I'm going to go ahead and open it up to Q&A. I know we only have about 5 or 6 minutes left, and Jeff has some things to get through to tell you how you can get trade trend on Metastock. So if I don't get to your question, you can always email us at support@altostrading.com. We're happy to answer those. Being that it is Saturday, please give us till Monday for our support staff to get back to you on those. But we will make sure to answer any questions that you have. And I'll do the best to open it up now to any questions that are coming through. So I'll pass it back over to Jeff.
All right. Can you hear me okay, Jeff?
I can hear you loud and clear.
Okay, good. James wants to know, does Altos work with day traders for indexes, or do you just work for stock swing traders?
Oh, great question. So we've got traders across the spectrum. So it was kind of like Barry mentioned. I was watching a bit of Barry's presentation earlier, and I really liked what he said about there is no the trend. It really is. It's based on what time frame you're looking at. So if there's a, there are trends on all time frames. So the way we've designed the trade trend indicator and the methodology behind it, which is momentum based, can be applied to any time frame. The rationale and methodology behind it applies the same whether you're looking at a 1-minute chart or a daily chart. So we have, like I said, members who use it across all time frames and all markets with success.
Cool. Kevin wants to know if you see a big correction coming.
That's so funny. So I've been asked that on probably the last 4 or 5 sessions we've done with our members. And I guess I'll answer that in 2 ways. Number one, I wish I did have a crystal ball and knew the answer to that. I guess I would, to be fair, I would say, I don't know the answer for sure, obviously, but I do think we're at a high level of risk of a correction. But not only that, I think what's more important than whether there is a correction or not, in other words, whether, now that I've taught you the slingshot setup, whether there is a slingshot setup, is that you want to look kind of at what the potential magnitude of that correction could be. And really the best way to do that using the slingshot is kind of think of what type of environment we're in. This is a very unique year, right? So we've got a pandemic with some unknowns. We don't know when the vaccine is going to be available. We don't know for sure because although results so far look promising, we don't know for sure what the final results are going to be. They haven't been published yet. So there's an unknown there. We don't know the availability date. We hear rumors every day, but we don't know for sure till the pharmaceutical companies and the FDA actually give us the PDUFA dates and the release dates of the vaccine. And then we don't know the outcome of the election. So those are very big unknowns, and they can cause a lot of volatility. And so when you have a potential for high volatility, if there is a sell-off, it's probably going to be significant. So we've already seen it this past few weeks, right? We're already in correction territory, which is defined as a peak to trough of 10%. So after hitting the recent all-time high, we're already in that correction territory. But if we see anything beyond a 10% peak to trough move, then be very cautious. Use that slingshot setup that I taught you guys today. Take a contrarian approach. Wait for a 20 to 30% sell-off, and then look at coming into the market and using the slingshot setup to make big bucks, as well as trade trend. Trade trend can help give you that buy signal on a reversal. Any other questions, Jeff?
Let's see. Let's just do one more. I think we're running out of time. Long says, thank you for your valuable market presentation. And Joe wants to know what is your best time frame? What time frame do you like most?
So I trade predominantly off the daily chart. I'll use smaller time frames to time entries, more precisely. But I'm not a day trader, and that's simply because I just find over my career, I found that it's easier. The higher time frames you go to, the easier it is, for a lot of reasons. Part of it's psychology based, which of course we talked about on our session today. If you're having to make very rapid fire decisions on short time frames, it's just easier to make errors, and for psychology to come into play. That tends to be have less of an impact if you're trading off of a daily chart. You don't have to make decisions as quickly, which of course makes it easier. So I mainly trade off daily charts. I don't do any day trading in my hedge fund or anything like that. So. Any other questions you want me to address, Jeff? Okay.
Oh, hey, sorry about that. I had to press the unmute button. I think we got to move on a little bit. Jeff, I really appreciate your coming in today. I remember we did a webinar back in June or so, or January or so, and you were like talking about how you were a little nervous about where the market was. So I thought you were insane back then. I really appreciate your feedback and your insight to the market. So it's good to have you here today. Let me go ahead and I know there's a lot of questions that we didn't answer, but if you want to reach out to us, we'll make sure you get answers to them. So thank you again, Jeff, for coming in.
Thank you.
All right. And I do want to spend just a minute. Vince will allow it. But I do want to kind of just show how how the methodologies for trade trend work in Metastock. And I'm going to go ahead and show my screen here right now. You should be able to see it. Again, I hope you're doing well. Let's go ahead and do this. Here's just, this is Apple. What I wanted to kind of just talk a little bit about is when you get a setup for a trade, you're going to get a little triangle here on the chart. When you get the entry, you're going to go ahead and get a sell arrow here. One of the things I like about this is also one of the things I like about Vince Vora is every time you're in a trade, it's actually going to give you an updated stop loss in real time that you can get there. This add-on we've released a couple years ago. It's been extremely popular, and it's something that people really, really like. So let me go ahead and kind of talk a little bit. Let me see if I can find my PowerPoint again here. This is a picture of the trade trend package. Again, it's going to give you real-time signals, setups, triggers, exits. It's going to give you that stop loss, a detailed commentary breakdown. It's going to give you the full market scanning. You can scan for either the setups or the triggers. You can do testing with it, and it does come with a comprehensive user manual. So there you go. Again, included are the two templates: the expert advisor, the exploration, the systems tester. And normally this is an add-on that we license for $90 per month or $972 per year. What we're doing as a summit offer for this one today is if you buy a month, we're going to give you 2 free months. So for the price of about $30 a month, you can add this to your Metastock subscription. If you want to do that, we'll actually include a subscription to Metastock as part of the thing if you need it. You can take advantage of that by getting a hold of us at metastock.com/saleschat. You can give us a call at 800-882-3040. And it is also part of the Trader Summit action package that we're doing today. So you can get 3 months of Metastock real time, 3 months of our institutional quality news service and data that we get from Refinitiv, formerly known as Thomson Reuters. You're going to get Vince Vora's Veracity, one of our all-time favorite products that Vince is going to talk to you about in just a second. You're going to get our AI product. You're going to get Jeff Tompkins' Trade Trend, Rick Sadler's Patterns for Profits, Barry Burns' Top Dog Trading Toolkit. You'll get a 3-month subscription to learnmetastock.com as part of this. You'll get Unleash the Power of Metastock, 2 years of stocks and commodities, and the white glove service treatment. All this would normally be $4,805, more than half off today, $1,985, which was a great year, I think. Give us a call, 800-882-3040. You can chat live with us at metastock.com/saleschat. You can also take advantage of this online at metastock.com/summit deal. So there you go. I do want to say thanks again to Stocks and Commodities for sponsoring today's event. They've been a great sponsor of Metastock and particularly the Trader Summit over the years. If you didn't get your free issue, go back to metastock.com/Trader Summit and sign up to get a free issue of it. So thanks again. There are a lot of questions. I'm going to go back through some of the questions. I noticed that I have missed a few of them. One of the popular questions that we're getting right now is, are you going to get us a recording? And yeah, you'll have a recording. It'll be sent to you automatically within about an hour of today's event. So there you go. Do want to introduce to you another expert for today, Vince Vora. Vince's methodologies, we've been working with him on for a number of years, probably 7 or 8, I'd say. His methodologies are very, very popular. Several of our sales staff actually use them to find trades. And one of the things I like about Vince is how specific and how well I think he talks about things. So with that being said, let's go ahead and bring you in here, Vince. Vince, how you doing?
Good morning, Jeff. I'm doing well. Can you hear me?
I can hear you. You sound good.
Excellent. How have you been?
I've been good. How have you been?
Excellent. I'm doing quite well. It's been a bit of a crazy market. Sorry, I'm just trying to share my screen here, make sure.
We've got your screen.
Yeah, you can see it? Okay. And should I open my camera? Or we?
Hey, we'd love to see you.
All right.
If you want to.
There I am.
Yeah.
Good morning, everyone.
So you've got 3 clocks in the background there.
Yeah, my home office, I thought I'd try to replicate a little of what I had when I was doing this professionally. And there I had several more clocks, but I only have room for 3 here. So I thought I'd put those up. It reminds me of the old days.
I am getting out of your way. Thanks.
I'm sorry, what was that?
I said I'm getting out of your way.
Oh, okay, great. Well, thanks again for having me on. I appreciate it. As Jeff said, I've been working with Metastock for many years. They're great partners of ours. They're fantastic, and the support staff is great over there. So thanks for all that you do. But welcome, everybody. Good morning. Nice of you to take a Saturday morning to be with us. Great lineup of speakers today. I myself today want to talk about what I call my baby, which is Veracity, a system that I put together many, many years ago and have been trading with ever since. I want to, before we get started, just to mention that trading can be risky. So please don't trade with real money until you're completely comfortable with the system you're using. As Jeff said, I'm Vince Vora. I'm the head trader here at Trading Wins, and have been doing this, or have been in this business for well over 30 years now. Over that time, have developed several systems, but the one I use on a daily basis and I'm most proud of is Veracity. Over the past 6-7 years, I've really been focused on coaching people, both one-on-one and in group settings. So I do that quite a bit, but mainly trading the markets and supporting our membership group, which has grown over the years. We meet 3 times a week online live, and they're just fantastic, fantastic people, and it's so much fun. But let me get to the presentation today. What I'd like to do today is get started by sharing my money management rules. We just have a couple of quick slides, and then we'll get to the charts. I'll speak a bit about what the makeup is for Veracity, how this all came about. It all started with my search for the Holy Grail, which we know doesn't exist, but we all want to get as close to it as possible. This is my version here. I'll explain how it works and why it works, but more importantly, how it can work for you. And of course, feel free to ask questions along the way. And I'll try to keep an eye on the chat along with the YouTube channel here. But Jeff, if there's questions that I'm missing along the way, by all means, just interrupt me. Okay, so let's get started. Again, just a few quick slides here, and then we'll get to the charts where I will show you many examples. And of course, I've got some symbols to share with you, but if there are stocks that stocks, futures contracts, forex pairs, whatever it is that you want to see how Veracity, would have performed on those particular issues, by all means, type them in, and I'll try to get to as many as possible. When it comes to trading, one very important aspect is to really make sure that you're focused when you sit down to trade. So when I say trade with a positive mindset, what I'm really talking about there is being focused, not distracted, put away all the distractions. What I do is I will have a TV on, and I will have, CNBC or Bloomberg on, but I will mute the volume. As it really doesn't matter what they're saying. I really have it on just in case there's any breaking news that comes out. And, I may have alerts set up on my phone, but it's always nice to see one of the networks because they tend to put the news out first. So you want to really, not be distracted and feel well. Many mistakes happen when you sit down and you're not quite feeling yourself that day. So turn off the laptop if you're not feeling well, come back and trade another day. Now, the other main thing is to trade with an amount that's completely insignificant to you, at least that it feels that way, right? For some of you, that'll be a few $100s. For others, it'll be many thousands. The amount doesn't really matter. What matters is that if you're trading with an amount that feels insignificant to you, it'll be very easy for you to follow the rules and stay in the trade for the time that you're supposed to stay in the trade, or at least that the charts tell you to remain in the trade. How many times have you gotten into a trade, seen a couple of red bars go against you, and you kind of panic out, right? I mean, it happens to all of us. But we've done everything we can with Veracity on the Metastock platform to help you remain disciplined and help you follow the rules that I'm about to give you. And I will go over those in detail. But, it really always comes down to the amount of money that you have in a trade. If I asked you to put $50 in a trade, for most of you, you wouldn't worry at all. Could sleep at night, follow the rules to a T. If I asked you to put 50,000 in a trade, be a little different, right? And you'd probably be very trigger happy. So trade with an amount that feels insignificant to you. Now, normally what I do is I never allow myself to put any more than 5% of my account balance in any one trade. And really what your goal should be is to start off with 5%, but bring that down slowly as your account grows, right? So the amount of money you're putting into a trade continues to grow, but the percentage of your overall balance drops. And if you can get down to 1%, right? Take from 5 to 4 to 3, etc., down to 1. If you get to the point where you're risking 1% of your account in any given trade, you're not going to worry much. And those emotions that normally come in, you'll be able to keep them out of your trades. And that's what will really make you a consistently profitable trader. Okay. The other thing is that we don't control the markets. We never have, we never will. And there is always the chance that some event will happen that will be completely unexpected, right? It could be a flash crash. It could be something like 9/11. There's no way for us to predict what will happen. So in order for us to avoid ever taking a huge loss that will wipe out our account, okay, is to leave a portion of it in reserve. I like to leave 50%, okay? And that may sound significant, but at the end of the day, what that does for me is if I follow that 5% rule, and by now 1% for myself, and the 50% in cash, guarantees that I will never take a big loss again. And even if some catastrophic event happens that drives the market against me and causes me to take losses at any given point, I still have the other half of my account there that I can put back into the markets and make that back. All right. And one of the most important rules out of these 5 is to spread your trades out. How many times have we seen a strong day or a very weak day, right? And whenever you see, say the Dow's up 400 or 500, the S&P's up 25, the Nasdaq's up 150. Whenever you do a search on a night like that, you're going to get a lot of trades in the same direction, right? A lot of long setups. The last thing you want to do is jump in and put in 7, 8, 9 trades only to see the market completely reverse the next day. We've seen it happen over and over again. So what you want to do is on any given night when you do your search is pick 1 or maximum 2 of your strongest trades, right? The ones that give you the highest probability of making a profit. And I'll explain how we pick those out using Veracity in a couple of minutes here. But really, you want to spread your trades out. So what I can guarantee you today is if you follow these 5 simple rules here, and they're really very simple to put into practice, if you follow them, you'll never take a big loss again. And the reason you can trust me on that is very early on in my career, when I was just starting out and thought I knew a lot about trading, but actually didn't, I took a very, very sizable loss that really set me back for many years. Luckily, that helped me become the trader I am today, but it really hurt at the time, and it's something I don't wish on anybody. But the reason why I put these rules together the way I did is because I never want to feel that kind of loss again. I never want to experience that again. And so I've been using these for decades now, honestly. Never, ever. I've been through many market crashes, flash crashes, 9/11, many other events. If you follow these, you won't take a big loss anymore, okay? Couple other sayings here that we follow at Trading Wins is 1, you'll never go broke taking profits. The reason I like to put this up there is for those of you who may just be starting out your journey in trading, okay? If you're new to this and you're going to follow Veracity, you'll find that it is extremely conservative. I hate risk ever since I took that loss. I absolutely despise risk and do everything to avoid it. So Veracity was designed as a very conservative system. The benefit of it is that it doesn't cap your upside, and we'll get to that in a second. But when you're just starting out, what you want to do is build your account as well as your confidence and your experience as a trader. So when you have profits, take them. That'll help you to build your account a little quicker, and it'll also give you not just confidence in yourself as a trader, but in the system that you're using, okay? And always, always remember that this is not about you. If you're in this to be the world's greatest stock picker, I can almost guarantee that you're going to lose money, okay? You don't control the markets, you never will. All we can do as traders is try to put the odds in our favor, okay? And that's what we've done with Veracity. It contains 6 different indicators and oscillators behind the scenes that when they all line up, they give us an edge. It's not 100%. No system is. Okay, so there will be losses that you take along the way. The key is to keep those losses small and have your winners, not only have more winners than losers, but have your winners be greater than your losers, right? With that kind of math, you can't lose. So always remember that this is about execution. If you follow the rules, then you can control how much you lose when you're wrong versus how much you win when you're right. And that's what it's all about at the end of the day, okay? So let's talk about Veracity. As I said, contains 6 different indicators and oscillators that we've developed over time. So the basics of the system came together in a few weeks. But what took years and years to refine was having the system get us out when things are not going our way very quickly, get us out of there very quickly, compared to sticking with a trade when it does go our way. And through back testing and forward testing, and what I mean by forward testing is actual testing with real money, playing it with real money, we've managed to find that combination, okay? So what this system is designed to do compared to many of the other ones that we've developed over the years is this was really designed to catch the big moves, but avoid the risk. So what it actually will do for you is manage to keep your losses small when you have them, but not cap your gains, okay? So that it maximizes that safety component in every trade, which is super, super important for me anyway. So what will it do for you? Well, not only will it help you identify many different trading opportunities, whether you are a day trader, whether you're a swing trader, whether you're a long-term investor. I should have said from the start, Veracity is strictly based on technical analysis, no fundamentals, strictly technical analysis, but it will work on any market, meaning stocks, futures, Forex. You can trade it with options. In fact, I encourage you to trade it with options. You can really, with options, leverage it without increasing your risk. It can actually be a lot safer with options. If we have time, we can talk about that. It will also, if you're more of an investor, help you identify some huge long-term trades, especially with dividend-paying stocks, okay? And I will go over that. So you can trade this on a 1 minute, on a 3 minute, 5 minute. You can trade it on a daily, weekly, monthly. It really doesn't matter. Anything that you can chart, you can use Veracity with. And another way you can use it is to predict major market moves. In other words, if you plot an index like the S&P 500 on your chart with Veracity, it'll tell you on a monthly time frame, that is, it'll tell you when a new bull market is about to start or when a new bear market is about to start. So let me bring up my Metastock platform here and let's start going through it. Okay, again, if there's any questions, let me know. But what you're seeing on your chart right now, and usually the only thing aside from the indicator that I put on my chart, and the indicator plots these little diamonds and these little arrows and exit signals here. This blue line that you see here, that is the 20-period simple moving average. That is the only indicator that I have on my chart that is in addition to those 6 indicators and oscillators that are built into the formula behind Veracity. Okay, and the reason why I like to plot the 20-period moving average is, number one, it is one of, if not the most widely used moving average among not just retail traders, but professionals as well. But what it does for you is it really allows you to judge the momentum behind the stock, or the lack of momentum behind the stock. Let me explain. So there's 2 ways that you can identify momentum when you're using technical analysis. One is to look at the slope of the price bars. Okay. Now, I should say I have open, high, low, close bars here. You can have candlesticks. Okay. You can have Fibonacci, whatever type of candle you want, you can plot on here. I'm just using your everyday basic open, high, low, close. Okay. But going back to momentum, you can draw a line across the bars to give you an idea of the slope. Okay. And the higher the degree of slope, one way or the other, the more momentum there is behind that move. At the end of the day, as traders, what we're trying to do is determine whether buyers are in control or sellers are in control. The news or whatever other reason is behind the move really doesn't matter. So you really don't need to try to figure out everything that's going on. I mean, if you start trying to decide, based on what the Fed is doing and what all these economic indicators are telling you and so on, which way the market's going to move. Of course, they're interesting and we need to pay attention to all that to have a general idea. But from day to day, if you're trying to figure that out for yourself, there's just way too many things to put together for you to, really determine the direction of the market. So at the end of the day, what matters is price, right? Price action. And if there are more buyers than sellers, price is going to go up. If there are more sellers than buyers, the stock or that underlying market will drop. And so if you have a slope higher, you have a lot of momentum, right? The higher the degree of slope, the better, right? The steeper that slope to the downside, the more momentum there is to the downside. So it's very, very simple and very visually easy to use as a trader. And the reason why I like the 20 rather than just drawing a line across price is because when you get to those points where you get a pullback, right? If we were just looking at the slope, something like this here, we could easily mistaken that as the start of a new downtrend, right? When all it is a bit of a retracement before a continuation of that move. So when you see that cut through there, while the 20 remains flat or maintains its slope higher, then you know it's most likely just a matter of time before this turns around and starts going back in the same direction as the overall trend. Okay, so the 20-period moving average in blue, and the other things you see here that are part of the indicator, the little diamonds, these little green diamonds or red diamonds that you see here, those are what are identifying what we call the setup bar. Now, whenever you see those appear, that means it's giving you a heads up that there may be a trade to take soon. We're not quite ready yet, but it could be any day now, okay? And of course, if it's green, it's getting ready for a long setup. If it's red, it's getting ready for a short setup, okay? Now, when the arrow appears, that's when you actually want to take the trade, okay? And I'll explain which ones we want to take versus another. We don't want to take every single symbol here. So if you're looking at every single one and trying to say, hey, you know, this one didn't work, this one didn't work, this one didn't work, most of these we will not take. We're going to take certain trades with this indicator. Come 2 training classes where we will explain exactly where, but in a few seconds here, I'll tell you the easy way to do this, okay? So the arrows get you into the trade. And then from that point on, once the trade is actually triggered, as I call it, the bars will all be painted the same color as long as we're in the trade. So if it's a long trade, every bar after that will be painted green. And the reason for it is so you don't get scared out along the way, right? Jeff and his team designed it this way so that it helps you remain disciplined, not worry about it, and keep you in the trade until you see that exit flag. Now, what you'll notice many times is that that exit will get you out very quickly. You see how we took this trade, but it got us out immediately. It didn't risk giving back most of those profits, right? And that's what I love about this more than anything. If we do have a profit, usually it locks it in. See how up here took us out way before that actual drop happened, okay, or started. So keep an eye on that throughout these examples. You'll see that over and over again. So as I said, it's really designed to get you out of a trade immediately as soon as it starts going against you, but to stick with it when you catch a nice runner. So even if you were to take every trade, you'll notice that the ones that are losing trades are very, very small. And all it takes is one of these winners. And believe me, there'll be a lot more than one, but one of these will overcome many, many, many of these, right? So that's the whole idea behind it. But what I want you to focus on, as I flip through examples, and again, please type in your symbols if you want, is to only, what I want you to do with this is only take the trades where you have a sloping 20-period moving average and where the trade is near the 20. So for example, since this is green setup and green trigger, you want the price to be close to the 20 and you want the 20 sloping higher, right? So that's a textbook trade there, okay? This one got us out a little early here. So be it. I'd rather take a portion of that move than wait too long and get caught in the reversal, okay? But when it's flat, when the moving average is flat or there's no clear trend, like a consistent higher highs and higher lows, right? You don't want to take those trades. So avoid them unless there's some sort of a breakout. So for example, here, this trade here, when this drop started, this was part of the COVID lockdown, February, March for the SPYs, right? So if you look at the 20, it had started to slope lower, but it was very early in the move. So it might even be difficult for you to say, hey, we have a nice steep drop there, right? But what happened here was this, and this is one of the main things we teach you in the training class, is when it takes out a prior low like that. So it's a breakout, right? So we went from higher highs and higher lows, and we instantly put in a lower low there, along with that trigger, while the 20 had already started sloping lower, right? So that was the only difference with that symbol. So when you get a setup that takes out a prior high like that, then you can jump in even if the moving average isn't sloping higher. This one here, you see the bar had not taken out the high yet. So I would not have even taken this trade here, even though it worked out very well. What you could do is, once you see that signal, is just wait for that high to be taken out, then jump in, okay? That's a safer way to do it. And to me, that's the important thing, is to eliminate risk, okay? So let me show you a few more examples. Like PayPal, for example. PayPal, you know, I got on a real nice run. But if we look at this, PayPal, and you only focus on the trades that have a high degree of slope. Now, the slope is a little subjective, right? What degree of slope should we look for? For me, about a 45-degree slope like that is what I would consider significant. So you can take slighter slope, but that to me is significant. So this one here is very significant. So this is a no-brainer trade right here. When you see the setup and price is very close to that 20-period moving average, and you have that kind of slope, boy, oh boy, you're just waiting for that, and that's beautiful. And you jump in, and you just, you know, everything is green, and you just wait for that exit symbol, okay? And I'll show you another way how you can trail your stop along here using the expert commentary, which I'll show you in a little moment. Now, PayPal has just triggered short as well here. Now, you can say this is far from that 20, so this is a riskier trade. So, for example, I personally would not take that trade being far away from the 20, but if you're more of an aggressive trader, you may want to consider that. How many of you have traded Amazon recently, right? I'll go through some popular symbols and then others that are not very popular. Oh, I see some of the YouTube crowd has put in symbols. Great, thank you. I'll cover those as well. Here's Amazon on a daily, right? You can see sometimes you get a more gradual slope, right? Still works out well, but what you want to avoid is all of this chop, right? You know, where most traders lose money is in the chop, is when there is no clear trend. And it can be difficult when you're in the heat of the moment, but if you just step back and think to yourself, do we have a situation where there's higher highs and higher lows? We do not. So if you have trouble deciding what is the trend here, is it an uptrend or is it a downtrend? If you can't answer that question, there is no trend and you want to stay out of it. What you want to do is, once this consolidation carries on for a period of time, is just mark the highs, right? And when you mark the highs here, I'll draw it in roughly like that. And then you get a break out of those highs. That's when you want to start taking those moves. So here you might have wanted to jump in. Then you had a slope. Now you wanted to take this one. Unfortunately, we would have been in for only 2 days. Break even or a small loss here. And then the next one would have worked out nicely. Again, got us out before that drop. That's what's important, right? And then when you have slope here and price is near the 20, now that's an easy one right here. And it may not look like much, but if you look at the price at that time, is about 1950, when as high as about 2,500 there. So these can be substantial moves. That's a high price stock, but it works the same across the board, right? And on any time frame, I should say, okay? So here's the weekly chart. Again, once it started to trend, boy, these were easy trades to take, nice and consistently. So you see, you may say, hey, why didn't you just get in here and get out up here? Why all the ins and outs? That's to protect ourselves, right? When it starts to pull against us. We don't know whether this is going to be the start of a big move lower or whether this is just a regular retracement. So the reason why we programmed it this way is nowadays commission is basically insignificant, right? There's a lot of brokers with free commissions, others with very inexpensive commissions. So I'd rather get out and then back in here to make sure I'm out before any significant drop. Okay. Now, there's always the chance that a stock can gap against you, right? No one can prevent that. But that's why those money management rules that I talked about earlier are super important, right? If you've only got 1% of your overall account balance or even 5% in there, and you get a big gap against you, you're still not going to take a huge loss. It's not going to wipe out your account and prevent you from trading anymore, right? So that's the important thing. But this is the kind of thing you want to follow, right? Tesla has probably been the most popular stock these days, right? This is the weekly chart, okay? And here's the most recent move here. So, now this is, the numbers are post-split. The move before that obviously was much larger, but still post-split, we went from about 150 here to 350, right? So more than a double. Just an incredible move. But the important thing is, if you just follow those rules, and again, in the training classes, we will go over in detail what you want to look for and what you don't. You want to avoid all of this. There is no point in this at all, right? None. Now, longer term, right? Here's that monthly. Again, on a break of the high of the consolidation is when you want to get in there. All right, not before, on a break of that high, but you'd still be in that stock. Okay, let me go back to daily to show you daily, and here it is, right? Just real nice moves, very, very easy, and very easy to stay in it the way that Jeff and his team designed it. So let me go and look at some of the symbols from our YouTubers here. Let's see. There's no name, but I see RCL. So Royal Caribbean. Yeah, this was one of the cruise line stocks, and this is what happened to them, like many other stocks, when the COVID lockdown happened, right? And this is very important. Very, very easy one to get into because we already had a significant slope lower here. And at the time, we were taking out the lows of this range, right? I drew the line a little too high, should have been a little lower here. But you can see that we initially flushed lower, and look at that. This trade got us out even before we moved below the 20-period moving average, right? Like that's what I love about it. I can sleep knowing that it's going to get me out before, even if this continued on, right? And I didn't make that profit. It's much more important not to lose than to miss out on a profit, right? There's always another trade, but you don't want to get caught in a big move against you. But here, we had moved down here and then started consolidating. You can even see that there was a diamond here and then no arrow. And you will see that from time to time, right? You might see a diamond with no arrow that follows it. What that means is it was giving you a heads up that there may be a trade soon, but then those 6 indicators and oscillators that are built into the formula never lined up properly, right? There was at least one that had not lined up, and therefore there was no trigger. We set up again, and then we followed the trigger once we broke that low. And so that was a pretty easy trade to get into, and look at that. Now, often you will get a retracement where it'll get you out, and then another one getting you back in, and so on. This was just a flush. Unfortunately, those cruise lines really took a beating. And again, it got us back out before we gave back most of those profits, right? So very important. There was a trade here recently where we took out that high. You see, we took out that high and off it went. And we had a setup recently that never triggered. Friday, we had a bit of a selling. sell-off here on RCL. Ravi is asking to see ITC. Let's look at ITC. Ooh, let me try that again. ITC. Let me see. I don't, Ravi, I'm not sure why I'm not getting a symbol for ITC. Maybe it's ITC ordinaries here. Let's try that. Let me know what the name of it is. Maybe we can look it up. But again, you can see that actually there was a trade here recently where you'd still be in it there. And that's a nice one to take here, again, because not only do you have downward slope on that 20, but this is when all those lows got taken out, right, of that range. You can actually see a little channel in here. You can box it. And once we broke out with slope, that's a no-brainer trade. And we're likely to come down to the March lows to test that. So this trade probably has a lot more life in it. But again, the easy ones are when you have slope. And you see how sometimes it will get you out, right? So you can say, hey, wow, I missed all that. But, for whatever reason, those indicators, went their separate ways here, and it told us to get out at that point. So still a decent trade, but you're going to miss the odd one every once in a while. Scott is asking for APPS. Let's look at APPS, Digital Turbine. And here we go. So for the longest time, most of these you would not have taken, okay? And then it was breakout of the highs here. You would have had to wait a candle or two to get in there on that. And same with this one here, but that worked out nicely. This trade here that had slope, that was a no-brainer, the recent one here. So that looks pretty good. Let's look at the other time frames on this to see how it would have done. And yeah, so again, if it's flat and you're not comfortable with it, don't worry about it. Even if it does that, don't go and kick yourself later. There's plenty of trades that work out. But the ones that take out the high, okay, especially, and please listen to me on this. The reason why a lot of people look for stocks or markets that are either at 52-week highs or even better, all-time highs. The reason for it is there's no resistance overhead, right? Usually 52-week highs, there can still be resistance overhead, but all-time highs, those are usually where you get your runners. So when you get a stock, especially one that's in favor, breaking out to a new high like that, and there's a trigger and there's slope on the 20, it's really hard to lose on those ones. And that was a monster trade, taking us from the $9 level. Well, it's still in it, and it's currently at $32.79, right? Monthly. And there it is. So, for the longest time flat, but this one here, look, overcoming the high, and off it went. And this one here, we already had slope, so it was a no-brainer trade. And now we're back to those highs, right? So really nice looking chart there. Thanks for that one, Scott. Let's see. Someone else is asking for RBII. RBII. Oh, is it a pink sheet? Rising Biosciences? Sure. Let's have a look at that. So you see flat all the way along. Now, hopefully we'll come across one that has this kind of pattern on the monthly. I'll show you one of my favorite trading patterns. But when you consolidate for months, if not years, and then you break out above the highs of that consolidation range, that's a no-brainer. Now, for whatever reason, it didn't trigger here on this one. So be it. But this is a micro penny stock. And sometimes these don't necessarily trigger until we get a little deeper into this. But breaking the highs of that consolidation, that is key. And especially if you're breaking out to an all-time high at that point, even better. Okay. So let me see here. Let's look at a few other popular ones before. Oh, and I am going to have to get to show you the expert commentary and how we scan for these. Okay, let me show you some of the more popular quickly before I leave here. So Microsoft, right? Look at these trades. I'm telling you, if you focus strictly on the ones that have a clear, strong trend in place, okay, with momentum, meaning that slope on that 20, and the price is near the 20, and you get that trigger, all day, every day, I'd be taking those, just like this. So easy to do, okay? And there are so many that you are going to, on a nightly basis, have to, or, you know, if you're trading, say, the hourly, on an hourly basis, you're going to have to decide which one or two give you the highest probability for profit, right? And it really starts with slope. So the first thing you want to look at is the degree of slope. Second is, am I breaking out to a new high or not? You know, that sort of thing. But we will cover all of that in the training classes. But you can see just how effective it is. Look at the weekly on this. Sure, there's portions we miss. We don't care about that. We care about the ones we catch and the ones that we make money on and don't give it back once that trend is over, right? That's what's important. And again, if you're more of an investor than a trader, right, and you plan to be in the longer term, especially if the stock is paying dividends, what you want to find is a stock that has a long consolidation, breaks out of those highs. And, you know, obviously once you break out of those highs, the 20 is going to start sloping. So you don't even have to worry about, am I identifying the right breakout point? If you want to make it easy for yourself, just wait for there to be some kind of slope and then jump in and hold. And that could be months, years. And you don't have to hold the whole time. You can scale out of here once you're happy with the profit, right? But imagine holding this long, collecting a dividend if it pays a dividend, maybe even selling covered calls along the way. I mean, and it would only, and you only have to look at it once a month, really, right? So super easy. And oh, before I do that, let me just show you futures contracts, like gold, for example, gold, oil, that sort of thing. Here's the monthly on gold. So there's a beautiful one back in here from 09 up to 2012. Then we went through a bit of a move lower, a consolidation phase. And look at this, a break out of the highs. Ever since this, I have been talking to my members about gold, and look at the move we've seen so far, right? Off to new highs now. Now that we're in new high territory, I would expect continuation of this move. We look at the weekly chart, there it is. Again, no-brainer trades with slope, and the daily, you know, there was a nice one here. We've gone kind of silent. Now we're going to wait for a breakout to take out a high here, and off we go. Okay, so I'm sorry if I wasn't able to get to every symbol. If there's time at the end for more questions, by all means, let me show you quickly the expert commentary here. So if you go to view here at the top left, click expert commentary, it'll bring up this little box, okay? And this box will tell you a bit about myself and trading wins and so on, and about Veracity. But what's important about this box is if you look to the far right, the most recent candle, there is this little black triangle over it. It always defaults to the most recent candle. Now you can move this by clicking on top of another candle or by using the arrow buttons here on the top of the expert commentary box, okay? But what's important, and let me go to here. When there is no trade, okay, this area here between these two paragraphs on the expert commentary box will be blank, okay? Now, if we move forward one candle at a time, and we get to the point where there's a little diamond, now there's text populated here. And again, it's consistent. If it's green text, it's talking about a long trade. If it's red text, it's talking about a down trade, okay? And this is telling you to be aware that there could be a long trade coming up soon, Okay, but it also goes a step further to tell you that to confirm that this is a valid buying opportunity, you must wait for a trade above the setup bar's high. So if you're looking at this, say after market hours, and you're interested in taking this trade the next day, but you're going to work and you won't be able to be in front of your computer at 9:30 a.m. Eastern, what you can do is exactly the price level that this needs to break above for the trade to signal based on what it's telling you here. So you can set up a buy stop here to get you in, right? But once it's in, now as we move forward, candle by candle here, right? Once it's in, once it triggers the trade, it'll tell you that now it is in a long setup. And if you're an options trader, it'll tell you more or less how far an expiration you want to look at, what kind of delta you want to look at, a bit about that. And then from that point on, with every candle that it adds, it's also going to tell you where you might want to put your stop loss order. Okay, it'll actually give you a price level. Now, this is the futures contract for gold. So at that point, it was 1794.10, right? And as we move higher, right, you'll either keep that level, okay, or we get to a point where it will change, okay? Now and there you go, 1930. So now you move it up and you move your stop to 1930. It is going to tell you exactly where to keep your stop until, the exit flag shows up and you get out. So a very, very handy tool. What it does is really kind of hold your hand throughout the whole process, okay? Makes things very easy. The other thing that's great here is the scanner. So if you go to the power console, top left of your Metastock platform, and click on Explore here, what you want to do is go to the bottom. It's in alphabetical order. And here you'll see Vora Veracity setups or Vora Veracity signals. The difference is the setups are these little diamonds, meaning it's giving you a heads up that maybe a trade's coming. The signals are the arrows, meaning it's already triggered. So I prefer to scan for the setups, okay? And then you go to the bottom here and you pick the group of stocks or futures contracts, et cetera, the instruments you want to search. Now, for this exercise, I'm going to search the 30 stocks in the Dow Jones 30 and the 100 in the NASDAQ 100. Of course, there are thousands here that you can search through all different markets, okay? You go to the right here, you pick your time frame. You can pick 5 minutes, 30 minutes, whatever it is, customize it, daily, weekly, monthly. I'm going to stick with daily here and click start, and you will see this box pop up. And quickly, you'll see that we selected 164 instruments here, and look how fast it's going through it, right? So this has saved me a ton of time, but you can search during market hours, you can search after, and quickly, you have here 19 out of those 164 have potential setups. It rejected 145, those do not. Now, once this comes up, what you want to look at is the long and short columns, the ones that have a 1 beside it. So see this Forex Euro Swiss has a number 1. That means that is a long setup. If it has a number 1 in the short column, that means it is a short setup, okay? Now you can sort by just clicking on the heading. You can also sort by price, okay? You can print this, you can cut and paste it into a watch list, whatever you want to do, okay? But most importantly is this column called slope. The slope column is the slope on the 20-period moving average. So what you want to do is sort these by the highest number, both highest negative number for short trades or highest positive number for long trades, okay? So that's what you want to look for. Now, generally, a number that is 3 or higher is best, okay? These ones here, there's a minus 6.9 here on CDNS, okay? The positives don't really have any over that, but again, we only searched 164 instruments. I will actually give you a couple of setups that I found by doing a broader scope before I came on, okay? But all you have to do is highlight it, click on Open Chart, and you'll see it. And now you can tell whether this is worth looking at. Is there a slope? Are we near the moving average? Are we about to take out a higher low, right? So this one's not bad. And considering it's a $100 stock, it has lots of room to drop. Then, of course, you can look at things like support resistance levels, Fibonacci's, all that stuff we cover in the training as well. Okay, so this is great. Fantastic. And I'll pass it back to Jeff in just a second. Before I go, let me give you a couple of setups you may want to look at here. STRA. Which one was it here? Let me try. Oh, there we go. So very significant slope lower, and we're getting a setup here to the downside. Okay, and I don't see any support down below here. You might want to check the weekly or the monthly for that. Okay, couple others. PTR. The reason why I like this one, again, it's been consolidating for a while, and if you box this, right, or at least mark the lows, right? So it broke out of the lows, came back to retest it, and now is getting rejected. We have a slope on that 20, and it's about to flush down to the March lows. That's what it looks like, right? Again, you don't want to jump ahead of the train. You want to wait for the proper trigger, but that is another one that looks good. PDD here. Oops, let me try that again. PDD. Oh, yeah, there we go. This is another one that's about to take out the lows and has slope, okay? And let me see, I think CPRT to the long side, I believe, came up. Yeah, still has slope and is setting up again. You want to wait for it to trigger, and this, you want to wait to see if, or you want to check to see if that's a 52-week high or an all-time high that it's about to break out to, okay? So with that, again, I just want to say before I pass it to Jeff that those money management rules, please, you're all going to get a recording of this. If you didn't write them down, please do watch the recording again and write those down. Those will save you from any big loss going forward. And the Veracity signals, just focus on the ones with slope near the 20. I think you'll do very well. But thank you to everyone at Metastock for having me on. And with that, I will pass it back to you, Jeff, so you can tell them how to get a copy. And of course, if there's questions, I'll stick around.
All right. No, well, you did a good job of answering your own questions. So I think we're good.
Okay.
We did have a lot of questions that came in about the recording and that kind of stuff. And that, if you're listening to GoToWebinar, or if you're watching via GoToWebinar today, the recording will automatically be sent about an hour. If you're on YouTube, well, just refresh the page. You can just back up and go forward. And that's going to be where the recording sits, is on the YouTube channel. Vince, great job today, as usual.
Thank you. Thanks for having me on.
Thanks for coming, as always. Okay. All right, let's go ahead and do this real quick. Vince does such a good job. And like I said a little bit earlier, Metastock's been such a popular add-on for him and for Metastock. A lot of we're actually a lot of our sales reps are actually using quite a few of the setups and the patterns that he actually kind of talks about. And it's something that works very, very well. The other thing I really like about Vince's presentations is like the money management and the focus on the basics and that kind of stuff. So he did a good job of showing you scanning and the expert advisor and how everything puts together. The thing I'll add to that is it's been an extremely popular product. It's going to include what we call a template, the setup exploration. That's the scan that gives you a list of things that you can watch for a setup or a signal for the next day. There is also the trigger exploration. So if you're running it during the day, you can actually run it and say what's triggered today. You've got the expert advisor, the commentary, the stop losses, all of that is fed in fairly automatically. And it's been a very, very popular product. We normally sell this for $19.97, so $1,997. Here at the summit today, if you want to get it, we're going to back it with our 30-day money-back guarantee. So there's going to be low risk for you as a trader. 997 is what you're going to get. As part of that, you're going to get the 2 videos that Vince talks about. And if you don't have a copy of our award-winning Metastock program, we're going to include that for you too. So to take advantage of that, you can give us a call, 800-882-3040, or you can visit us online at metastock.com/saleschat. It is a big part of our Summit Traders Action Pack, where you can get Metastock real-time, the 3 months, the Zenith data, which is, we'll talk a little bit about Zenith coming up here, but Zenith is a product that they have thousands of reporters and hundreds of bureaus. It's an institutional quality news and data service, so it's one of the best out there. You'll get Veracity. You'll get the Fulgent AI product that we're going to talk about in just a second here. You'll get Trade Trend, Patterns for Profit, the Top Trading Toolkit. You'll get a premium subscription to the learnmetastock.com website. You'll get a training video that you can go through that's called Unleash the Power of Metastock. It comes with a workbook and a series of videos that are going to teach you everything about our Metastock software program. You'll get 2 years of Stocks and Commodities magazine for free. And we'll even have somebody that'll help you install everything and make sure everything's running for you. And you are welcome to purchase any of the products that appeal to you. I will say though, $4,805 is actually what you would pay for this if you bought it just in pieces off of our website. We've actually kind of put a more than 50% discount on it. We're going to do it for $1,985 today. And I would recommend you try it. We'll let you keep the products that you want. If there's things that you don't like and you'd want to cancel the subscription on or return for a refund, you can do that. But to do that, give us a call. And also, if you have any questions, give us a call. Our phone number is 800-882-3040. You can chat live with us at metastock.com/saleschat. And you can also purchase this offer online at metastock.com/summit deal. So I hope you're enjoying this session today. If you're new to the channel, Frenick, welcome to the channel. Welcome to your very first Metastock channel experience. Make sure to like and subscribe. It does help quite a bit. And let's go ahead and thank our sponsor. So let's go ahead and do that. Oh, I don't have this. We'd like to thank our sponsor, Stocks and Commodities Magazine. They do a great job of sponsoring us. There's been a slide. I'm missing it here, but they do a great job, and we appreciate the sponsorship. So our next presenter is Ed Downs. Ed and I have about a 24-year history. I remember talking to Ed quite a bit when I started here at Metastock 24 years ago. At that time, he was selling some methodologies that kind of partnered in and paired up with Metastock. He also created a software program that's called OmniTrader. About 2-3 years ago, we were talking about some of the advances that he's made in artificial intelligence when it comes to trading. And oh my God. We can hear that. How you doing today, Ed?
Oh man, I'm doing great. Can you hear me okay?
Oh, loud and clear. You turned on your microphone and I just about jumped out of my chair. So
it wasn't me actually. I don't know who it was, but I just now turned mine on. So
well then there's only one other person that could be, and he's over there.
Hey, my mics were muted. Don't look at me.
All right. Ed, let's see.
Yeah.
You're going to talk to us about AI. I was going to tell everybody how awesome you are. You're very awesome. I'm going to go catch my breath from that startle. So your turn.
Take a coffee break there. You deserve it. I just watched that last session. That was awesome. That was really, really great. Really great stuff from Vince. And I want to thank you again for having me on the summit. I always look forward to doing this with you. As you said, we go back way, way back there, many, many moons ago. When my company, which really specializes in artificial intelligence pretty much now, but for the entire time I've had the company, we've worked on automation stuff. And so way back in the day, 91, actually, it's going to date us here, we did the utilities for the DOS version of Metastock. And that was how we got to know each other, of course, and the rest is history. So love your company. I've been to Salt Lake City, and I met, of course, Steve Akalis way back then. And you guys are just awesome. So I got to say that about you, because your tech staff has helped me to no end to get the stuff really good. And as a result, it is really, really great software. So again, I'm really happy to be here. I am suffering from Austin allergies today. I'm just going to tell you in advance. So I may have a little coughing here, but I'll try to keep that under control. So our company that really works on the artificial intelligence and is putting it out there in various platforms is called Fulgent AI. And so today we're going to be talking about trading call options in Metastock for substantial gains. And actually, in my opinion, there's some things you can do that are very straightforward in Metastock to make money trading call options. You don't need our software. Metastock is enough. And so this really isn't going to be a sales pitch for Fulgent AI. I'm going to show you what we have, because the artificial intelligence is designed to find awesome signals. So I will, of course, do that. But the first part of the seminar, I want to talk about Metastock and just using Metastock 17. And we'll talk about option scope. We had an option problem a little earlier today. I don't know if that's been ironed out, but I guess Jeff will tell me in a minute here when he comes back. So I may not be able to show that in the software, but I can show you, how it works. So my primary objective is to help you with Metastock trading call options and maybe to dispel a few of the myths about trading them. So let's dive right in here. And yep, there I am. Okay. So we're going to look at Metastock 17 and using it to find great option trades. I will talk about AI, the AI that we've been developing for about 25 years, and how that can help you. And we'll look at a mechanical option trading approach. Okay. So we're going to move right along here. First section is the power of call options. And they are powerful. I want to show you the eye candy first. Usually wait till the end for these things, but we have a little simulator that we can simulate trading in and generate equity curves like this. This is trading call options and holding them basically to expiration from the signals that we have. And so this is like, so risking 30% of the account, which is quite a lot of risk. That's a lot. But the account in the simulation goes from 10,000 to 176,000 just buying calls. So that kind of gets your attention. And I've seen people, various people on the internet talk about doing this, instead of trading the stock, you can trade the calls. So my opinion is you can get into really fancy spreads and stuff. And what spreads basically do is they reduce risk, which is a good thing, but they also dramatically reduce returns. So if you're doing a vertical debit spread, if you're buying vertical debit spreads where you pay money for the spread, right? You're buying a call and selling a call. The one you buy is a little more expensive, and they kind of hedge each other out. And so your profit is limited. It's a good way to trade if you're really trying to reduce risk on every trade. But like I say, at the end of the day, it's also about how much money you make. When you think about call options, if you place a small bet, you should never take a big bet. This simulation is whatever it is, 3% of the account on each trade. So fairly small amount, maybe even go down to 1 or 2%. As long as you don't risk a whole lot, all you can lose is that option premium. And I know those who are trading options know this, but so that is a low risk proposition. If on a trade, I only am going to lose like maybe 1% of my account, whereas if I own the stock, I could lose a lot more than that. So just look at it from the perspective of the fact that call options are not necessarily, dangerous. A lot of people think they are. If you have a good directional impetus in the chart and the odds are in your favor, the odds will win. And that's what we're going to talk about in this presentation. Hope I get you excited about it. I am. Before we get going here, I've got a report that has that chart in it and some others, also shows the full history of those trades. And the way you get it is by going to fulgent.ai/Metastock, and you're going to see our Metastock products on there. Of course, and up in the upper left here, there's this option report. So you can get that. There's also a chart pattern book that goes with our chart pattern engine, which is another product that Metastock is selling for us. And this webinar won't be about that, but we're going to stay with AI only. But this is that option thing I just showed you is there. Okay, so let's do something here. Let's play some odds. Let's say we have a couple coins or a coin. We're going to flip it, but the rules are a little different than the typical game, maybe a roulette game, in the fact that if you flip tails, you're going to lose $1, but if you flip heads, you're going to win $2. So would you play, and how would you expect to do after, let's say, 60 tosses? And of course, we're going to make this analogous to trades. course. So if you take that and you put it in Excel and simulate it, those exact odds, this is kind of what happens. Because you win twice of what you lose, even though it's a 50% chance, this is what occurs, because when you win more and you gain. So on average, 50% winners, 50% losers, but you're winning more. Wouldn't you love it if a roulette wheel had those odds? It'd be awesome. Well, they don't, but that's actually worse than that because they have the white square. But this is kind of what happens, and you can go into Excel and try this. It's kind of fun to see, and just keep running it with random numbers, and all the curves some of them go straight up, but they'll all pretty much make money. So now let's take that and look at options, because if you look at this is an example I pulled from REGN, which is Regen, I believe, and looked at the stock was at 343, and so if I'm trading the stock itself, I'm going to have to put out this pretty large price. There's a signal down there, pretty large price, and after a while, the stock gains. You can see about 8%. That's what's marked there. Well, if I had bought the $2.90 call option, and of course you have to buy 100 of them, 100 shares of stock, your risk is $290 as opposed to whatever this risk is. It's a lot more than that. So you're risking $290 to control basically, what is that? 100 is a $37,000 position. That's a big position. That's what you're controlling with that $290. Isn't that just crazy? So for that very small price, $2.90 per option, $2.90 for 100 of them, you're controlling that stock. The stock goes up 8%. Well, the option doubles in that time. So there you go. Here's our game. If it didn't go up, the stock deteriorated. You could sell the option maybe for $1 and recoup some of that. But the thing that we're simulating here is holding to expiration, which is what I'd say most option traders that are taking a position, especially recently with the amazing bull market we've had, will hold to expiration. So we can, if with a 2-to-1 payout, what we want to do to make that happen is to find trades with a strong directional bias. You need to only trade things that are really, really likely to go up. More than 50% is best. As we've seen, 50% can work as long as it moves, but you'd like to see a 60, 65% kind of an accuracy of what you're trading. And you want to pick an option that's based on the move that you think is going to happen in the chart. You look at the chart, you pick the option based on that, and then you hold to expiration, which simulates loose stops. Because in that case we just saw, if you lose the $290 or $2.90 per share, which is equivalent to a $2.90 loss in the chart. And that was a $340 stock. So that is a really tight stop. Okay. But that's your risk. So we want to keep our risk low, keep our investment low. And, if the winners outpace the losers, you're in like flipped, as they say. Okay. So let's talk about Metastock. Love this program. This software is so great. Been tracking it since they put it out, and it is just, there's no wonder it's the leader, in technical analysis, stocks, commodities, all the polls. It's just amazing stuff. I know you guys know that. That's why you're here, but I just got to say it because it's just true. So what I want to do is show you in Metastock how you can do this, and I hope I get you excited about it because it's really not that difficult. This is a picture of the MACD crossover expert in Metastock, and it is really good for playing this game. So let me show you. It's not just a game. I mean, it is money that we're in the market, working with. So, but the more you look at trading like a game and don't get all balled up in the emotions of it, the better you do. And that's just a fact about that. So here's a chart of Apple, and let me just go ahead and bring up here. I'm going to add my template. All righty, I'll go down here to there it is. Yep. Okay. And I'm going to back out a little bit here. What I've got on this is a couple things. This is the MACD indicator down here. And of course, it's generating a signal. This is the Metastock. It's an expert in Metastock. So you can just, it's a template actually in Metastock. I modified it a little bit, but if you just plot that template, the MACD 3-bar exit template, you'll get this basically. What I've added to it is a 20-period moving average. And there's a reason for that. What you're looking for is any reversal system that is clear It generates reversals at pullbacks. So you're trying to find the things in the MACD histogram that have pulled back below the zero line and now are crossing through to the upside, which is right there. That's where you want to trade it. So back here, it would be right there. And back here, it would be right about here. Of course, the signal was already in, so it didn't really show that one, but you get the idea. You don't want to be, you can be trading up in here on these little crosses through like this. Obviously, with Apple is trending like crazy, that would have been fine. But you're looking for those points that turn up. So if you look at them, and let me go through another couple more charts here, just see if we can get a few more. Yeah, all right. So let's see. So we go over here, we've got kind of a saucer pattern formed. Here's a very nice a point that is called by this. So we're essentially looking for a pullback to the 20-period moving average and then a signal in the new direction. I'm going to go forward a little bit more until I get, these are Dow 30 charts, until I get to one that has a nice signal on the right edge here or close to the right edge. This was really pretty good. So if I look at this one, MACD hit pulled back below the zero line, the moving average crossed through the moving average, and there's that signal right there. So the other thing that you're looking for, let me go ahead and pull up the volume line here, is volume participation if it's there. So if I look below that signal, I see the volume did in fact pick up right there quite a bit on that turn. But the other thing that this technique tends to find are what we call higher lows. So here's a low point. Of course, that was what the COVID low, I guess. And then you have another turn formed here. By that see that pullback below, that's what we're talking about. So that is also a pivot, and it's higher than this one back here. And if you follow up, now there aren't any others over here that pull back down through, but let's see, let's look back on this side. Here's a pretty good one. So we pulled back there, came through. That low is higher than this low. This is just basic trend following stuff. Also, though, you want to make sure that you've got these moves going on. You don't want to trade a little bitty wiggling thing that's just kind of going sideways and not really moving. So you have big swings in the oscillator. You have your signal point. You're going to scan for that, right? You're going to use the Metastock scanner on the right edge to find these things. And then you just look at the chart. Did you pull back to the 20-period moving average and are going back up through it? And do you have a higher low? And do you have volume? Look at this volume right here coming in, right there. That tells me this thing's going to move. And let's see what did it do. Of course, it's split, but at these prices, so it goes from about 125 to something like 140. So if you bought like the 120, probably the 128 call at that point, it might cost you for $100 stock, maybe $3 or $4. But you go 15 in the money, that thing's going to go from $3 or $4 to like 18. So that's not 2 to 1. That's what, 5 to 1. Okay. And I wish I could show you a historical option chart to show you that effect, but I know you've seen it. Let's go through a few more here and just look at them. Okay. So so here we go. Of course, this is the pandemic low. I'm looking for a more normal market here. I'm kind of looking back in here to see if I can see wide swings. Okay. No, wide swings on the oscillator. Still don't see any. Okay. Okay, here's a pretty good one. So this one turned up. It was not a higher low. The low is actually lower than the prior low. So that one will be suspect. It did end up making a nice little move here. Now, we haven't talked about the short side. On the short side, you're looking for exactly the opposite. You pull back to the 20-period moving average. You get your short signal and, pulling back to their short signal, and it's a lower high from the prior high. But just using these few simple rules, you can find really good, candidates that have moved up and down on the right edge with the Metastock Explorer, looking at, say, the S&P 500, and you'll find, easily any day of the week, you'll find 5-10 candidates on the buy side and 5-10 candidates on the sell side. One really cool thing you can try is actually hedging by buying a put and a call at the same time, as long as you have the higher low for the call and the lower high for the put. And any given day of the market, I don't care what's going on, you're going to find charts that are going up and charts that are going down. And if you've traded for a while, I know you know this, but it's really cool. Okay, so that is that. Now, this is the MACD template from Metastock, 3-bar exit. There are other really good systems in Metastock. So what I would recommend that you do is go into the system tester and just run anything that's going to generate a reversal signal. so you can find those higher lows, anything like that. And just rank them, and then tend to go, this is like a 2-year test, and go back and look at the ones, the top of the list. There's that MACD right there. Here's Bollinger Band, very nice system for finding those things. Relative strength, very nice system. I kind of like MACD. It's really simple, but that's what I would do, is just rank them over a year, 2 years of data, and then go look for those signals in the Explorer. So this is the system tester. You want to go into the Explorer. Okay. Now, this next section is about using option scope. I hope Jeffrey's back, because I don't know if we can actually do this with the software. Did we get our data problem ironed out? Is he there? I can try it. Let me see here. Okay. Well, he's answering me, so I'll have to wing it here a little bit. We had Reuters option data was down this morning. I called into the help desk, which was Jeffrey's cell phone, and he said, "No, I should be good." Then he goes, "Oh yeah,
I'm sorry, Jeff's not at his desk right now, but I'll. What was your question? I'm sorry, Ed.
No, it's okay. We option data wasn't coming up.
Yep.
About an hour and a half ago.
No, let me.
So are we good? I can just try it. Okay, so to do this, I need to go and find, I'm going to try to, let's go ahead and what we're going to do is use the Explorer right now. So let me go ahead and go to Explorer, this guy right here. All right, bring it up, and we're going to try
Jeff?
it. So let's see, Explorer, where are we here?
Jeff?
Sure,
Hey, Ed,
yes.
just as an FYI, it looks like the Refinitiv option data is still under maintenance.
That's okay. We can do it without it. Not a problem. Not a problem. I figured it was not going to come back up, but it's okay. I need to find the MACD expert system. Here it is. So, because we're going to look for that signal. I'm loading a year of data. Don't need that much, but and we're going to actually, I'm going to go back here. Instead of looking at today, I want to go back a couple of weeks, because I want you to see, when I pull some options up, I want you to see what happened to them. So let's go ahead and do that, and we could actually go back a week. Yeah, let's go back a week and see what we get. That would be the 14th. Be this past Monday, and just see what we get. Okay, so there's that, and I'm looking at what symbols down here. It should be still set on what I had before, which was the S&P 500. Yeah, let's start it. Okay, and I really like how fast Metastock can do this. It's amazing. We can actually run an exploration of 500 symbols while we're watching, so it's pretty cool. I saw Vince doing that too. It's just awesome about the software. So we're looking for signals on that day, and there we go. Okay, all right, very good. So you can see I got lots of them. So we start, there is Allstate here. Let me open this up. What I'm going to do is pull this over. We're going to close this guy, and we're just going to kind of go through these. I'm just looking. I have not done this yet on the 14th. So I do want to ask, I've got text for here, is if there's any way I can lock the chart in to just show like this many bars, that would be awesome. I don't know if you guys know how to do that, but because it keeps going back to what I had. So, but that's okay. I can zoom in. It's all right. So let me go ahead and put the template on here again. My template, and it would be my modified MACD. So it has my Fulgent name on it. There we go. Okay, so it is seeing, let's see, it's seeing this buy signal here. Let's go ahead and keep going down. And look, what I'm looking for is a higher low, and it's not retaining that template, so that's okay. This is almost, if I put MACD on this, I keep applying the template, I would probably see, that we've got a kind of a signal right there. But this is basically what you do with the Explorer. You just keep going through charts, and what we're actually looking for is not today, but 7 days ago, which would be, or back on Monday, which actually happens to be right there. Now, if I could bring up an option chart, I'm going to show you how I would do it. And then I can't, of course, because it's down right now, but what you do is you go in here and you say, make an inner window, a new inner window, and then you bring up option scope right here. So you say right click option scope, and there's that problem. It's down right now, so I can't bring it up. But what I would do is pick the right option for this chart based on a couple of things. And so I've got that in my PowerPoint and I can show you, but I'm sure you see the idea here. You put the template on. I think you have to put the template on the first chart, and then it remembers it as you go forward, if I'm recalling correctly on that. So you'll know how to do that. But so you always see it. You always see your whichever indicator you're using, higher lows, 20-period moving average, all those things we talked about. And you go through each chart, you see a nice pullback. So, and I would do it actually live with the options if we could, but that's okay. We're just going to do it the other way here. Okay, hold on. And so go through this process of clicking through your signals. All right. And this is actually Fulgent. Our AI Explorer has this in-trade column here. That's why this is shown. The regular explorations don't have it. We'll look at that in a minute. But you're going through these signals, right? And so this is the process. Right click. By the way, you'll get this presentation if you go to fulgent.ai/Metastock and sign up for that report. It'll be included, so you'll have these notes. So you get a chart candidate. You make a new inner window. You right click option scope, which I just did. Then it's going to come up. Okay, when it comes up, it looks like this. And there's these sections here on the left. And I just love, this is so simple how they've done this. So your date filter, this is the expiration date of the option. And you want to go, 2 weeks out. If you're really sure, like you've got something that it's just got that perfect pullback, it's right at the 20-period moving average, and it is ready to go, you can go as little as a week out. I wouldn't do a couple days or 3 days. That's kind of gambling, but in a week is pretty tight. So you want to give it some time. And then, a near the money. So you have, 10% out of the money, or 15%, 20%, so on the strike price. So the strike price, if that stock was 125, you'd want to do like the 126, 127 if they're available. If not, the 130. So just near the money, but also out of the money. So just above where the price is for a call. All this inverts for puts, of course. And so near, close in, and this slide was created back in December. That's why it says 1220. So near the money and out of the money. So near and out. So just above your price. Okay. Then what you're going to do is pick an option. And so, you always want to trade this first one here if you can. That's going to be the closest one to your point that you picked. You want the volume to be more than 100 contracts. And this is hard to get on a lot of stocks, trade like 10, 20. And the difference in that, if it's really, really thin, like there aren't many contracts trading, then the bid-ask spread is going to be much higher. So in this case, you can see like this one is only 6 cents between the bid and the ask. Now, why does that matter? You're going to pay the ask. That's what the market charges you. You're going to sell it at the bid. So if you turn right around in 2 seconds and sell this option, you're going to take a 6 cent loss immediately. And there's a commission effect, but that's pretty small in today's world with the way brokers are now. So 6 cent loss. What you don't want to take on a $2 option is a 30-cent loss, or something like that. Now you say, well, why does that matter if you're holding to expiration? It's just a fact of options. I mean, you may actually want to sell the option if it goes sideways, and now you're like a couple days away from expiration, and you just are pretty sure that the technicals aren't going to line up for you, and you want to sell it. So that's a reason that if you want to get out early. But just generally speaking, you want to trade things that are very liquid in the market, just a much better market. And then you want the price to be somewhere between 50 cents and $3. Now, as a rule of thumb, these options that are, about 1 to 2 weeks out, close to the money, are going to be somewhere between 5% and 8% of the price of the stock, something in that range, typically. So like for a $30 stock, it's going to be like $1.50 to $2, somewhere in there. It depends on the volatility. There's a lot of factors that make the price higher or lower, but you want to be kind of in that range. So if you do that, then you basically, the next slide shows that you check the box on that option. Okay, I'm picking that one. And then you click open the selected option in a chart. So it makes a new chart and puts the option in there. And I love the fact that you get the recent history of the option contract. It's really, really great. So what you can then do is, I found this little trick. If you click window cascade, you're going to see the chart you were working on and this option chart right next to each other. And if you don't see it, you look at the symbols and find it easily and click on it. So you just drag that option symbol, that option chart, over into the other chart. And then, that's all you do. And now it's just sitting here. So once you have the actual option in the chart that you're trading the option, you can do some really cool things. I wish I could show you this but you can do it when the option data is available again. Is you want to put like a 6-period moving average on that option contract. This one's a little wild. Most of the time they're going to have moves to them. So if you're buying, this is a breakout trade, so it's not a pullback. But if you're trading a pullback, the option will have pulled back as well. And so what you can do is use the moving average on the option to tell you when to get out, if you want to get out early. Like I said, all this testing is, we're holding to expiration. That curve I showed you is holding to expiration. It's fine. But if you put a 6-period moving average on the option chart, and I have a lot of clients, and this is what they do. They do this on index options, make a lot of money. I mean, because you can see when the option itself, the option does not exactly follow the price. It depends on demand, depends on volatility coming into the market, a whole lot of things. So you can see when the option is suddenly getting weak by virtue of that moving average that's under it. So it's just really cool. You got these charts, you save them, right? They're sitting in Metastock, and you just are trading the option, plain and simple. Again, really good pullbacks with the methods I was showing you. Okay, and this, of course, is your first look at the Fulgent thing, which we're going to look at here next. Okay, so let's talk about that. And look at the time. We're good on time. We're actually really good, because I was going to spend about 10 minutes going through option trades in the charts there, but that's okay. So as you know, we do artificial intelligence, as Jeffrey said, and we have been working this a really long time. The whole idea, remember, I was saying, if you're doing this, you really want the most directionally accurate signal you can possibly get. You want, 65 to 70% of these things moving in your favor immediately. And so this is the reason we've been developing the artificial intelligence to look at indicators in charts, hundreds of them, to create these artificial intelligence knowledge bases. So we're going to talk about that next. So the question is, I already answered it, but so how do you find trades with the highest chance of success? Wait for it. Yes, AI, yeah, okay. And the crowd went wild. So there you go. It's AI. And so what our approach to it, there's lots of things out there. If you search AI for traders, you're going to find all these weirdo things out there. Lots of graduate students trying to beat the market with AI. It's hard to do that. We've been working at it a really long time. But what we finally came down to was the thing that you want to use is something called a genetic algorithm. And what that is if you look at this little population, let me see, this is better. You have these little squares, which are actually indicator relationships in the thing. So like RSI 14 less than 30 is like one of these. Maybe another one is close above the 200-period moving average. Maybe another one is volume is greater than the average volume over 20 bars. We have hundreds of them, of these things. And what it does is it randomly assigns, which ones it's going to look at. So all the purple ones it's looking at on a given rule. We call it a rule. It's actually called a chromosome because it's a genetic algorithm, but we call it a rule. And so these three things are true, and it says, is that profitable? And it literally goes through all the data, hundreds of thousands of bars of data, to see if that little relationship is profitable. So as it finds one, it sticks it in the knowledge base. So there you go. And it's doing this. So there's thousands of these things in there, and it's randomly picking values and trying them. When it gets a good one, it goes, oh, we've got something that's pretty valuable here. This relationship is profitable. Let's keep using this one. So it will take that profitable one, and it will do what's called mutation and crossover to change it a little bit. Add a couple more things in there. Like let's look at Bollinger Band crossover. Let's look at whatever divergence on some indicator, and it'll find something else that works good with that. So it keeps doing this to find rules. It actually comes up with thousands and thousands of rules. They're all different. And the end result that you're going to care about is that you get this knowledge base that has all these things in it. And of course, the knowledge base is able to call out where these signals are. And the signal is based on the rule firing on that bar. So we do this stuff every day. You don't have to worry about all that. I'm just explaining that's what it's doing internally. So we took this technology that we've been working on for 24 years this year, and we applied it to Metastock. And the way we did it was we took this engine that is generating these signals and put it separate. It actually is in the system tray. If you look in the system tray, you see an F for Fulgent, and that's it. It's a pretty big program, and it is going to that knowledge base and pulling from it. It's looking at all the indicators in this chart, hundreds of them, and calculating them to figure out, are any of the rules firing? You can imagine that could be a pretty compute-intensive process. It actually happens really pretty fast. And then when it finds, we've got conditions here that we've seen before, hundreds of times, and they were profitable like 80% of the time. And it says, you got one right there. That's it. So that's basically what the thing does. Okay, so let's see here. The product, I'm gonna bring up here next, has, of course, Expert Advisor. Yes, I'm getting into the AI now, the product itself. Expert Advisor, it has an exploration, so you can find signals on the right edge, and it has a system test. You can test it. Okay, so let's see. Down here, this is the interface we're going to look at next. It's actually driven from Metastock. There's a Fulgent AI selection here, and then you go into the engine interface, which is right there. All right, so we're going to do that next. And let's go and go over here, close this. And I'm going to close all here. No to all. And I think this is the right procedure to make sure. All right, I don't have anything hanging around. And I'm going to bring up some charts. Let's go ahead and we're going to, instead of that template, we're going to do the Fulgent AI stocks template. Okay, and let's see. This is saying to load 3. We don't need 3,000 records. We only need I'll put 500 in here. Okay, there you go. And make sure I've got everything right. Current exchange time, template, yes. If I did it right, it's going to work. Okay. All right, here we go. Okay, so there it is right there. And we go ahead and zoom in some here. And let's see, actually, looks like the template's there, but not the advisor. So let me attach the Expert Advisor. It is not saved with a template. So hold on, Fulgent AI stocks. Right there. Okay, there we go. And now I'm going to view the commentary. Okay, so if I click after any signal in here, and let's zoom out a little bit so we can see more of these. If I click after any signal, I will see the commentary for that signal, and it's showing you a rating for the signal, how many times it occurred in the historical data, and the average profit per trade, and then the actual stop. So we calculate exits on any of these signals that are generating, and you see they're generally pretty good. They're not perfect. No trading system is, but we like to see these longer term trades like this. What I tell people who are using the platform is that if you see something building like this, it's perfectly good just to jump on board, jump on the train as it's going, because they tend to work out really, really well. And then we have these quick move, which is just like a 3-4 day trade. We'll go and look at some charts here. And I wish we could do the option thing too, but that's okay. All right. So next chart. And like I say, it is calculating hundreds and hundreds of indicators on these charts in order to do this. So it's really pretty fast considering that fact. If I loaded fewer bars, you can actually get away with like 250 bars. At some point, you don't have enough data for it to calculate all the indicators, so you have to be careful. So I usually use 500, but there you go. So here is a major reversal detected back in December. Swing trade, quick move, short trade down right there, quick move, swing trade. And so we just go through some here real quick and just kind of see what they look like. And so, like I say, there is an exploration associated with this, so you can explore the right edge and find these gems. You can see these are really great option trades, and that simulation I showed you, that curve, is based on the quick move strategy. It's one of the favorite. Expert. It's one of the favorite experts in here. There's 4 of them: quick move, swing trade, major reversal, and volatility breakout. So they're generally trying to find reversals. That's pretty much what they're for. But except volatility breakout is looking for breakouts that are very strong. The next chart here. Okay, and there's a really nice quick move down, up. You can see just these are like pegging these things right at the turn. I mean, they're almost perfect. So I just went through the first 4 or 5 Dow charts. And like I say, if you click after any of these, it'll tell you, well, that particular signal is a quick move, and it's, got a 76 rating, 500 plus. And that's important. You want a lot of samples, because every single one of these things is a different rule. Imagine 200 indicators lined up, and it's saying, well, this one, and this one, and this one, and that one. That's what makes this rule. And those things are happening right at that point in the chart. So I'm really proud of it, and proud of this implementation in Metastock. It's just so easy to use. I love it. I mean, it's great. Okay, so let me go ahead and go back here. And PowerPoint, I got a couple more things to show you, plenty of time. Talked about the experts. There's 4 in there, and 2 of them have short trades. We generally, as a company, pretty much try to stay away from shorts most of the time, because the market has an upward bias. So you're already disadvantaging yourself to try to play short trades, but you'll see a lot of really good ones with the swing trade expert and the quick move expert. You can also, if you just don't like one of them, you can turn it off. You can also scan the individual ones with the expiration. So it's really pretty easy to control. So like I said, user interface, you just basically double click that. Let me go ahead and show you that real quick again. So if I go here, tools, Fulgent AI, there it is. Now you see all these here, those are retrained. And I'm going to talk about retraining in a minute, because what a lot of our customers, we had a lot of email traffic recently where Metastock users want to retrain the AI on their thing, and you can. So I'm going to show you that in a second, how it works. But I've just got the basic one picked here, and I can double click that and then go in, and there's those, the experts. So that's really all there is to it. There's also a strength rating. You can say only show, signals with a rating above 70 or above 75 or above 80. I've got it set at 70 right now. If you say show all, you'll see more signals in the chart. But so that's what that does. So it's pretty simple interface. Okay. All righty. Yeah, I want to show you the retraining thing, because that is just so cool. And our developers spend a lot of time to make that capable or possible in this. So what I do want to do right now is show you something in Metastock before this slide. Sorry, go away slide. Thank you. And that is, I want to go to the system tester here. This is a great tool, to figure out what to use. And I basically have all of the expert systems checked here. And, these are provided with Metastock. They're classic technical analysis things, not people make these, experts they're really complicated. These are basic, MACD crossover, Bollinger Band crossover, but they're actually really pretty good. I mean, they're profitable, like most of them. So it's really good stuff. What I'm going to do is turn all those on, and I'm also going to turn on, let's see, Fulgent AI stocks here. And make sure I've got my list picked down here. Yep, the Dow 30. And we're going to start the system test. Okay, so it's going to chunk through here. And of course, very, very simple indicators run really fast. That's good. When it gets to Fulgent, it's going to slow down. And every couple seconds, it does another couple symbols. And so I tell people is, look, you've got all the time in the world. After the close, you can run the whole market in probably 20 minutes, so just let it go, let it run. If you're running the exploration, here we're running a system test. We're not doing that, but we'll be done here in just a second, and I can show you the results. But I really would use this tool in Metastock to find things to trade. It's great, and it's simple. That's the thing I love about Metastock. It's just so easy to use. Everything in here is just, right there. Okay, it's almost got it, 98%, 99, and it's running over a couple years of data. All right, let's look at the results. Okay, up and down, up and down. And let's go ahead and sort on average net profit. And the winner is Fulgent AI. So there you go. And I have tested against other experts that I kind of got a hold of. And so far, Fulgent has beat all of them in a system test. But again, what you want is that high directional accuracy. You need it if you're going to trade options. You've got to have it. Unless you're doing spreads where you're trying to capture premium. If you're selling a credit spread, you don't want the market to go anywhere. Or you want it to go the other way a little bit. But so, if you're selling premium, you don't want the chart really to move or not as much. But if you're buying an option, you do. And so you want that directional accuracy. And this just shows, with those things turned on, kind of that you have that with Fulgent. Okay. Now I can go back to that slide. Okay. Yep. I'm just going to show this to you. All right. I meant to do it live first, so sorry about that. All right. So we're almost at the end here. Another 2 or 3 minutes and I'll be done with this. As I said, we've taken this technology, the quick move strategy, and run it in simulations. And this first one was a really conservative deal where I just said, look, we're only going to risk 10% of the account at any given time. So it's 3 trades at a time. And it was just on the Dow 30, so not many symbols. We typically use that for benchmarking, the Dow 30. And so 10% total of the account. And so over this 2-year period, it went from 10,000 to 48,000. And you can see very small drawdowns in here. And again, it's just a factor of, function of the fact that some of those trades, went to zero, but a lot of them did 2, 3, 4 times the value. So there you go. It's our little scenario we were talking about. This next one is a little more aggressive. This one, I said, okay, let's do 3%, 3 trades. And this is on all of the experts, not just the quick move. This is every expert turned on. Quick move is the best one we have for getting that really short impulse move in the market. It's killer for that. But this is just turning all of them on. And so 10 grand goes to 134,000, same risk, 10% of the account. To me, that the fact that you can do that with call options, and of course, as Jeffrey would say, or anyone hosting this, there is risk in trading. So I'm not saying that this is you'll get this outcome, but and if you reduce risk more and more, then you're better and better off, of course. But it's just amazing to me that it is capable of doing this. That's the point I'm trying to make, that it is actually, able to do it. And this is that aggressive case that I showed at the beginning, risking a lot of the account. But you may have a small mad money account that you wouldn't mind doing that on. Some people, they're retired, they're set up really well, and they have this $10,000 account they just want to go play in the market with. So heck, that might be something that you use this on. If you're not doing that, if you're trying to make money on your actual, like your cash account, whatever, then you want to scale that way back, like 1% of your account per trade, that kind of thing. And then let the odds carry you. But you've got to have that directional accuracy. So critical. Okay. Again, this is a report. You can get it from fulgent.ai/Metastock. And I want to spend about 2 minutes here. We'll have 10 minutes for questions, 2 minutes talking about things that people ask me, because I get them all the time. And they're just little things about this. The first is that it's customizable. So it works on anything. The AI that we have, the experts we have, work on anything, but they were trained on the Dow 30. So if you want to use this thing in real time, on real-time data or futures or Forex, what do you want to do? You want to retrain it. And this is the cool thing that our developers have made possible, is that you actually can do this. Oh, sorry, before I show you that, does it generate shorts? Yes, it does. We saw that. So you can just say, turn on the shorts, turn on the longs, and it'll generate them on those 2 strategies that support them. Okay, I got ahead of myself. All right, here we go. Now we're set up. So you've got this indicator, and this is a really simple RSI 3 period going below 30 and above 70. So oversold, overbought. It's an oscillator. And so we want to say, well, I've got this really simple thing, RSI 3 periods. I want to go long when it's below 30, and I want to go short when it's above 70. Well, obviously you can't just do that. That system is not going to be very profitable. But what you can do with this AI is you can say, train the AI to that condition. So, and it's really easy. There's one file. It's called the user input file. And if anybody wants to see that, I can bring it up, Jeffrey. It has that in it, and you just change that to, your system true or whatever it is. Doesn't matter what it is, or one of the ones you purchased from someone. And you train the AI against that condition. And so this was basically quick move trained against RSI3. And, it's just killer. I mean, just that simple little indicator with the AI looking at it and taking those 200 indicators and going, well, this has to be true. It's not true. It's not true. Oh, it is true. Okay. Evaluate all this stuff, make rules, create a knowledge base. And, it doesn't take very long. You can actually do it in about 10 minutes, 15 minutes. You can retrain. And so you can retrain on your own indicator. You can retrain on different lists of stocks. And we actually provide in the software that you can save the trainings that you've done. So this is a recent improvement in version 2, where actually you can experiment. So you can see this one was retrained on just Disney. This is retrained on currencies. This was retrained on 30 minutes on the S&P chart. And so you just activate the one you want to use and go to town. But again, retraining them is very, very, very simple. I have to pick the one I'm going to use. There you go. And you can create multiples and activate them to trade whatever you're trading. So that is that. All right. I think we're good. Oh, yes. So how did it do against the the non-AI version of RSI3, less than 30, greater than 70? Well, great. So this is that RSI condition, very profitable compared to RSI3 and go 5 bars in the future and get out. So it doesn't matter. If you got some little thing you really like you got a way to find higher lows, or you've got, MACD, whatever it is, you can just say, target this condition when it's true, and make me an artificial intelligence knowledge base that is my very own. Okay, so Jeffrey, I think that's it for me. I'm happy to take any questions that any of your great audience out there might have.
I have some questions.
Right.
So, actually, had a number of people, Scott in YouTube, and then a number of people in GoToWebinar were wondering what you recommend for options, particularly like what delta you look at, what expiration dates, what kind of general recommendations do you have around options?
Sure. So we're kind of showing that in the Explorer in the slide. Let me go up here and go back up to that. So it's basically, if you're trading, swing trading like this with options, you kind of want to be going a 7-day period out minimum and 14 maximum. You can do the next month. If that isn't available, you can go out further. Going back. Here we go. That's this thing right here, the expiration date filter. And so 7 to 14 periods is what I would do. Try to find one there. If it doesn't exist, you can go to the next month, which is going to be probably 3 weeks out. And that's okay. The thing is, if you get a move, those options that are closer in will move more. Their delta is higher, and they will move, quite a bit. So as you get in the money, delta, as you know, is the amount that the option moves relative to the stock. So delta of 1 means they move the same. So if stock goes up $1, the option goes up $1. If you're out of the money, delta is going to be something like 0.6. As soon as you go in the money, you're getting to 1 really fast. And if it's really volatile, it can go above 1. So you don't want to be too far out. As far as the strike price goes, I really like the ones that are just above where the chart is. So the chart's at 30, you want to do the 32. If it isn't available, do the 35. Why? Because options are very sensitive. Time decay is really bad. If the chart starts to move against that point, they will decay very, very quickly. And so you want to make sure that you're close enough that option gets real value quickly. And so pretty close to you and 7 to 14 days out. The Greeks, I know a lot of people use the Greeks. I think it's kind of like looking at level 2 data for real-time trading. I mean, yes, there's information there, but you get so caught up in the weeds trying to figure out where the advantage is that either you don't trade or you're just focused on the wrong thing. I mean, what you want is charts that move. You want stuff like, I'll go back to my chart up here. You want things like this, right? I mean, in my opinion, I mean, if you're buying options, you want the chart to move. And so, you can look at delta and gamma and theta and volatility. But I think all that stuff is priced in, to what's going on. Clearly, the best place to buy is on the pullback, not on the reversal. These are all reversal signals, because if you can buy it at the point of the pullback, which is going to be hitting that 20-period moving average, the premium is going to be much less, because the option market is just like any market. It's supply and demand. If people see that chart turn up and they start buying those calls, oh yeah, premium starts kicking up really quick. So if you can get it before it turns, that's better. Takes a little more guts or a better system. But again, if you put that 20-period moving average on your chart and look for pullbacks to it and movement, well, no, once it moves through, you're going up again. Sorry, you're like this. So pull back to it. That's a pretty good bet. It's a pretty good bet to place that trade. So that's a long answer. I hope I answered it.
I think that was good. I think we might have time for one more question.
Okay.
Dan actually had a pretty good question. He wanted to know what goes into the definition when you talk about the strength of the signal.
Well, we're actually looking at the accuracy of the signals over the historical period. And so that rating is what percent of the signals in the history. And when I say history, there's a training period. There's a training period and there's an out of sample period. All the signals that you saw, our training ended at the end of 2017. So every signal in 2018, 2019, and 2020 is what we call out of sample. The genetic algorithm did not see that data at all. Let's see, did I miss the question? I'm trying to recall here.
I think that was great. I think you did a really good job. James wants to know what the level of support is for learning Fulgent AI. And then he specifically mentioned White Glove. But I would say that that's a really good question, James. You're going to get two really good support teams. So if you ever have any questions about Metastock, one of the things I really like about Metastock is the support. We were doing an event the other day and somebody said that we had rabidly aggressive support. They were trying to say us we're very aggressive in making sure people are happy. So, but if we have questions for the kind of relate to the AI, you also have all of the Fulgent support staff available as well. It's a pretty good team effort, I think, in my opinion.
Yes. I take support emails and answer them. We know how important it is to support people on the platform. And I've had calls from people in Dubai, Australia, a little harder because halfway around the world, but we absolutely want to make sure that you are supported. And so I'm trying to get that slide with a picture on it, that you are supported. And of course, Metastock is famous for their support. So there you go. That's it. So I agree with you, Jeffrey. And very important to us.
All right. I think that's probably where we better call it. There are quite a few questions that are coming in. And if you do have questions that we didn't get to, you can feel free to email me. I'll get you an answer. Metastock or jeffrey.gibby@metastock.com. And of course, metastock.com/sales-chat will be a pretty good resource to you. I'm sorry, we just have 50 more questions. I don't think we're going to get to them all. So, Ed, one comment though for you. Ed is awesome. This is from YouTube. So, good job today.
Thank you. I appreciate that.
All right.
It's fun.
Thanks for coming. All right.
You bet, sir.
Do this, and let's just go ahead and do this. And then let's show this screen. You should be able to see the slideshow again. We'll talk a little bit about the pricing here. I'm going to go ahead and dismiss Ed real quick. Okay. So normally, and we'll do this too. little bit of a switch over as we kind of get in here. So normally Ed did a great job, and he always does, about showing kind of how well it's integrated with the scanner and the system tester, the expert advisor. Normally with the Fulgent AI, we do $149 per month. As a summit special, what we're going to do is we're going to give you a permanent discount of $99 per month for the life of your service. In addition to that, what we're going to do is we're going to give you 3 months for that $99. So you can evaluate it for 3 months. It's going to cost you $33 per month to evaluate it. And you can take advantage of that either by calling us at 800-882-3040, or you can visit us online at metastock.com/saleschat. So people are loving this. I really like the fact that we're working with Ed again. He's such a, as you can tell, such a smart guy, really knows what he's talking about. And it's nice to have a good AI product. I'm also very, very particular. I think he did a great job with his chart pattern engine as well. So, but in any case, this is part of the summit special that we're talking about today, where you get Metastock Real Time, our award-winning software program. It's only been rated like 25 years in a row, #1, by the readers of Stocks and Commodities. So you're going to get that. You're going to get a new service that they've spent $1 billion developing. Refinitiv has. Actually, Thomson Reuters spent the money, then Refinitiv bought it. But it's supported by thousands of journalists and hundreds of different news bureaus around the world. Literally the same data and news service that's available if you're an institution or a bank or a hedge fund. You're going to get 3 months of that as well. You're going to get Veracity, the Fulgent AI, the Trade Trend, the Rick Sadler's Patterns for Profit. You're going to get the Top Dog Trading Toolkit. You're going to get a subscription to a site called learnmetastock.com that does webinars 3 times a week. You're going to get a training video that kind of goes through all of our how to run scans and system tests. And, really, Metastock's a huge toolbox. So one of the things that we try to do is help you make money with that toolbox as soon as we can. And that's part of the reason we want to include training. One of the things that when I started like 24 years ago, it's like the person that was training me actually runs learnmetastock.com. But one of the things that he would always tell me is like, Metastock's so powerful. If you can just explain to people what it can do to help them with their training, it's going to sell itself. And so your job is just to explain what it's going to do to people. And that's a mentality that, has worked ever since he hired me 24 years ago. And we just keep making the software better as we go. So, I would say there is a reason it's been rated #1 25 years in a row. I wouldn't trade without it. You need to try it. So you'll get the power of Metastock, Unleash the Power of Metastock. You'll get 2 years of Stocks and Commodities magazine. You'll get our white glove installation service. You'll get unlimited access to our tech support staff, which is located right here in this office. Well, we have half located in this office and half located in Corona basements around the city right now. But all of it's based here in Salt Lake City, Utah. And all of that would normally cost you $4,805. Today, we're going to cut that price in 50%, $1,985. So you can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. And you can also buy this package online at metastock.com/summit deal. Sorry, summit deal. All right. A couple of questions about the Fulgent AI. Can you run your own methodologies through them? And the answer to that is yes. If you want to retrain using the AI engine and your own specific systems, Dan and Rahul, you can absolutely do that. So some of the ones that are a little bit more locked are a little bit harder to do, like the Veracity one, which is what you're asking about. So in any case, 800-882-3040, metastock.com/saleschat, or metastock.com/summit deal. So our next presenter, I hope you're enjoying yourself today. I hope we're doing a good job. My goal is always to kind of bring in and have it educational and bring in some of the best speakers. So really interested to see if you're liking it. If you have comments or feedback, feel free to leave it either in the YouTube or in the GoToWebinar chat, whatever you're doing. Do want to spend a minute thanking our sponsor today, Stocks and Commodities Magazine. They've been making magazines since 1982. I've been reading them for 24 years. One of the things I like about Stocks and Commodities, I say this from time to time, is like, I think in life you're either getting better at something or you're getting worse at something, right? The thing I like about having something that's delivered to me monthly that has different ideas and takes and ideas about how to trade the market is it's a good way to make sure that you're kind of always improving what you're doing. So if you didn't get a free issue of Stocks and Commodities, you should claim your free issue. You can do that by going to metastock.com/trader summit, filling out the registration form for today's event, and then just selecting any of the great offers that all of the presenters here today had offers of either like advanced training or ebooks, or in the case of Stocks and Commodities, a free magazine. So make sure to go up and do that. You want to do that today because I'm going to pull the list and get that all distributed so that we can deliver bonuses early next week. So, and then let's go ahead and talk about Rick Sadler. So Rick Sadler is our next presenter. We've been working with Rick for a number of years. In preparation for today's event, we actually spent a little bit of time with Rick, and we created a system and a methodology that's actually brand new for today. It's called a 3x8 trap system. And Rick is going to tell you a little bit about how he's been doing with his account with the 3x8 trap system, but it's a great little methodology that we've added to his add-on. And I'm interested to see him talk about it for the first time today. So Rick is somebody that I like a lot. I think, if I'm not mistaken, he's from Alaska. Anyway, let's go ahead and bring him on. How you doing today, Rick? And this is where Rick? Mr. Sadler. All right, Rick, I'm not hearing you right now, although I see your mic is connected and on.
Now.
Oh, good. Whew. Yeah, we can hear you
okay.
now.
Right. So I need to figure out which mic is the best. How does this sound right here? Pretty good?
This sounds pretty good.
How about this right here? Does that sound okay?
Worse. I'd go with option A for me.
Option A. All right, then I know which mic I'm on. Okay.
And that felt like I was at the optometrist for a minute.
So how have you been?
I've been good. Good.
Good. Hey, I'm trying to figure out which screen to get loaded. Oh, there it is. I found it. There we go. Well, I think I'm all set, sir.
Yeah.
Thank you very much.
We can see the road to wealth.
All right.
And I'm going to get out of your way.
Okay. All right. Hey, I want to say thank you for having me. Thank you, everybody, for being here. I appreciate it. I know this is Saturday, and I know that we all have those home chores that we want to do rather than sit here. So I do appreciate it. I know all the other speakers here appreciate it. And thanks for everything again, Jeff. Thanks for inviting me. Okay, so the road to wealth, we'll talk more about that as we go here. And then today we're going to be talking mostly about the 3x8 trap and how to trade it. We're going to be looking at a fair amount of charts. We're going to, and then look at, well, you'll see some road to wealth stuff here. So let me figure out my PowerPoint. There we go. Quick disclaimer. I'm not going to sit here and read this to you. Bottom line is, do your homework. Make sure you have an understanding of trading. Do not trade with any money that you cannot afford to lose. Now, I hate to be so dismal about that. Maybe what somebody would like to say is, hey, invest money, you'll make a lot of money, but that's not necessarily true, because you have to have some education, some understanding of charts. That is paramount with any trading system you do. So please make sure that you have a full understanding of trading and a full understanding of what you can lose in the market. All right, let's talk about the 3/8 trap after I grab a little bit of water. Oh, did I, is my webcam on? I don't know. Hi. Oh, hey, there we are. There we go. Hey, everybody. Okay, so let's talk about the 3/8 trap. There's three things that we'll be looking at on the charts, and one of them is called the trendicator, and I'll explain that when we get to the charts. The other is the T-line. You may have heard of the T-line before, and you certainly may have heard me mention it before. And what the T-line is, it's the 8 exponential moving average. That is all it is, okay? I don't want anyone to think that it's some super duper thing. We named it the T-line years ago as a possible name of it would be a trigger line or trend line. We couldn't really decide what to name it. By the way, it was named by all the members in the trading room at the time. So we decided to shorten it up because it could be both things. It could be a trigger line and it could be a trend line as well. So we just shortened it up to the T-line. We're also using in the 3/8 trap the 3-period measured on the high. 3-period measured on the high exponential moving average, okay? So that's another thing. And really the cool thing about this is with Metastock, it's already built in to the charts, and we'll take a look at that here in a second. There is a couple other little things in there, a few other little herbs and spices built in that has built in the system to give you a bit of an edge on trading. And well, with that, let's start taking a look at some of that. There we go. First thing, you know, there's always a question is, does the 3/8 trap work? Well, first of all, I want to explain to everybody that just because somebody says something works doesn't mean it's going to work, nor does it mean that it is going to work for you. I'm not a very good salesman of my program here, as you can see. I'm just trying to be very honest with you. There's a certain amount of rules that you have to have in trading, and you've got to stick with those rules. Those have got to be rules that you adhere to, no matter what, because no matter what you're doing, no matter what system you're looking at, not all trades work. And that's very, very important to understand and to remember, okay? So I have proved it has worked, proven with the Road to Wealth account. We started the Road to Wealth account January of 2018 with an opening balance of $5,100. Now, at that time, I've never traded an option in my entire life, and I've been trading. We're going on 34 years now. So I've had some people that say it's hard to believe that I honestly have never traded an option until January 2018. And in 2018, we opened up this account. We called it the Road to Wealth account for $5,100. We closed that account this May 2020, just a couple months ago, for $72,685. So I know it works. I know it works. And what we've done through this entire time is we posted the brokerage statements to the Road to Wealth account to the Hit and Run Candlesticks website. And if you go to the website, just look for trading results, and you'll get to the page that has all the trading results, and it shows the brokerage statement there. Shows you and there's some months that are down. Not every month was up. Certainly not. I wish it was. I wish I could be one of those traders that could tell you that, we started in 2018. We've never had a losing month. We've never had a losing day or anything like that. I wish I could tell you that, but I cannot tell you that. But I do think it's pretty impressive to go from that $5,100 to $72,000, $672,685 in less than 30 months. Here we are. Okay, so let's talk about stocks versus options. And I promise you, be patient with me, and we'll get to looking at some charts. Well, I know that's what's important. but this stuff is important as well, but we'll get to the charts. So stocks versus options. Like I said, in January 2018, I started trading options. I only trade directional puts and calls. That's it. Nothing fancy, just simply directional puts and calls. Remember to keep it simple, okay? That's very, very important. We also do a lot of base hits, and I'll talk about that a little bit more in the charts. Now, if we, let me get my pen out here, let's, here we go here. So let's just say 5K to 72K, okay? I'm assuming you guys can all see this on the chart right here. I just wrote it on the chart. I do not believe it's possible to do that with stocks. I really, really don't. I do not believe it's possible to do this with stocks in less than 30 months. Okay, I do not believe it is. Now, I'm not trying to push options. I'm not at all. I'm not trying to push options. I'm just trying to explain to you how we got there maybe, and some adjustments I had to make to my trading. However, I do think it is very possible with options, but it is certainly not guaranteed that everybody's going to make that kind of move. Now, we've recently started a new Road to Wealth account. Last month, I think we kicked it off, or this is September, actually this month, September. And so anyway, we started new, and we'll talk a little bit more about that here in a minute. The Road to Wealth, me personally, I'm very goal orientated, extremely goal orientated. And when it comes to taking profits, I feel like I'm an animal about it. And that is what really, I think that's one of the things that really set us off, getting from that 5,000 to 72,000, is being so goal orientated about taking profits. And again, we'll touch on that today. Keep in mind, we only have a short period of time, but I'll try to certainly give you a synopsis of what's going on. And then at the end, I think Jeff will give out a link to a 30-day trial, and I can explain so much more of this in 30 days to help you out. Also, there's something here called SPT. Here I have a hat. I had one of my members right there, SPT. There you go. There we are. What that stands for is see it, plan it, trade it. See it, plan it, trade it. And when you can look at a chart and you can see the chart, you can make sense of the chart, then you can plan it. And once you plan it, then you can trade it. All right. Now, a funny thing over time, whenever we start talking about making a plan, an amazing amount of people start rolling their eyes. Oh, I don't want to hear about a plan or anything. Well, I'm not going to talk about a plan. Okay, I'm not going to talk about that at all. So don't worry, don't roll your eyes. It's okay. Although I do think it's very, very, very important. Now, one of the things I would like to ask and is, do most, I do a lot of coaching and a lot of private coaching, a lot of training throughout the day, in a month's time, in a year's time. And one of the problems that I hear from traders is, how do I find the trades? How do I find the setup, no matter what the setup is? In this case, we're going to be talking about the 3/8 trap. So how do I find that setup? And that is the hardest part, because I think really when it comes down to it, most people actually have a fairly good indication where to enter the chart. And we'll talk a little bit about that. I have a different view on entering the charts, but we'll see here in just a sec. But I honestly believe the hardest thing is to find the chart that you want to trade. But we all have an idea of what we want. Maybe, for instance, maybe somebody Somebody wants a chart that's just moving sideways like this, and then you want to be alerted when it does something, you know, whether it moves down or whether it moves up. Maybe I don't personally trade with say Bollinger bands, but say you're looking at a chart with some Bollinger bands in there, and that's not very good artwork there. But you want to be led toward the charts that meet your criteria, right? For me, I want to be led to those charts that lead to something that might look like this. Let's do this. This might represent the T line right here. This will represent the 3 EMA measured on the high, somewhere in there like that, okay? And then this will represent price. Let's use blue. So price, as price moves up, I want it to pull back inside the trap between those two lines right there. And then I want to be alerted when it's in there. I want to know when that's happening. Well, I also want to know one other thing, and we'll make this just red. I want to make sure there's a trend in there, and we call that the trend indicator. And see, all that is built in on Metastock, and I think it's pretty cool. So as price moves up, I want that pullback back down to the T line or trapped between the 3 and the 8 EMA. I want that trend line going, and then we're going to look at price action as far as the entry goes. And this is the kind of stuff. Well, this is as far as it. On some of the other packages I have with Metastock, the rounded bottom breakout, that's my all-time favorite strategy. But within that strategy, it's this 3/8 trap that we use to find the charts that are set up to move higher and where we find our entries at. So it's really cool that Hit and Run Candlesticks and Metastock has teamed up to provide us with this 3/8 trap. It works on all time frames, any chart price, and whether you're trading stocks or options. Remember, chart is a chart is a chart. But first I better do this. Simple should not be complicated. Think about that. Simple should not be complicated, okay? You know, I said I wasn't going to talk about a plan. This is the only time I am, and I'm just going to just a little tiny bit. Before you trade anything, even these systems that are black box system, you must have a good foundation for trading. You absolutely must have a good foundation for trading. You must have an understanding of price action. You must have an understanding of chart reading, chart management, money management, a profit plan. This, by the way, is where my goals come in big time. A risk plan, and you must know the risk and the reward before you enter the trade. And for God's sakes, understand that not all trades work out. Own that. Own this right here. Absolutely own it. So this is the extent of my artwork, by the way. I don't spend a lot of time doing PowerPoints. I don't think that's where all the answers are. This is truly the extent of my artwork. And what this represents is a 3x5 index card. So when somebody thinks about a trading plan, they think about pages and pages and pages and pages and pages of stuff, right? Well, here you go. If you can't put your entire trading plan on a 3x5 index card, you are way overthinking it. Simple should not be complicated. Don't complicate it. Again, if you can't put everything here on a 3x5 index card, you're overthinking. Whoops, gone too far. There we go. Now let's look at some charts, but please bear with me. I've had this scratchy throat, fighting a bit of a cold. Try to keep my throat a little bit moist here. All right, so what I'm going to do is I'm going to start out with what we call a naked chart. As we look at few charts, we're going to look at charts with lines on them. And then I'm going to go back to some naked charts. I just want to show you the possibilities. Some traders need that 3 EMA on here. Some traders need the T line on here, and some traders will need the trend indicator on here. Other traders may see value in what we call a naked chart. And this is a naked chart, nothing there, no indicators. I find this extremely valuable, very, very valuable. One of the cool things that Metastock did here was they created this ribbon down here, and this represents the trend indicator. This is pretty cool. If it's green, it's letting you know the trend indicator is in the right direction. If it's red, the trend indicator is not in the right direction for trading a long. By the way, right now the program is set up for only longs, but I'll be working with Jeff to set this up for shorts as well. And that would be the 3/8 trap short rather than 3/8 trap long. So what we're looking for is we want a stock that's trending, and you can clearly see this is trending. Let me put a line up here. We'll make it blue. There we go. You can clearly see that's trending, right? But what happens is a lot of traders, they get a little they rush the gun maybe. They come down here and they start seeing they see this downtrend, but they start looking at this price action thinking, well, that's a buy right there. No, that's not a buy. First of all, I'm very much against trying to pick bottoms. I'm totally against that. I'm more about getting into a trend, looking for what we call a PBO or a pullback opportunity. And what we figured out that is if you let that pullback opportunity come into the trap, which is trapped between the 3 EMA, remember it's measured on the high now, and the T line, the 8 exponential moving average, that gives you a very unique entry area. These diamonds here, that represents some of that secret sauce that we have in here. So somebody might say, well, geez, that would have been an entry right there. I totally agree. That would be an entry right there, except it doesn't meet our little secret sauce, nor is it really giving us a trend right here. A little bit of a trend, but you want to make sure that's that. And by the way, the trend that we're using, and I'll tell you what that is, that's the 17 EMA, and you can adjust that to anything you want. I find the 17 works very well. I've had a lot of reports back from other traders that they use the 20. Simple, perfectly fine. Remember, you're dialing your trading into this is what you're doing. So when I see that trend working, when I see this down here, green, and I start seeing that little secret sauce, those diamonds in there, now what I'm looking for is that PBO, that pullback right here. And then I start looking for let's change the color here. Let's go with this. There we go. I start looking for price action signals. So here we have a nice little pullback, PBO, price action signals. Now you can certainly enter here. There's a lot of I hear a lot of discussion. Let me get a line here. Let's see. Line, there we go. You know, do we wait for this breakout right here to buy? Well, it's already broken out. This is my argument. Here we rallied up and we've actually already broken out. So if you want to wait for that breakout, that's fine and dandy. But what you're gonna end up doing is you're gonna wait for that rally and that pullback again. Well, here it rallied and pulled back. So we're doing just what, you know, I hear this all the time. Wait for that breakout. It's already broken out. We're buying the pullback within that trend area. And you can see how this gave us alert signals here. Boom, 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 boom. Now, let's talk about this one right here. I typically do not. Now, I won't say that I don't ever, but I typically do not buy bearish candles. Typically do not. I want to wait till the bullish candle comes in. So any one of these. I also like to wait for when we have follow through. So follow through can be over that candle right there or over this candle. So I would have no problem buying it up here. I haven't waited for that breakout. I wouldn't have a problem buying that up there. And then you have to know how to manage a trade. All right. So you have the consolidation here. You can see we're still looking at buys in there, and then just finally up it goes. Here's another thing that I want to point out about hit and run candlesticks. The road to wealth, my trading is I'm not looking for charts today or say Sunday night. This happens to be Saturday for anybody that watches the video later. Sunday night, when I'm looking for charts, I'm not looking for charts to make 100% Monday. I'm looking for swing trades over a period of time, overnight to 3 weeks maybe. So, I'm looking for these pullbacks to set up inside that trap area, wait for everything to line up, and then start buying and then manage on the way up or till it hits my goal. Let's move to a different chart here. There we go. Here's another chart. Here's Microsoft. Now, whoops. Remember, I can't do that here, can I? Look how Microsoft started getting green here. Look how that trend is working. That tells me that the trend indicator has been up. And I've got some charts coming up with these lines on there. The trend indicator, the 3 and the 8. But you see how that's moving up? Now, if we come over here and we start looking at these pullbacks, you can see where you might have these buy areas right in here. A buy area, a buy area. This would be a buy area. It did pull back a little bit, right back to that, right, which this trend, this line here, this doesn't represent anything other than the trend. I don't know if it's placed exact at all. It did pull back, but remember, if you bought this, think about it, we didn't get the follow through here. We didn't get the follow through. So that's something important to think about. We want follow through. And this is, if you're a candlestick follower, all candlesticks are is a clue to be looking at the chart. What you want to do is trade what happens after that clue. So on follow through, that's where you start making money. But we're all traders, so we all like to enter early. It happens. That's where you want to make sure you put those stops on just in case it does not move up. See how we move back down here? We have a little hammer. We start moving sideways. Our little diamond showed up. So right in here, our secret sauce started to show up. And now we started moving up. We started moving up right here. Now I can tell you that I would be taking profits hands down up here. Here we move back again. See how we pull back? These are PBOs, pullback opportunities. We put in a little, in this case, a bullish piercing candle. And here we see the little diamond. That's because we had the follow through now. Well, I take that back. The diamond means that our secret sauce kicked in, and now we can start looking at it as a buy. If you did buy this down here, this just gives you that warm and fuzzy feeling that everything is working out. And you can see how this rallied up. And I can tell you now, the Road to Wealth account, we would close this out in a heartbeat and take our money, even if we knew it was going to go higher. But that's just our strategy in the Road to Wealth. Here we move down again. We do that same thing. Now, this just indicates that its secret sauce is met. I don't want to buy until we have a buy signal. Now, there's a couple things about price action that I think everybody needs to know. One is candlesticks. I think candlesticks, neatest thing since sliced bread. I think understanding price action is probably the number one thing a trader could do on a chart. We understand price action through what we see in candlestick signals. So when we see a candlestick signal like this, a bullish day, a gap up, doji up here, a little bit of a gap down, and then a bearish candle, we have an evening star. You've got to pay attention to that. And just because you get a day like this the next day, that doesn't mean buy it. So we're putting a combination of things together a little bit here. That doesn't mean to buy it. And you can see that right here, if you did not buy it, you would have been the smartest person in your world. Here we are down. Well, see how we came down again? And again, our secret sauce is still flashing. See how this candle started moving up? That would have been the trigger to buy right in there. And that would have made some money, which, truthfully speaking, I mean, seriously, who would have bought it here? But more importantly, who would have held it through this candle? We would have sold it. And if you're trading stock, I mean, you're certainly going to make some money. But if you're trading options, you know that would be killer money to you. That would be fantastic money in there. So let's look at another chart and get to one that I think maybe, whoops, yeah, the next one has some of those lines on it. You see right here, see how we have bearish, bearish, bearish. Now, every now and we get a little green in there, but see that bearish? But more importantly, see how the candlesticks are red? See how they're red? Well, that tells us that we're underneath the trend indicator. We're below the trend indicator. If I could take somebody off the street and they said, look, will you coach me on being a trader? Sure. One of the first things I would teach them is never take a long trade unless the trend is up. Never take a short trade unless the trend is down. Don't try to pick bottoms and don't try to pick tops. You're going to hit it every now and then, but overall, it's going to burn you. It's going to eat your lunch. So when we see red candles like this, we don't even want to think about buying long. When we start moving up into the trend indicator, above the trend indicator, that's when the candles start turning green. That's a sign that the trend indicator is working. Another sign is when this ribbon down here is also green. So a green ribbon, green candles tells us the trend indicator is trending. Blue candles tells us we are in the 3/8 trap and the chart is a possible buy. That's kind of cool here. There's all kinds of things in this chart that's telling you something. The green ribbon tells you that the trend indicator is bullish. It even says bullish. The green candles tell you that the trend indicator is price is above the trend indicator, and the blue candles tell you that we're in the trap and we're getting a little bit of secret sauce here, a little bit of secret sauce, and you can see how this thing is starting to work. Now, honestly, I don't know if I would buy that, and this is where a trader, you know, you've got to have an understanding of charts. You have to have an understanding of price action. And maybe there's a whole lot of people that buy this. Maybe there's not. I know that I probably would not be a buyer here. But if this is alerting, then above that line can only be good. So if we start breaking out, because that's our secret sauce down there, the secret sauce is working, we're in that trap. Now this would probably be out of the trap, honestly. But we're not afraid to take breakout charts. So here's a nice little breakout. And if it moved up like this, if we bought this and up into here, I would take that off the table. We're going to talk about my goals in just a little bit here on how we went from 5,100 to 72,000 30 months and how we're starting the road to wealth again. This time we're starting it with $10,000. Our same goal, which our original goal with the old road to wealth account was just to double our money in 12 months. We blew that out of the water. See how we've pulled back now again, and now we're starting to get that secret sauce in there. Start buying, and look how that runs up. Remember to always put your stops in there. Please, always, always put your stops. And speaking of stops, if I was to buy this chart here maybe, and that would be a candle I would probably consider buying. What I'm going to do is, because that's such a big candle, then on a big candle like that, then what I'm going to do is I'm going to put my stop at the low. That wasn't a very good line, was it? I still can't get it right. Let's do it this way. Right at the arrow. There you go. I can do it that way better. I'm going to put my stop at the low of this candle. I'm not going to come back here and do it. I figure that if you can't read a chart, somebody's not going to like this. If you can't read a chart, you probably have no business trading. If you don't have the confidence when you buy a chart, the chart's going to go in your direction, in our case, up, then you have no business buying that chart. Sorry, I don't mean to offend anybody, but this is your hard-earned money. In some cases, it's your lifelong savings. So we have to be right up front. You have to understand that there's a lot of risk out there. If you buy this chart here and it starts moving down, and you think because Joe Blow bought it, or somebody, said, hey, this is going to be a killer chart, but it keeps moving down and moving down, that's on you. You got to have your stop in there. That's on you right there. So anyway, digress a little bit. So what we're looking for is the trend indicator to be green. We're looking for the blue candles to give us those that insight that we're inside that trap area. And that's if you're not using the lines on here. We'll go to those here. There we are. Here's what it looks like. So when you download the program from Metastock, this is what it comes out looking like right here, with the 3 EMA up here at the top. That's what this top line is. This is the T line. This is the 8 exponential moving average. And this green line here represents the 17 EMA. And when price is above it, you'll see the candles are green. When the price is above it and the candles are blue, that means you're in the 3/8 trap. Whoops, darn it, can't forget, I can't do that. So you can see here how, see how that candle, we're trapped between the 3 and the 8, and the trend is up. This is showing us that we're bullish over here. So this becomes a possible buy area right in this area right there. See how we've pulled back, and see how this candle, it came back up through, excuse me, up through the T line. See how it closed? That is an indication that it's buyable right in there. And that's the kind of charts that we look for the Road to Wealth account. Now, if you didn't buy it here, there'd be no harm in buying this one here. It opened up slightly below, but see how it started moving up inside that trap? That's where we want to start looking for that buy. Whoops. Oh, there we go. I apologize. Another ink water. With the camera on, normally we can hide this, but nowadays with the camera, we can't hide it, but you got to drink, So the current Road to Wealth account started with $10,000. And here's just a good way for you to figure yours out if you want to do something like this. Again, I'm very goal orientated. I'm not about, let's see here. I'm not about, let's use it this way. I'm not about buying a chart or buying a stock here. And I'm not about, I'm not about letting it run. I'm not about that. I have nothing against that if it works for you. If it works for you, keep doing it. I find that, well, I shouldn't say anything like that. Like I said, if this works for you, keep doing it. This does not work for me, because what happens is I find myself, I get into a situation where the stock starts moving down, but wait, I'm going to let it run, right? And it moves down and it moves down, but wait, I'm going to let it run. And it actually never runs. Or worse yet, you come in here and, well, I come in here. Worse yet, I close it out. And then guess what? You nailed it. Yep. Now it runs, right? So I had to figure out how to do that. Just like every trader has to figure out what works for them, I had to figure out what worked for me. So for me, what works is to look at a stock, determine if it's a buy or not, and determine if there's enough reward above it, or not enough, but is it possible to get reward above it? And as it moves up, then I'm going to start taking off some money off the table, what we call base hits, which is really just selling into strength. Okay, it's what you're doing, selling into strength. Base hits. The only thing is what we do with our trading, the Road to Wealth account does, is it specifies, well, what is a base hit? That's what we're looking for, are those base hits and what represents that base hit. So starting with a $10,000 account, what is your goal? This is what I asked myself. Well, my goal is to double it in 12 months. Now, somebody might say, well, I want to quadruple it in 12 months. Here's what I would say to you. If you have had a pretty good trading track record, then okay. If you can't find a great big red barn in the middle of a field, I would suggest don't quadruple it. Let's start with something that's a little more realistic. And for some people, maybe not even doubling it is realistic. Maybe just adding $10,000 to it might be realistic for some folks. Remember to start small, and then we're going to scale it up. That's important. Start with what you have, relatively small, and then scale it up. So my goal is to double this. Now, here's an interesting thing that happens. And honestly, this is something I learned with the first Road to Wealth account. I did not realize this. Yes, I didn't realize it at all. But what happens is if you are dedicated to finding good quality charts and good quality setups, if you're dedicated to that and you are dedicated to when the chart moves up, you stick to your base hits. Well, that base hit right there, that might be, whoops, try this again here, line, oh, pin, there we go. This base hit, I don't know, maybe $100, right? Well, if you're doing the proper charting, if you're getting the charts handed to you like Metastock is handing them to you, what you're going to find is you'll do your base hit once, you'll do it twice, you'll do it 3 times, you'll do it 4 times, 5 times. And before you know it, your daily goal, you'll blow it out of the water. So what happens is you don't double it, you actually triple it or quadruple it. Or maybe you can go from $5,000 to $72,000 in 80 months. So what we've done is we've just simply said we want to double it. So that means we want to make $10,000. Divide that by 243 days. 243 days is the approximate days you have to trade. Everybody's a little bit different. This is my number. I've got 243 days a year to trade. And that comes out to $42. So that may seem small to a lot of folks here. But remember, we're trading with only $10,000 in the new Road to Wealth account. If your account is, say, $100,000, do the same thing. If you want to double that account, do the same thing. So if it's $100,000 and you want to double it, simply $100,000, divide that, then you want to make $100,000. So we'll put another 0 in there, right there. Then what you want to do is divide that by 243, and you want to come up with your answer that you need to be making each day. Now, do I make something every day? Absolutely not. I don't want anyone to think that. Some days the market just doesn't give you cookies. It's just the way it is. But then all of a sudden, one day you may get a whole package of cookies. You may get the whole goddamn cake mix, and then it pays well, very well. Here's CRWD. CRWD. You see how? See, this is the trend indicator right here, the green line, and see how this is red. See how the candlesticks are below the trend indicator? You don't want to be a buyer here. I know. You see a chart like this. I wish I had $1 for everybody that said, man, I wish I would have bought that chart right there. Right here. There you go. Boy, I do. Well, how about, I'll bet you would be just as happy if you bought it right here and it went up there. I bet you'd be just as tickled if you did that. In fact, I bet you would be just as tickled if you bought it here and you might have kept it here and you sold it here. I'll bet you would be so happy, it wouldn't even, it'd be crazy, you'd be so happy. Pretty sure of that. Let's see what the next chart is. Okay, let's go back to the naked chart. Now, when you open up the program on Metastock, you get those lines up there. Once you get comfortable with those, I kind of feel that this right here is a better chart. The naked chart is simple. Keep it simple. And all the answers are right here without those lines. The green down here tells us that we're above the trend indicator. The green here tells you you're above the trend indicator. The blue tells us that we're in that trap area. And the diamond says the secret sauce, well, is working for us. When we see price action like this particular candlestick, which is not, whoops, darn it. I really got to remember I can't do that. Not quite a bullish engulf, but who's not going to buy something at right there, knowing that your stop would be right below that candle, or possibly, I see another stop, possibly here, right there, possibly below this candle right here. But if you have the conviction that your chart is working, and if you're trending, number one, you got to be trending. Number two, you've got to have a good pullback. You've got to have the price action working for you. Then I feel the conviction should be there. There'd be no problem setting that stop at the low of that candle. That keeps your risk extremely low. Now what you can do is trade this up. When you get to your magic number, let's say just use my account the way I'm using it right now, $42. $42. Option traders, how hard is it to make $42 in a trade? Really? Up we go. When it gets up there, and here's what I like to do: buy multiple contracts is what I do. So let's just say, for the sake of argument, you're buying 3 contracts. Okay, 3 contracts. When it gets to your 42 mark, you sell 1. It moves up, goes sideways, nothing really changes. It moves up higher, maybe you sell another one like this. As it moves up, then maybe you sell the last, the last contract there on something like that. So here, if that was $42, this is 100 plus, 200 maybe. This is getting up into the 400 and 500 mark. So you can see how, if your goal is to make just a small amount, how being in a nice trending chart, in a very good chart setup, how you can make a ton of money. And this right here would be the goal of, I don't know, let's see, a goal of maybe 10 days you've made in one trade up here, plus what you've made here, plus what you've made here. So having those goals, I think, is very important. Let's see here. This is CRWD with the lines up there. If you need that help, this is CRWD without the lines up there. Here's JCI. Look at JCI. This, I think, is an exceptionally nice chart. Let's do this green. See how that thing pops up, and look how we're in that trap, and look at all those diamonds in there. We do it over here again too. These are all places where we could have bought this, and of course each move up is where profit could have been taken. Nothing says you have to take those profits. This would have been another area right here, but you would have immediately been out of it. I mean, I don't think anybody would have kept it up into here. So if you made money, let's see, how can I do this? Here, money here, and money here, and you had to give back a little bit here, I think you'd be okay. I think you'd be okay. If you bought this and you gave back a little bit, I think you'd be okay. Let's see here. CZR. Everybody's got to love CZR. Now, you can see where the secret sauce, the diamonds, started showing up right here, right? Well, why didn't they show up here? That's because the trend indicator, our trend indicator is up, but the secret sauce didn't come in. So Would you not buy it here? I'm not saying you wouldn't buy it, but everything you're asking it to do is not there. So you're adding a little bit more risk into the picture. But I could honestly say that I might take that trade right in here. See that little pullback? I might have taken that trade right in there, especially after we broke out right there. So see right in there, boom. Now, I might still take that trade knowing that my trade is only from here to here, and then I wouldn't trade anymore. Once it broke out, the trade becomes alive again. I might take that trade right there, absolutely, on that breakout. But when we start getting that secret sauce in there, now I wouldn't take it there, but there's the bullish candle. Like I said early on, I typically do not buy down candles, just typically do not do that. Sometimes if I'm in a position and it gives me that pullback like that, sometimes I'll add to it, but I never start a buy with that. Here's CHRW. This is another one that I think is superb. Look how this, see how, whoops, wrong one. Let's do this again. There we go. See how we started moving sideways right there? And we've got all the secret sauce. And those that follow chart patterns, such as something like this, you know that that's a cup and you know that's a handle right in there. Well, this is giving us our entry area. Oh, let's talk about entry. I get asked all the time, well, where would you enter here? How about anywhere? How about anywhere in that area? I could get pretty excited about this. People looking for an entry, a penny here or a penny there. Traders don't make money on entries. Traders make money on knowing what direction the chart's going to move. That's where you make money. You don't make money on the entries. So somebody asks, well, where do you enter? How about anywhere right in there? You've got your built-in stop. If it closed below the T line, that's a guaranteed get out. It starts moving up, you're just happy as a camper. Here's another one where we've got the secret sauce in there, but typically I don't enter on a, there we go. We don't enter on a dark candle. And by the way, I'm not in love with doji, so dojis aren't in reason to enter for me. This candle's not a reason to enter. This candle here, that's a bullish candle. We opened up lower, we closed higher, we closed inside the trap. That becomes a buy area. So buy, and look how that would have swung right up there and made plenty of good money. I'm going to run out of time. Oh, maybe not. Hey, I haven't talked about this, but and maybe Jeff will talk about more about this little thing that comes up over here that that tells you a little bit more about the 3/8 trap and the trend indicator, and it also tells you if you're getting a bearish reading or bullish reading. Now, what I want to point out here on the SPY, this is a current chart. This is yesterday's close. What I want to point out here is I see an awful lot of people, trying to buy right in here, trying to catch a bottom. There's no way in the world, I don't think that the road to wealth could have grown 1,400% in less than 30 months by trying to predict bottoms. One of the main reasons for success is waiting for that trend. And when you have a red candle, I don't care. I mean, you can see that it opened up lower, closed higher. So that's a bullish candle, right? It's a bullish candle, yes, but it's below the trend indicator. If it's below the trend indicator, we don't want to make that trade. We want to wait till it comes over the trend indicator. Then we want to look at that trade. And you can see how this pulled back right there and gave us that pullback opportunity. There's a possible buy. And I possibly might buy that with that long wick down there. Definitely would have bought that candle right in there. Would not have bought that candle, but definitely would have bought that candle. And if I would have bought this candle or even this candle, I would probably stay in it with this, giving it one more day to see what happens. So The main thing from this chart here is when we're underneath the trend indicator, that's where you want to look at short, not to the long side, not to the long side. With hit and run candlesticks, and because you signed up here with Metastock for the summit here today, and I want to thank everybody, really appreciate it. There's a 30-day trial to both hit and run candlesticks and right way options. Little, you know, and if you're looking for more education, more training, members and non-members e-learning every other Tuesday evening, members e-learning every other Saturday, and we have a Tuesday intraday webinar every Tuesday intraday, so we can look at charts live. You know, we can talk about the trap and other chart patterns as well, but that would be a good place. Maybe if you could log in, that would be a good place. And you can find login links if you just go to YouTube, look for Rick Sadler YouTube. The link is in there. Outside of that, Jeff, are there any questions? I may have overrun my time here. I don't know. Any questions out there?
Hey, Rick.
Oh, hey, there you are.
yeah. I always seem to misplace the mute button, even though it's in the same place every time. So anyway, we don't have a lot of questions coming in here.
Okay.
A little bit of clarification. We're doing the exponential moving average is what we're using here.
Yes.
RL says, hi, Rick. That's about all we've got. A lot of, let's see. I think you did an excellent job.
Well, thank you very much. And thanks again for having me. I do appreciate it. And thanks for the work you did on the setting up the charts in Metastock. I think it's going to be very useful to a lot of people. I really do. It's a great chart pattern to work with.
And I'm going to talk a little bit about it. So,
all right.
In any case, great job today. And it's always good to have you on here.
Thank you.
Oh, I do see one question that came in a little bit earlier. And Gordy actually asked, how do we know that the pullback trap or the 3x8 trap isn't a reversal?
Good question. So we have a pullback and a trap. That's why we wait for a bullish candle. And if you feel more comfortable about buying a breakout, like right there on that breakout, if you feel more comfortable, which, you know, so the question is, how do we know it's not a reversal? The fact is, you don't know 100% that it's not going to reverse. For instance, this, you can see we have a breakout here. You know, this thing could, at the end of the day, catch some sellers, run some bulls off, and it could reverse down like that. There's absolutely no guarantee to any trading it's not a reversal. This is why we have those protective stops on. But what I have found is when you have a bullish run like this and you have that pullback into that T-line area or into that trap, and then you start seeing those buyers step in. Remember, this is trending up. So one thing I always tell everybody, a trend is a trend until it's no longer a trend. And until you see that bearish candlestick or that trend break, then I'm going to make the assumption it's moving up. Remember, we also want to buy we don't want to buy too far out of the trap. Even when stocks have big moves up, for instance, one I'm watching right now is GE. I don't have the chart up, but you know, GE's, I don't know, something like this the last few days, right? So I'm going to wait till it, whoops, wrong one. I'm going to wait till it pulls back. And when it pulls back into the trap area, that's where I'm going to look at buying it into that area. What if I miss it? What if it doesn't pull back into the trap? What if it just pulls back right here and then it goes up? You know what? I might miss that trade. I want the trades to come to me. I only want to look at a certain type of trade. I don't try to trade every little thing out there. So Gordy, I'm sorry, I don't mean to get away from this. Again, you don't know that it's not a guaranteed going to reverse back to the downside, but that is why we wait for those bulls to step in, to prove that there's still bulls there to take it up.
All right.
Thanks again, Gord. Yeah.
Great, Rick. Thank you. Let me go ahead and share my. Thanks for coming too. It's great to have you in here, and we will see you at the next one.
All righty, appreciate it. Thanks, Jeff. You take care.
Of course. The one thing I do want to say is if you already have the Patterns for Profit system, go to metastock.com/mydownloads and download the new version. With this one, basically the new methods and the new systems that we've included are actually just included. For if you've already owned the Patterns for Profits, just go download it. So you're welcome. I hope you enjoy it. If you are new to Metastock or if you're new to Patterns for Profits, this is one of the systems that we've added. One of the things that really kind of got me convinced, I actually coded it myself, which I don't do a lot of coding anymore if I can get away with it. But one of the things that Rick he's like, this is all I'm trading with right now. It's definitely my favorite system. I'm using it to make so much money. Let's make sure it gets included. And I was like, hey, I'm interested. So we started coding it about 3 weeks ago. It's a fairly simple methodology, and it works great. I think sometimes the simple stuff does work best. So perfect universe. I didn't want to talk specifically to you in YouTube. I know you sent a lot of questions in or a lot of comments. I want you to email me at jeffrey.gibby@metastock.com, and I'll get your questions over to Rick. We just didn't have time for him, okay? All right, very good. Michael says, excellent presentation. Joe says, thank you. Ron says, is there a Metastock scanner for these chart formations? So there is. I want to show you a little bit about how that works. With the new 3x8 trap, we now include rounded bottom breakout, the T-line squeeze, the T-line bounce, the pin boss setup, and the 3x8 trap. So there's 5 patterns that you can scan for. And there's some images of all of these, but I'm going to jump into, I think, the software and just kind of talk a little bit about the 3x8 trap. You'll get the access to the other systems when you buy Rick Sadler's Patterns for Profit, but you'll get this as well as part of it. So I'm going to go, where is my Metastock? It's right here. Okay, let's go ahead and open it up. I'm just going to show you how scanning works with this. I'm going to go ahead and open up what we call our power console right here. And what I'm going to do is I'm going to go ahead and open up the scanner. And what I'm going to do is there's a 3x8 trap that's going to be in here. I've actually got the development version. I'm trying to remember exactly what I called it. So give me a second. Oh, yeah, I called it HRC 3x8 trap. That's what we exported it as. And you'll see right here, HRC, hit and run candlesticks, 3x8 trap. If you run this Patterns for Profit, that'll find the pin boss setup, the rounded bottom breakout, the T-line break, and the T-line squeeze. What I'm going to do is I'll just go ahead and select this HRC 3x8 trap. And what I'm going to do is I'm just going to send it against my local list of S&P 500 stocks. This should be up to date. I have a little algorithm that just starts my downloader and updates my data every day. So I'm just going to run a scan against my local S&P 500 list, and that easily, we're going to go ahead and see it. It's just going to chunk through this data. You can see it goes rather rapidly. What it's going to do is it's going to give me just basically a list of all of the stocks that are included in that have a HRC trap. So right here, this basically 3M had an HRC trap. You'll notice that it has a 1 in this column. That just means it's true. It's always going to have a 1 in that column because I filter it out of the list if it doesn't. And then you'll be able to see the close price. So if I wanted to run that scan against the S&P 500, I'll go ahead and I can go ahead and then open up the chart. We'll go ahead and do that. And then then what you're going to do, this is the top dog system because that's what I was looking at last. But there is a template that goes along with this. So if I go to that HRC 3x8 trap and apply it, I'm going to have the moving averages, the exponential moving averages, as well as the highlights on the chart. So you'll see right here, there is a highlight. Here's where the trap actually occurred. And we can even go in here. I'll zoom in a little bit. And we can look at the expert commentary, and it'll give us a pretty good detail of what that trap is, and quite a bit of notes here. So yes, you can scan for it. Thank you for that question. I love the ability to scan in Metastock. I think it's actually great. That's one of my favorite features. I mean, I'm an options trader, particularly. And so, there's 4,500 optionable stocks. Out of those, I've got a little pre-filter scan that I run, and there's about 2,300 that meet my price and volume requirements. But for me to be able to go in and say, okay, show me all the stocks that have an example today, just allows me to ignore all the crap out there and just focus on the stuff that has an opportunity. And that's one of the reasons I really, really like Metastock. So in any case, how much does it cost? Thank you for being interested, Ron. So you're going to get the 2 explorations, the 2 expert advisors, the 2 layouts. There's one for 3 8x8 trap because it uses different moving averages. And then there's a different one for all the other patterns. And then you'll get all 5 of those unique patterns identified. The cost for it is $7.99. That's a one-time cost. It's not an ongoing cost. So you buy it, you own it, it's yours for life. The summit special that we're going to do on it is $6.99. So, you make a good trade or two, you own it. It'll help pay for itself. If not, we do offer it with a 30-day money-back guarantee. If it's not helpful, you can return it. To order it, give us a call at 800-882-3040. You can also visit us online at metastock.com/saleschat. I want to reiterate, if you already bought Rick Sadler's Patterns for Profit, just go to our website, go to My Downloads, and download the new version. It's available for you, and it is free. So, somebody's higher image, I think you're making me hungry for pizza. We're going to do lunch here in a minute. So in any case, that is part of the toolkit that we're talking about today. And some of my favorite products. We're going to talk a little bit about Metastock right now because it's my turn to talk. But you'll get Metastock real time. You'll get 3 months of the Zenith data. You'll get Vince Vora's Veracity. You'll get Fulgent AI. You'll get Patterns for Profit. You'll get Barry Burns' Top Dog Trading Toolkit. You'll get 3 months of the premium learnmetastock.com subscription. He does hundreds of videos, 3 live webinars every week about Metastock. It's a great site. People love it. You'll get Unleash the Power of Metastock. You'll get 2 years of stocks and commodities, white glove installation to help you get everything running and installed. And normally everything on here would be $4,805. You can get it for $1,985 today. So 800-882-3040. You can chat live with us at metastock.com/saleschat. And you can also visit us online, and you can order this online at metastock.com/summitdeal. Okay. So Servian says that the link for the hit and run candlesticks offer does not work. I think I know what the issue is there. Let me repost that for you. That was my mistake. Let's see if I can just copy it. That equals should be a dash. And when I typed it out, I included an equals and not a dash. Try that one. Okay. Okay. Bo asked a specific question about Rick Sadler. I'm going to answer it. Why are your classes blue when the price is below the 17? So we're looking at actually the close price. Okay. And I'll just explain real quickly how this works. So if the close price meets a trap setup, okay, so the close would be up here, and in this case up here, in all of these cases it's above the 17. So if it meets the trap setup, you're going to get a blue. If it's not a trap but it's in a bullish trend indicator phase, you're going to get this bullish ribbon here, and you're going to have a green bar. If it's in a bearish phase, if your trend indicator is in a bearish phase, you're going to get a red bar. So that's how the highlights work. I don't see any instances in which we're down below the 17 exponential moving average based on our close. So there you go. Okay. Hopefully that made sense. If not, reach out to me, jeffrey.gibby@metastock.com. Ron says, is Metastock a subscription or a purchase? It's either way. What we're doing with the toolkit, Ron, is we're including 3 months of our premium Metastock real time, as well as the icon data. And I'll go into a little bit more data on that. If you're interested in doing a purchase, what I'd probably recommend is, and what I'm going to recommend as I start talking a little bit more about it, is that you do the 3 months. Because you can do 3 months for as low as like $69. that's more than enough time to kind of explore a lot of the software and make sure it's going to be helpful for you. And at that time, you can actually decide if you want to do a purchase or an annual subscription. It's just a very safe way to do it. So that's what I would recommend. Thank you for that question, Ron. Okay. We did have a question about, will this work on a MacBook, Joe? Thank you for that question. The answer is kind of. So it does work on the new Intel-based chips. I call them new. Apple's had Intel in their chips for a long time. It does require Windows, though. So it does require the emulator. You need to use like Parallels or Boot Camp or something along that. So there you go. RL says, can you send the Sadler link to YouTube? I'm going to IM it. If I send it to YouTube, they're going to ignore it. Greg has to send it to YouTube. So I'm going to send it to Greg, who can then send it to YouTube. Because otherwise, just because he's got the permissions to send it to YouTube. So let me go ahead and send that over here. Great questions. Thank you. Thank you so much for that. Okay. All right. And all right. Greg Lewis, if you are listening, please send that link that I just instant message to you to the YouTube. Okay. And Sravina says this is working. The Summit deal page, Gordy says, shows a different package. That is the same package. What you'll notice is the price is different because it gives you an option. If you're not a Metastock customer, it gives you the option to lease Metastock, either the real time or the end of day. But it is the same package. And if you want to, metastock.com/saleschat, they can help you out there too. So, okay. All right, I do want to say thank you for our sponsor, Stocks and Commodities. They do a great job. They've sponsored us since the beginning. If you didn't claim a free issue when you registered, or if you're watching on YouTube, metastock.com/traders-summit. So, Samuel says, will the promo pack be available in the 3-month trial? Yes, it's included in the with the promo pack. Okay. All right, very good. And now, since it's my turn, I'm going to let Greg Lewis. Oh my!
Yeah, there you go. Did I scare you?
Yeah, it's not the first time though. This headphone does not have a speaker volume control, so.
I'm sorry. If I spoke loud enough, you'd probably just hear me across the hall. As people may or may not realize, Jeff and I are in the same office today, but in different rooms. I'm in the studio, and Jeff's over at his desk because of personal and local restrictions. We can't really be in the same room and talking. So, hey, I wanted to take a moment to introduce to you our very own Jeff Gibby. If you've watched these at all, you know who Jeff Gibby is because he's the star of Metastock. He's the Metastock spokesperson. He's the one whose primary job is to convince people and partners around the world that Metastock's pretty dang awesome, and he does a pretty awesome job for two reasons. One, Metastock is pretty dang awesome, and one, Jeff is just a sincere, what am I trying to say? Straight shooter. He's a straight shooter. You get what you see, and that's what Jeff Gibby is. He's very genuine and sincere. And I've known him now for 16 years. He's been with the company for about, I'd say 27, 28 years, 35, 62 years. And I'd say he's just 24. A great person all around. And again, if you've had any time to watch him at all, you'd know that. And turns out very knowledgeable about Metastock and very knowledgeable about trading. So with no further ado, Jeff, did I miss anything?
I think it's actually 24 years, and that'll be in March. I just did the math, actually.
I'm looking at your bio. Let me look at your bio real quick. I think it says that you have been around for 20 years, but I know it's more than that.
Yeah, we need to update that probably.
So with no further ado, thank you so very much, Jeff Gibby.
All right. Very good. I'm going to take these off just because I don't have to wear them right now because I've got my microphone right here. And, I've read this at the top of the hour. I'm not going to actually read it again right now. I'm sure you had lots of time to actually read through that. I do want to talk a little bit about my experience here at Metastock, even though Greg did a good job of introducing me. I started back in 24 years ago, really. And I started in inside sales. And it's been quite a good experience, I'd say. I didn't know anything about trading stocks when I started. I didn't know anything about Metastock. The reason I kind of started here was I had a buddy that worked here at the time, and she's like, this is a really good company. You should come get a job. I get a referral bonus if you get a job here. And I've just been here ever since. It's a company that I'm proud to represent. Since 26 years in a row, we've been rated #1. So we've started winning those awards right before I started. And it's just been a great, I'm proud to represent the company. I use Metastock to make every trading decision I actually make. And I started in inside sales. And so back in the day, if you called the 800 number, there's a good chance you'd talk to me. After I did that for about a decade, I moved over into our business development team, and I've talked to a lot of the people that are speaking today, Steve Bigelow, Rick Sadler, well, everybody that's talking today. But I've learned so much about the markets, and I feel like I've been lucky to learn as much as I have about the markets. And it's a very tight-knit company. We take very, very good care of our customers through our support team, and just it's a good attitude. It's a good company to work for, and I couldn't be prouder to represent Metastock. So I'm glad I'm here. I'll probably be here till I retire, which is going to be another maybe 6 or 7 years. So in any case, when I started, you probably read this slide by now, but when I started, we were owned by Reuters. That became Thomson Reuters, and then it became Refinitiv. Between Thomson Reuters and Refinitiv, we actually did a software buyback. Scott Brown purchased the company, and we've been able to kind of get a best of both worlds going on. Under Reuters, it was a little bit hard to kind of develop and design the software because a lot of our programming resources were actually developing and helping them develop the Icon platform. We call it the Zenith platform. But we've been able to kind of separate from them. And, Reuters, Refinitiv, Thomson Reuters, has such a great legacy. A lot of people are familiar with them in terms of kind of being one of the best news services on the planet, right up there with Bloomberg. A lot of people don't realize this, but they have literally thousands of journalists and hundreds of different bureaus, and some of the best news and information and stuff available on the planet. They also have pretty huge market coverage. So there's a couple hundred different exchanges that are included in Metastock, and all of those exchanges, whether it's, I know we have people in India here, London, Australia. We have customers literally all over the world that use Metastock, and we wouldn't be able to do that if we were owned by Reuters, or if we didn't have a good partnership with Reuters. So, and we do. And their data feed is great. We're not even going to talk about it today, but it's an institutional quality feed. Hedge funds and mutual funds and banks use it all the time. So there you go. We bought ourselves back from Reuters. One of the things, and we won't spend a lot of time, well, we're going to spend all of the time in Metastock, but I want to kind of talk a little bit about it. One of the things I do like to kind of brag about, because we're proud of it, 27 years in a row, we've been rated #1 in our price category. So there you go. Anyway, that's about what we're going to talk about today when it comes to Metastock. What I want to do is, in the class I'm going to do, is actually called Finding the Right Trading Strategy for You. So Trading Pal actually asks the question, what strategy works best? We're actually going to talk a little bit about how you can use Metastock to evaluate that by yourself, and how you can kind of take a look at that. If you're not familiar with this guy on the screen, he's a guy by the name of Richard Dennis. He has a quote on here. I like kind of the backstory of this. So I'm going to talk a little bit about that, but not too much. Richard Dennis was a famous futures trader back in the 70s, 80s. He was friends with a guy by the name of Bill Eckhart. And Richard Dennis and Bill Eckhart had a bit of a disagreement in terms of whether or not you could be a successful trader, whether or not they could, as successful traders, bring people in off of the street and teach them to be successful traders. And so if you've heard of the turtle trading methodology, or the turtle traders, this is kind of the story of them. They had this gentleman's disagreement. They decided one year to kind of bring in a bunch of traders. They did that. They gave them some money. They sat them down. They taught them how to trade. They spent a few weeks, and then they basically had this experiment where they decided, can we teach people how to trade? And that was kind of the whole point, right? And it wasn't a successful endeavor for them. It was a very successful endeavor. You can look up kind of the details, because they're a little bit sketchy for me in terms of trying to call them out of the memory banks right now. But I believe they made about 74% year over year for the first year. And it was just one of the most famous trading experiences in history. And Richard said, I always say you could publish the rules we were using in a newspaper and nobody would follow them. The key to trading is consistency and discipline. So today we're going to spend a lot of time talking about what a technical trading system is. In fact, we've got in Metastock a version of the turtle trader methodology. But one of the things that I'd like you to remember is discipline. So, and one of the things that when we're doing this class, or when I'm teaching this class in person, one of the questions I usually ask the audience, and almost going to do it here, but what is the best profession for trading is one of the questions that we always go in and ask. And it's interesting kind of the feedback that we'll get there. Some people come in and say, well, a psychologist, is it a psychologist? And coincidentally enough, Jake Bernstein, Alex Elder, some of the people that we work with are actually psychologists, and they do quite well in trading. But the actual answer, the best profession to have before you start trading, is an airline pilot. I put a little thought into that, and I think the reason that they're so well geared is the discipline aspect. In other words, for every time they take off in their airplane, they follow a very, very specific, here's how I'm going to go ahead and get in the plane. Here's how I'm going to, here's the thing, my checklist, if you would, for taking off. And here's what I'm going to do when I land it. And here's my checklist for landing it. And, if there's an emergency, I have a checklist for that. It wasn't exactly that you should land in the Hudson River. Somebody pointed that out. But they have a disciplined approach to what they're doing, and they just follow the rules. So we're not going to talk a lot about discipline today, but we're going to talk about trading rules. We're going to spend probably, looking at the clock, probably about 30 minutes talking about trading rules. But the idea here is discipline is important. So there you go. If you do have questions while we go, I try and keep a fairly active eye on the chat. I've got the YouTube over here. I've got GoToWebinar here. Make sure you ask them. If there's particularly stocks that you want to look at today, we're going to be looking at your stocks. I am not a fan of picking the best examples and showing you idealized examples. There's very, very easy to do. We'll just use the stocks that you're interested in. So if the first person to put a stock symbol in here, that's the stock we're going to look at for the first part of the presentation today. Okay. And I'm waiting for one. If it's Metastock saying RCL, I'm going to ignore it and go for the second one. But other than that, we're going to go ahead and use whatever symbol you want to look at today. We're going to be talking about trading strategies. No symbols yet? Come on, guys. Give me a symbol. Otherwise, I will pick one out of random. But this is a guy by the name of Gerard Appel. If you're not familiar with Gerard Appel, he wrote an indicator you might be familiar with. It's called the MACD, or the Moving Average Convergence Divergence Indicator. We're going to talk about the MACD, how it's calculated, how you use it to get signals, and kind of like some of the more popular ways to use MACD. And then we're going to, for you, Trading Pal, we're going to compare that to other trading systems using the system tester in Metastock. So now we're getting some stocks. Quite a few of them. Okay, so let's go ahead and get into Metastock. I'm getting a little bit wordy, so I'm going to go ahead and kind of just make this a little bit cleaner. I'm going to go ahead and take off the expert advisor, detach. Go ahead and delete all three of the indicators. I'm just going to go ahead and click on edit, delete all here, and we'll delete all of the indicators. And it looks like the indicator, or the stock that we're going to be looking at, is SPCE. Let's go ahead and look by name. SPCE. Gordon, I'm not seeing that one. SPCE. by symbol. Starts with, okay. Nope, we're going to go with Tesla. I have to say I own Tesla right now because I think I'm required to say that, but we'll look at Tesla for that. Okay. And let's talk a little bit about how MACD is calculated. So I'm not encouraging you to buy Tesla, but I do have a couple shares right now. Let's talk about MACD. Okay. I'm going to basically just apply some indicators real quick to this candlestick chart. One of the things I'm going to talk about real quick with Metastock is anytime you want to change anything on Metastock, it's really easy to do. Just remember to double click on it. So if I double click on this, I can change it from candlesticks to bars or whatever. And you go ahead and click on candlesticks. So we'll leave it that way. I'm just going to add a couple of indicators here. So the first one I'm going to do is a moving average. One of the things with Metastock that I really like, we've added some things that I really like lately. There's a couple hundred indicators that are in here. So you can kind of see that they have everything from Elliott wave counters to sector stuff to hundreds and hundreds of indicators. One of the things that they decided to add, I think this was in 16, was the ability for it to remember which ones you actually use. And so it keeps a short list of the ones that you're actually using on the quick list here. You can see that I have indeed been working on Rick Sadler because I have a test indicator right here called Blue Trap. But let's go ahead and add the moving average. I'm going to go ahead and drag this off. And what I mean by drag is I hold the mouse button down and I drop it where I want it to go. So if I drop it right here, it's going to pop up a little bit of a dialog box. And I'm going to add a 12-period exponential moving average. So we'll go ahead and go 12. We'll go exponential. And it's going to be based on the close. Okay, I'm going to repeat that process right now with a 26-period exponential moving average. Now, one of the things I will say real quick is Gerald Appel did not actually use whole moving averages. He used like a fractional moving average, but they're closest to 12 and 26. It's a little bit beyond my expertise to explain to you what a fractional moving average is because I barely understand it myself. But if we use a 12 and a 26, that's going to be fairly close to what he's actually using. Okay, so I'm going to go ahead and add that to the chart. Before I do, I'm just going to change the color real quick, and I'm going to make it a little bit thicker. Okay, just like that. We'll go ahead and click on OK. I'm going to go ahead and double click on this again, like I was saying before. You can just double click on things and change them and kind of make them look a little bit better. And then I'm going to add MACD. Since I want MACD to be in its own upper window, I'm going to just drop it up here. I could also drop it down here. And what you'll notice is if I drop it at the very top, there's that little square underneath it. That just means that it's going to open up its own inner window for me. I know I'm moving a little bit quick. I'm just a little bit concerned about time because I only have 30 minutes right now. So, okay. And then here we go. We'll go ahead and leave. Actually, I do want to change this a little bit. I'm going to change the style to be a histogram. Okay. All right. Okay. And perfect. That's what we're going to kind of talk about for a minute. Now, MACD, I'm just going to switch back to my PowerPoint real quick, is a trend and it's a momentum indicator. Okay. And so you've probably heard like the trend is your friend, befriend the trend, or a rising tide lifts all boats, or any of those old market cliches. The MACD is specifically designed to look at trend and momentum. And so I'm going to explain that a little bit. If I wanted to calculate the MACD value, and when I mean MACD value, right here, this is the MACD value, this red histogram. This histogram value is taken from subtracting the value of this 12-period exponential moving average and subtracting it from the 26-period exponential moving average. And that's it. So you'll notice here that if a stock is trending up, you're going to have the shorter moving average is going to be above the more medium-term moving average. And so you're going to get a positive difference when you subtract that shorter term from the longer term. So that's how you get the calculation. If you're in upper trend, you're going to have a positive value generally and a negative value otherwise. Okay. The more momentum is behind that trend. So the faster things are moving up, and in this case, Tesla, the faster it's moving up. You see, we had a very good move up in Tesla before the split. The more it's moving up, the bigger that bar is going to be. The more sideways it is. So if we come back here to a bit of a sideways area, like this whole area right in here, you're gonna have a much more shallow. And this is actually probably a pretty good run up. It's not really that shallow, but compared to recently, it's shallow. So we'll just say that the momentum isn't as high here. If you're coming down in price, like from here to here, you're going to have a negative or a decreasing value. And that's how you look at it to measure not only what the trend is, but the momentum. Okay. Trading Pal says, I have a Tesla spread. Okay. Okay. Space is trash. Okay. Well, we're doing Tesla instead, but I'm not recommending you buy it. We're just going to talk about how MACD works on it. Okay, so that should give you a good idea of how the MACD histogram is calculated. In addition to the histogram, what you're going to use is you're going to use what they call a signal line, and that's this dotted line right here. I don't like it being the same color, so I'm going to actually just make it blue. Okay, doesn't matter that much, but we'll use this as a signal line. The way that, one of the ways that Mr. Appel taught on how to use the MACD is if it's up above its signal line, your MACD is going to be in a bullish zone. Okay, so if this MACD is trading up above its signal line, you're going to say that it's bullish and that you anticipate, in this case, Tesla is going to keep going up. And that's it. Very simple, right? If it's down below its signal line, like it is right here, then you're going to say Tesla is in a bearish zone and you anticipate bearish is, or Tesla is going to go down. Okay, so we actually have an expert advisor. I'm going to attach it, and it's called Metastock by MACD by Metastock. So the expert advisor just kind of is, we've been using it all day, but what it allows us to do is it allows us to understand what's going on in a chart. And there's a bunch of different expert advisors that are included with Metastock that kind of do teach you about different technical techniques. One of the ones I like to show is a candlestick one. I won't have time to show it today, but it just identifies all the single day patterns and tells you what they mean. So right here on the MACD expert, you'll see that there's this bit of a bullish trend ribbon. And that just tells you that you're either below your signal line, or you're in a bearish phase for MACD, or you're above your signal line, or you're in a bullish phase for MACD. Okay, you'll also notice that when you go from bearish to bullish, you'll get a buy signal, because if you anticipate the stock's going to go up, well, then your logical thing is you'd want to go ahead and buy it. Okay, and that's just as simple as it works. If it gets to a point where it's extended, you'll notice that, well, that's getting a little ahead of myself. So the first way we're going to look at the MACD, just to be really specific about it, is we're going to look at whether we're in a bullish or a bearish phase. And that's the most classic way you can buy it based on a MACD. If you cross up above your signal line, you could buy. If you cross down below your signal line, you could sell that long position and go short. Okay, so this is very, very simple. The other way you can look at MACD, there's two other ways, so for a total of three that you can look at. The second is a momentum reversion of the mean type of an indicator. Is MACD looking overbought or oversold? So if we're looking at MACD here where it's plateauing right at about 45, we might say, okay, well, MACD is kind of a little bit in an overbought or an overbought territory. We might want to expect that there's an impending reversal or a reversion to the mean at least, and so we might want to get a little bit more protective about our stop. Metastock actually measures that for you. If you look right here where the bars go from black to red, this is where Metastock is warning us that MACD might be in an overbought or an oversold condition. So, in fact, if I open up the expert advisor that we've been talking about all day, if I look at the expert advisor and I move this triangle back to this day, I can actually show you that it's going to tell you about that crossover. The crossover is just the crossover from below the signal line to above the signal line, but it's also going to tell us about the overbought, oversold range. So the MACD is in an overbought range. Again, we're looking back right here. Prices may continue to move higher for some time. So in other words, it's saying, you know, you're in an overbought range. You might want to be a little bit more careful. But you know how trends work. They can keep going and keep going and keep going. So what we want to do is maybe consider moving up a stop, or we at least want to see some evidence that the stock is going to move lower before we kind of act on that. But it is warning us that we're in that overbought, oversold territory. And then the last thing, so that's the second way. You can use it as a momentum indicator, overbought, oversold. The last thing that you can look at is divergence. And a person that I have very big respect for, huge respect, is Dr. Alexander Elder. He's a great technician. He wrote a book called Come Into My Trading Room, and he talks about MACD, and he calls it the most powerful signal in all of technical analysis. But he looks at, one of the things he looks at for specifically is divergence between the MACD and price. Okay. And very quickly, just so you can kind of know what that's looking for, is if I was to look at the peak in this MACD here and the peak of the MACD here, maybe I grab the trend line 4 and just draw a trend line there, you know, there's an obvious upward slope to that, right? That's very obviously going up. If I was going to compare that to what the price did in roughly the same peak area, so let's look at this peak to this peak, that's also rising. So they have a similar peak, they have a similar trajectory. That's not a divergent. If we looked at this and the peak was looking something like this instead, actually give me that, give me the corner. Like you had one that was sloping down like this, that'd be divergence. In fact, that would be a bearish divergence. And you'd be actually looking for a very strong reversal signal there. And you'll notice right here, the expert advisor will look for that as well. So right now it's going to inform us on what the crossover is doing, how much the price has risen since the crossover, whether or not it's overbought or oversold, and whether there's been divergence on the chart. And that's pretty much a very simple way to learn about MACD. It's a little bit more abbreviated because I got kind of talky at front, and I talked a lot about Rick's stuff, but it's very, very simple. It's very straightforward. There's a couple things that I really, really like about technical analysis in general. The first thing is that it's very objective. So you'll notice we're looking at Tesla. I didn't talk about how Elon Musk is maybe smoked weed on Joe Rogan's show, or the fact that he's looking to move into China, or the fact that his truck is looking to do well, or hey, maybe it's overbought or oversold. Some people ask, how far up can Tesla go, for example, and is it gonna implode, right? I haven't talked about any of those things. I haven't talked about what is happening with coronavirus or how coronavirus is affecting the Tesla business. It isn't. What I'm looking at very, very specifically is what is going on in the chart. What is the trend and what is the momentum in the chart? And that's all. So you'll also notice it's very objective. If I did a decent job of explaining to you what's going on this chart, you'll be able to see a MACD sell signal with or without Metastock. You'll just need MACD. You look at here and you'll be able to see the MACD drop down below a signal line, which is why we got a sell signal on the chart right here, right before it kind of dropped off in price. Okay. So it's objective. It's also duplicatable. If you're somebody that's new to the market and are going, okay, there's 400 indicators in Metastock, where do I start? Well, since it's something that's objective and not subjective, I can start by saying, okay, well, if I took every single buy signal on this chart, how well would it do on Tesla? And I can compare that using Metastock to other methodologies. I mean, right now, my goal was to kind of give you a little bit of insight into what MACD was doing and how it's calculated. I find it surprising personally how many people use MACD, but they don't really understand what's going on in it. So my goal was to kind of help you understand what the indicator is, but we just spent 30 minutes maybe talking about MACD, how it's calculated, how to use it and stuff like that. You don't want to times that by 400. What you want to be able to do is if you're interested in Tesla or optionable stocks, or let's say the S&P 500, what I want to be able to do is say, okay, well, what works? What is the method that's going to work best for what I'm actually doing in the market? And we do, the way that we do that in Metastock is we do a system test. So I can come in here, I can go into the power console here, I can go to the system tester, and in Metastock, just out of the box, there's going to be roughly about, well, there's 58 methods that aren't optimized and that don't use a lot of optimization. And so I've made a list of all of those using favorites. So I can say, okay, well, what works best? And when I say best, I mean what works best for me, or what works best on these instruments, or what trades. I call this class finding the right method for you, because there are different risk reward parameters Your situation may be a little bit different than mine. I can watch the market all day, but I don't because I'm very busy at work. And I don't really set aside that much time to trading. So anyway, let's go ahead and test Tesla. And I think it was Tesla dot, is it? Oh, yeah. And since some of you guys were nice enough to throw in some other things, we'll do XLE because that was on the list before. We'll do Apple. We'll do IBM, MSFT, and NVDA. Sure, Thomas, I'll add that here too. NVDA. Okay, and I'm just not sure if it's a .o. Oh, that's not the right one. That's going to be in Denmark. Okay, .o. Okay, so the thing that I'll say about our system tester before we go 15 minutes. Okay, the thing I'm going to say about our system tester real quickly is I could actually come in here and test like the entire market. I could test all the optional stocks. I could test the entire S&P 500. Since we've got like 10 minutes, I'm just going to do these particular stocks. I'm going to go back 250 days. I'm going to take long and short trades. So we're going to do both. And we're going to say, okay, what is the one that worked best? So the idea here is I want to, if it's not MACD, I don't care about MACD unless it's helpful for me as a trader in the stocks that I'm interested in. Okay, I'm going to start with a hypothetical account of 10,000, and I'm going to trade 75% of that equity. I'm not going to charge any points to get into the market, and I'm not going to charge you any points to get out of the market because nobody's paying commissions anymore. And there are different ways that you can set it up. Just for the point of brevity and time, I'm just going to run 75% at $10,000. That means that when it takes a trade for $10,000, the first trade it's going to take is going to be 75% of what's ever in the account. So but the first trade is going to be $7,500. If it grows that account to 40,000, then it's going to be doing 75% of whatever is available in that particular stock for that particular instrument. Okay. Trading Pal says Tesla and NVIDIA are my favorite. I don't own NVIDIA, so I don't have to give a disclaimer about that one. So let me go ahead and start the system test. I thought I had started it, but let's go ahead and start it anyway. Trading Pal says, can Metastock go back in time and replay the stock move at certain points in time? So I'm not ignoring the questions. I'm just trying to move a little bit quickly. But right now we're running a test, so I can kind of spend some time. Yes. So right here, Trading Pal, if I just use for the purpose of the demo today, I use 250 records. But if I wanted to specify a certain time frame, you could say I want to test from here to here. And you could absolutely do that. Okay. I'm going to go ahead and view the results here. Okay. And out of the, since we did 58 systems and 4 or 5 stocks, you're going to have average net profit, average percent growth, best profit, worst profit. So right now we're just looking at how did this perform against, let's call it a basket. Okay. So for the basket that we tested, our best for performing system was a system called the PS fractal trading system. Okay. Actually, our best 2 was fractal system. The third best was the Adaptive Cycle Toolkit ACT Mama Fama. Okay, and we can see how often they trade. So on average, this fractal trading system number 1 traded 13 times. On average, it has 6.2 wins to 7.5 losses. On average, for every dollar it lost, it gained $5.94 in profit. Okay, so we're looking at averages. Our fractal trading system number 2 was quite a bit less active. It traded only 5 times on average over the last year. So I'm going to say once every other month or so. Every other month would be 6. 5 is pretty close to that. On average, it made 2.8 winning trades to 2.3 losing trades. And on average, for every dollar it lost, it made 15.76. So on average, if we would have just tried that fractal trading system number 2, would be up 117.76% on average across the basket. Okay. I'm going to go ahead and drill into that. Again, what I'd be looking for is how often do I want to trade? And what does my risk-reward ratio look like from an average perspective? If I click on view here, it's going to give me a basket view. So our actual best performing Trading Pal was the Tesla. So if we look at that, trading Tesla last year using the fractal system number 2, would have traded 4 times. It'd have a batting rate of 4-0, 4 wins, 0 losses, and would have made us about 531%. Okay. If I click a view on here, and I'm going fast on purpose, I just want to kind of get through it. It'll give us an idea of how this performed in average, how it performed against buy and hold, how many trades we had, our average win, our average losses, et cetera, et cetera, et cetera. You can even look at your average hold time. Okay. I could even go in, and I'd recommend you do this, look at the equity curve. The equity curve looks quite nice. I'd like these big empty spaces because you're not in a trade there. And you can be in a different trade if you're not in a trade. So here we had a trade. We can kind of see how our equity would have performed over the last year. Okay, or since you started the test. I say year because we tested a year. Okay, so after looking at all of those and actually spending some time on the report that we started on, if this is something that you like, I don't ever recommend that you start trading Fractal Trading System 2 before you learn about it. Because again, I think that helps with the discipline. If we remember the quote that I started with, the important part is discipline. I think it's important to understand why you're trading. So if it looks like that got a little funny. I'm just going to go ahead and get back to the Power Console here. We'll go ahead and open up Tesla. And what I'm going to do is we'll talk, how do I learn about it now? Okay, so it's a system in Metastock. Again, I accidentally have the expert advisor for, let's go ahead and switch that expert advisor to the one that matches Fractal Trading System number 2. So I'm going to go ahead and do that. I'll go ahead and attach it. Go ahead and click on close. And I'm going to go ahead and just edit, delete all of the indicators out of here. And that just is a quick way to clean up the chart. So you see we had a buy signal here. We would have exited. We would have bought again the very next day. We'd still be holding on to Tesla based on the Fractal Trading System number 2. But overall, just a glance at this chart, I'd say it's been working on Tesla really, really well. If I want to learn about why I'm getting signals, I open up the commentary. I've got it open right here. And it says there's no trading signals today. While there are many definitions for fractal and securities, we're using Bill Williams and his chaos-based trading methodologies. According to Bill Williams, an up fractal is defined as this. A down fractal is this. Here's where we buy, here's where we sell. So it's very, very specific about what it's doing to get in and out of the thing. This system enters a long position when prices cross above the most recent up fractal. These positions should be exited upon the crossing of the second most. So it's telling us exactly how we're getting in and exactly how we're getting out of this trade and exactly how we're seeing the first fractal. If you're familiar with Bill Williams, he's I think it's Profitunity is Bill Williams. He's a very, very good educator. This is a method that's based on his fractal system. Okay. Trading Pal says, can you talk about more what is the PS Fractal Trading System? I think I just did. So hopefully that's it. PS stands for Performance Systems. There's about 26 of them included in the system, in the methodology. They're put together by a guy by the name of William Golson, and he just gave 26 of them to you. There's an add-on with another 54 that you can buy that's fairly inexpensive. It's like $200. So that's what PS means. So the other thing that I'm going to talk about real quickly and is scanning. If you find something that you like, obviously there's no trading signals on the current day. I could run a scan. If I really like this and I want to be able to go in and see what stocks actually have a buy signal, that's where scanning comes into play. So I love my Metastock, the ability to go in and test trading ideas. We didn't even talk about the forecaster, but the ability to test ideas, to see really good detailed explanation about what's going on in the chart, the ability to scan through thousands of stocks and just kick out all the stuff that's crap and just focus on the stuff that I'm interested in. Such a helpful tool. And I think that's why that has been rated number one for forever, 27 years in a row. I personally wouldn't trade without it. I'd recommend you try it. There's a reason it's been rated so highly for so long. So let me go back into here. We talked a little bit about this. Again, 27 years in a row, rated number one. So there we have two versions of Metastock. I'm going to talk a little bit about how much they cost. We have a real-time version, it's $250 a month. So that breaks down to $100 for Metastock and $150 for that Zenith data fee that banks and institutions pay a lot more for. So it's $250 a month. There are purchase options available, and I'd recommend that you try it first. Like we were talking about earlier, you can buy Metastock as a one-time cost. It's only like $1,200 for the real-time version, and then you're just paying for the data ongoing. But the reason I talk about the subscriptions is that allows you to go in and try it for 3 months and see how much you like it. So that's $250 per month for real time. The end of day is $69 per month. And what we're going to do here as part of the summit is we'll give you a buy one, get 2 months free. So we call it an extended trial. If you buy 1 month, we're going to give you 2 months for free. So that's 3 months. Basically, if you're doing Metastock DC, you can try it for basically 69 divided by 3. I should be able to do that math. 20 something dollars per month. And then if you like it, if it helps you make better trades, it's definitely going to pay for itself. And that's kind of the idea here. So you can take advantage of this either by itself as just a part of the summit offer. We'll give you pay for the first month, we give you second and third month for free, or it's also part of the summit deal. And I'll talk a little bit about that. But if you want to do that, you can call us at 800-882-3040 or metastock.com/saleschat. Trading Pal, couple questions I'm going to answer real quick. What is the difference? DC stands for daily charts. It updates 1 time per day. Real-time RT stands for real-time. It updates all day long. So real-time daily charts. Okay. There are, if you do want real-time, there are some exchange fees that you'll end up paying. So for example, New York Stock Exchange, if you get real-time data from them, they want like $350 or something like that. So you'll pay some real-time based exchange-based fees that go to the exchanges on top of that $250. But we can help you understand what those are for the real-time. And if you don't pay for them, you still get delayed data for 15 minutes. So 800-882-3040. The other thing that I wanted to talk about real quickly is learnmetastock.com. Learnmetastock.com was actually a website service that I've been kind of mentioning a little bit here. It was put together by Kevin Nelson. Kevin Nelson is a guy I like. He hired me for my job here at Metastock. Now he runs a service where he goes and he records and he does 3 live training sessions a week about different technical analysis techniques, how to use Metastock. It's a monthly service. The monthly cost on that is $99 per month. He that's 3 live classes a week and hundreds of recorded videos. It also includes topics like I like some of the things that he does. Like he'll get a technical analysis of Stocks and Commodities magazine and says, "Here's an article. Let's put this together. Let's test it. Let's see what we think about it." And you can download all of the formulas and put them together. So it's got formula downloads. He does a weekly market outlook. He does technical analysis of Metastock, hundreds of recording videos. If you want to do that, we're actually going to give you 3 months of that too. So it's normally $99 a month. You'll pay for 1 month and you'll get 2 months as part of it. Okay. Trading Pal, I didn't forget your question. The 27 years in a row that we've been rated #1. That's by the readers of Stocks and Commodities magazine. They do an award every month or every year, every year where they do a Reader's Choice Award. So their subscribers will ask, what software do you like best? And we've won best in our price category for 27 years in a row. Trading Pal says, yeah, if it helps you make money, I'll buy Metastock for sure. And that's what we want you to do. I mean, obviously, we're a business. We want you to buy Metastock, but we want to set it up in such a way that you can kind of get in, see how it works for you. We'll do our best to help you. We'll have people help you install it. If you have questions, we've got more people in sales and in support than we have in sales and marketing put together. And it's not uncommon. We query how did we do in support? You called support. How did you like it? It's not uncommon for us to get overall support scores of 100%. But we're happy when we do. Usually they're in the 85 to 90 for the weekly basis, but we got some very, very happy people that are happy with support, and they do a great job. one of the things I said at the very first is it's an easy company to represent. The software can help you make money. It's been highly rated. It's been respected, and it's backed by a support team and a programming team and a marketing team here in Utah. And all we do is kind of make it better, and we love what we do, and it's just been a fun experience. I'd encourage you to try out Metastock. 800-882-3040. If it doesn't work for you, you can just cancel your subscription. We're going to do our best to make sure that you're making money with our software, though. So all of that. Did things get out of order here? So, okay. All of that we just talked about is part of our Summer Action Traders Pack, where you can get all of the really good add-ons that we talked about today. They're all listed here. You can get Metastock. You can get the 3 months of the learnmetastock.com subscription. Normally, like I said, that would be $4,805, $19.85. All of the one-time product purchases come with a 30-day money-back guarantee. All of the subscriptions you can just cancel if they're not happy with them. $19.85, which was a pretty good year. 800-882, better than 2020, right? 800-882-3040. You can chat live with us at metastock.com/saleschat, and you can visit us online, and you can get that offer online at metastock.com/saleschat. Muhammad says, if I decide to buy the add-on tomorrow, is your offer valid tomorrow? Yes, you can buy it tomorrow. Thank you for your interest in it. I go ahead and encourage you to buy the add-on that you're interested in today. I think it was for Sadler because it does have a money-back guarantee. So the worst thing is it's going to help you make money. The worst thing is you just have to give us a call so we can give you your money back. So there you go. Let's see. Ravi says, can we screen for classical chart patterns like head and shoulders, double tops, double bottoms? There is a solution for that. It's not built into the software, Ravi, but we can talk to you a little bit more about it, send you some videos. There's 2 products that do that. One's called Chart Pattern Engine, and one that we developed a couple of years ago, John Murphy. So get in touch with us. We'll send you the video on it. Metastock.com/saleschat. I've been working too hard today, Fausto. Let's go ahead and kind of move on. Hopefully I didn't miss any of your questions. If I did, email me and say, hey, why did you ignore me? Jeffrey.gibby@metastock.com. I didn't ignore you on purpose. So there you go. Gordy asks, what's the Unleash the Power of Metastock? It's a training course that you can go through. It includes a workbook and that kind of stuff. I'm going to look through these lists of questions and make sure I didn't miss any. I'll type answers. I want to get on to our next presenter because I want to respect his time as well. Okay. Real quickly, though, I want to say thanks for Stocks and Commodities for sponsoring the event. They've done a great job. How are you doing, Fausto?
Yeah, what's going on? How you doing?
Good. I saw you jumped on there. I'm trying to think of whether or not I should say the cruise story or the baby story. Which one would you prefer I introduce you with?
Why hold back? Say both of them. They were both great.
All right. We're going to do 2 intros for Fausto. Fausto is fantastic. I love Fausto. 2 stories about him real quick. Number 1, he went on this has nothing to do with his trading credentials. Number 1, he went on a cruise with his wife, I think, right?
Yep.
And he was voted most handsome man on the cruise.
I don't know about now, but I got a lot of grays.
Yeah. The second thing that I will tell you about Fausto is one of the most dedicated presenters I know. A number of years back, how old? We'll have to tell us how many years ago, because you should remember.
It's my second born. He's just turned 17, so 17 years.
So you did a webinar the same day his wife was giving birth. And I think you got there with 15 minutes to spare, if I remember.
15 minutes before she had birth. I don't know if that's a good thing or a bad thing that everybody looks at me one way, but I was just being very committed. We just started a relationship, and I'm like, I just hold it in there. You've been there for 2 days. She's been in labor that long. I'm like, it possibly can't happen now. I got to finish this webinar. So I wasn't too far from the hospital, but we worked.
We can always reschedule if it happens in the future, Fausto.
Well, back then, I guess after what happened today, I mean, yeah, probably, right? Let me share my screen with you guys. Hold on.
All right, we can see you. I can hear you great. And I can see your how to trade stocks. Oh, this will be an interesting topic. Good choice, man.
Is it up there? You guys see it?
Yeah, we can see it.
All right, perfect.
I'm going to
Jeff,
get
great.
out of the way. I know we're starting a few minutes later, but only
That's
2.
all right.
We're doing good.
That's
all right. Your turn.
All right, Jeff, I'll see you in a little bit. Well, welcome everybody. My name is Fausto from Cybertrade University. Let me just get a little chat back into questions. If you guys could hear me okay. Just want to be able to see if you can hear me loud and clear. Just want to be able, I know it's been a long day for some of you. Can everybody hear me okay in the, give me a question in the question chat.
Fausto, this is Greg in the control room. All the test computers show audio and video going great.
All right, perfect. All right, good. So let's get started. All right, so listen, I know it's been a long day for everyone here, and listen, Metastock has been around, but I know Metastock for, you could see, almost 20, about 18 years, 17 years with my son. That's how we kind of know how long our relationship is. But you had some great presenters here. I know it's a Saturday, but you know what? What better place to be when you're dealing with coronavirus and staying home, working out of your house. It's just a great job. And the thing about you have to understand is that we're going into an election, and things are people are getting antsy, you know, and regardless of what your political belief is, we here as traders, we don't get political, but we capitalize on it. Just like we capitalized on, and unfortunately, catastrophe do make opportunities. You saw what happened with coronavirus. I've been through, you know, the internet bubble back in 2000, the flash crash, Hurricane Sandy, you know, and now you have a really big election coming up, and you're talking about 2 totally different ideology of candidates. Okay, so we're going to talk a little about them, and guess what? Regardless of who you want to win, we're all going to win, because the way that we have to trade the market is we have to trade what's moving in those markets. So I'm going to try to move along here pretty quickly, and I want to get right to the point, because I want to show you what my secret weapon is. I've been doing this for 25 years. I love what I do. But the thing is this: why do I teach? This is what you're about to learn in the next few moments. I'm going to show you exactly, you know, how I got into the business, why I'm here, and how hopefully I could help make you guys interested in what I'm doing. So we're going to talk about entries and exit points. We're going to talk about the election and how to trade off it. We're going to talk about the best stocks in certain sectors to trade it due to certain political beliefs that these candidates are going to be pitching to us. We're also going to talk about, you know, how we find these stocks and knowing which industries are going to be moving. And most importantly, understanding supply and demand. But better than supply and demand, what makes it? Buyers and sellers. And that's what we're going to talk about. So those are the things we're going to basically cover. Now, just a really quick intro, you know, regarding not the one that Jeff told you. I'll tell you a real intro about myself. So I live here in New York. It's the financial capital of the world. I was trained by the best traders in the world. Before I became a trader, I was actually a pretty bad trader because I was a self-taught individual. And, you know, fortunately, I love this business so much, and I see so many people making so much money doing it. I basically was doing it all wrong. So I took a job in the city. Didn't want to do that because I didn't want to commute, you know, and I didn't want to split the profits. Back then, you had to work for somebody. I'm like, why do I got to split the profits? Why can't I just do it myself? How hard could it be? Well, probably some of you probably realize that now. It's not as easy as people think it to be. So I could tell you this, what I learned on the first day in the job, I should have never made my first trade. I tell every event that I do, everyone the same exact thing. And you're going to see why. Because some of us are trading these stocks more or less backwards. You're not using charts properly. You're not using, you know, the indicators properly. And that's what we're really going to cover. So at the end of this presentation, my goal is this. I want to get everybody to come join my trading room, because everything that I showed you in this room, in this event, I'm going to basically prove it to you. So it actually does work. So you can actually see how it actually happens. So anyway, I got 2 families. You see that's my lovely wife, Debbie, that Jeff was talking about. Those are my 3 lovely sons. And I have a second family, which are my traders. Now, you could probably notice that these people are just like you. Okay. They're grandmas, they're grandpas, they're engineers, they're web hosters, they're veterans. What else we got? Who's there? We got pilots there. We got accountants. We got every walk of life. that out there, and they all look to do the same thing that you're doing, looking to make a day's pay, make a future of trading. Because some of us right now, we're not going to want to give it to brokers. We want to take matters in our own hands. But you got to surround yourself and learn how to. You have to surround yourself, learn how to trade, but you have to also surround yourself with good traders, and that's what it's all about. So anyway, why am I here? Like I told you, I'm here to look for people that I could train, that could trade with. That's really what I'm looking for. Over the years, a lot of the schools that you see in today's industry, a lot of them are my students, a lot of them are my instructors, and just, eventually people outgrow CTU. So, but I'm always looking to teach people how to trade, because I need to teach traders to look for certain things, which I'm going to talk about, is something called iceberg orders. Now, why are you here? That's really what we're coming down to. Trading is not about making money, okay? Trading is about stop losing money. That really is the real reason that people have a mistake. If everyone was making money, no one needs to be here, okay? But a lot of us have to know how to cut our losses, why these things are going down, who's pushing them down, making sure you're on the right side of the trade. So to show you how that works, that's what I'm going to basically cover today. Now, going into this election, how is this going to affect you? Okay, that's really what it comes down to. If it's a Trump presidency, if it's a Biden presidency, how are these are going to affect us? Well, they're all going to affect us positively, because the goal is we just got to know what their ideology is. Some are bigger in energy, some are bigger on minerals, metals, healthcare, infrastructure, defense and security. I mean, these are really some of the big topics that these politicians really are going to make certain markets move. So I'll give you an example. Okay. So when Obama took office, all right, everybody was petrified about the Second Amendment. Okay. Now you could sit there, we could have a debate and oh, that's not going to happen. It's that. Listen, you could say whatever you want. Okay. All I know is that Smith and Wesson, the stock went from $4 to $30 in a less than, and you can see it there from 2012, and then it went all the way to 2016. You can see how it had a really big jump. And then when you had all these crises that happened, these shootings, these mass shootings, and then every time the word gun control came up, boom, all these stocks went up and took off. Now, in the Trump presidency, okay, same thing. Things started backing off. Now there wasn't that much more of a concern right there. Oh, now no one's not going to lose their guns. So boom, the stock literally just basically came straight down. Okay, so things start backing off. Now, S&P with energy ETFs. Once again, those that took a big pop. But then when Trump took office, the thing went down. So they're both two different ideologies of politics. So if you're on the left, you follow on the right, how do we follow these stocks? Okay, so anyway, we really just need to know exactly what's moving in certain industries. And the best place that I look, that I know, is I just work off the scanner. Now, Metastock has a great scanner. You could customize it. You could show where you can see big buyers and sellers. But the thing is this, you have to know where those orders are. And remember, it's these markets that are going to show up in the big percentage gainers and losers. So honestly, I really don't care what I trade. I don't want to know what I trade. I'm not going to hold it against it. I'm not going to use my ideology or my beliefs to say, I want that stock to get crushed because I hate what's going on. That is just a setup for failure. Okay. What it is what it is. You like this job, you want to make a lot of money, you got to not know anything, just trade what you see out there, just focus on what's going to give you the least amount of risk with the high amount of reward. But the best place to find them is obviously you want something that has good volatility, good movement, and there's no better place than check in a scanner. Now, every morning here at Cybertrade University, the way I've learned, and I do this every day with my traders, I run a professional trading room. I start at 8 o'clock in the morning. I do a lot of pre-market trading. Okay. You could also go to YouTube and Facebook. I broadcast live every morning at 9 a.m. But if you want to get in at 8 a.m. before and get that watch list and see what's happening in the pre-market, Guess what? You could do that. And I'll show you how you could do that at the end of this presentation. But the thing is this. Being a good trader, you have to surround yourself with good traders, and you got to. The only way to be connected with them is through our trading room. Okay. Now, can you tell me where to buy and sell? I guess that's really what the main topic is. Okay. So anyway, I can't tell you what to buy and sell. First of all, it's illegal. You got to be registered. I know a lot of people like that and like, oh, Fausto, can I just watch what you do? No. First of all, it doesn't even make you money. Okay. How does that make you money? I'm not, you have to hit the button, not me. My job is to teach you how to stop losing money. The winners take care of themselves. Plus, I like my wife and been married over 20 years. It was 23. Oh my gosh, she'll kill me. And like I said, I don't want to go to jail. All right. So if you do your homework, you could see it. A lot of companies got in trouble for doing that. And even if it was legal, like I said, it does not make you money. Okay. So how do I able to think for myself? Well, the way you think for yourself is you just have to know where everybody is. Frank Ferrara, one of my main mentors, always taught me a very valuable lesson. I'm going to pass it on to you. He says, Fausto, once you think you know something, you're going to lose. I'm looking at him like, what is that supposed to mean? What do you mean once I think I know something? Listen, it doesn't matter what's in Fausto Pugliese's little brain, okay? What you think. It's what the street thinks, okay? If you think you're smarter than these guys, you're going to lose, period. So as much as you like the company and that's even the worst thing. He goes, if you really like a company, that's the worst thing, because what happens? Someone comes out there, a hedge fund, a mutual fund, and decides to dump it, or the CEO wants to cash out because he wants to, buy a house in the Hamptons for $300 million. Like, why is that stock going down? Listen, the only way to know that is following the money, and that's what we're going to talk about right now. So anyway, there are three ways of viewing, of the stocks movement. You got a level 1, a level 2, and a level 3. We're going to talk about all three of them. Now, have any of you guys ever seen me live on NASDAQ? The NASDAQ show? I'm actually a regular guest. I kind of talk a lot about the NASDAQ total view. You can actually watch the video on our homepage or website. Has anybody watched the NASDAQ with Jill Maranjone on NASDAQ? Okay. So anyway, NASDAQ wants you to use their software. They want you to see where the data is. Now with the Metastock, it's a great platform, but the thing is, if you want to see the orders, if you want to see it on the exchange, you got to have one of these. So let me explain to you how all three of them work. So I think you guys can see my pointer here, right? Hold on. Okay, now you can. There you go. All right. So you got level 1, which basically tells you what the stock is trading at. Big deal. How does that help you? Oh, what's the stock? What's Rite Aid trading at? Okay, $14 and 67 cents. I mean, big deal. What does that mean to me? That means nothing. Who's buying it? Who's selling it? Are there any more orders out there in the bid? Is anyone looking to dump it? Where are they looking to dump it? You can't tell on a level 1. And by the way, everybody gives that to you. You get it on a Google. You get on your apps. You see it on TV. That's what you basically see. Now, level 2 is been outdated since the 90s. Okay. I don't even know why they still have it till today, but it's free, and that's basically what it's worth. So anyway, when you look at level 2, you got buyers, you got sellers, and basically you could see who the brokerage firm is and how many shares they want to buy. Everything's multiplied by 100. Problem is, you don't know how many shares he wants to buy behind that. You got the Philadelphia Exchange wants to buy 100 shares at $14.81, but he might want to be at 100,000 share buyer at $14.73. You're not going to see that. So that's where total view comes in. Now, right here is where we're going to see 20 times more data. Period. It's what you basically that's what you train for. You're going to see all the data out there. Now, let me just change the slide here. So my question to everybody here, does anyone here have total view? Just give me a yes or no, just out of curiosity. There we go. Just want to see if I have any, if I can see the chat. There we go. All right. Anybody here have it? Yes, no, I don't know. Anyone? Wow, that's incredible. Okay, listen, that's fine. Okay, that's fine. I'm going to teach you what it is and how it works and why it's so important. All right. So anyway, right here, you could see the buyers and you could see the sellers. That's what you got right here. Now, there's two columns, and we're looking at, what is this, Norwegian Cruise Line. So anyway, the thing about this whole thing is we want to see where what we call an iceberg order, a big block order, a big amount of shares, like what you see right down here, 100,000 share seller at 1728. What fears you more? The guy that wants to sell 100 shares or the guy who wants to sell 100,000? Okay, because remember, how many shares are you really trading? What makes you smarter or think you know more than the guy that wants to sell 100,000 shares? I mean, it's like, wow, well, somebody's dumping, $1.7 million worth of stock. You and I ain't doing that. So the thing is, how do we utilize this platform? How do we actually use the orders towards our trading? So anyway, we're looking at a chart here, and we're looking at, was it SpaceX? Yeah, Space. So look at the stock right here. You can see how the stock went from 1960 all the way down. Hold on, let me get my crayon so you guys can watch. There we go. All the way down to about 1825. And then for some coincidental reason, the stock went from 1825 all the way back up to 1940 in a matter of about 2 hours. That's a pretty substantial profit if you do the math. But how would you have known to be prepared to buy it at 1825? Well, if you look over here on the level 3, look at the NASDAQ book viewer, boom, you could see that there's a 100,000 share buyer at 1825. Oh my God. No wonder the stock didn't want to go below 1825. It's not because Fausto said so. It's not because Kramer said so. It's because there's a guy right there. He's bidding up the stock right there. Now, are you seriously going to question that guy's order? Because if you did and you shorted it, you're not doing too well. You're not doing too well right now. You're actually hurting right now. And now you have to figure out, Jesus, now I'm losing money. How am I going to take my loss? Do I cover here? Where's it going? At the end of the day, you need to watch them. That's what you need to do. Don't watch what everyone else is doing. Watch what these guys are doing. So let me change the slide here. All right. So here is, what is this? Workhorse. Okay. So anyway, here you have a stock. Get my crayon over here. And you can see how the stock literally had 930, went from 1850 all the way up to $24. Wow, that is a huge winner. Huge winner. And guess what? If you weren't prepared to get out and you look at it right now, boom, you're right down to 2050. It's like, oh man, how did that even happen? Why didn't I sell it at 24 at such a big profit? Why did I do that? Well, the reason why you didn't do it, because you didn't realize that with all these orders, the 200 shares, the 500 shares, the hundreds, the 100, there was a 54,000 share guy looking to get at 24. What do you think is going to happen? You know how much money that is? Look, there's not even that many buyers and sellers at even price level. You see, when you really look at the overall data, a lot of people get very confused because they look at it like, I don't know, so many numbers. Forget about all the numbers. You just need one number. And the one number is the big number right there at $24. And if you didn't know that the resistance level is 24, guess what? You just threw away a nice $3,000 profit. And you're like, oh, damn, how do I do it? It's very simple. Follow the money. Michael says, fantastic tool with real useful info. Sure, I can obtain it. Well, listen, I'm an actual, I don't know what kind of trader everybody here is, but I'm an actual day trader. Okay. I'm one of the original day traders that started over 25 years ago. When I started, it was about less than 1,000 of us in the world. Now there's, I think there's over 25 million around the world now that people actively trade. several hundred on day trade. So you can look at me as being your great grandfather when it comes to this industry. I mean, I helped NASDAQ built this platform. It used to be called Island. You know, it was an ECN when it started, and they bought it back. I mean, I'm not going to go over the history on it, but I'm just telling you that nothing has changed 25 years ago versus today, other than technology got faster, internet got faster, and you're going to be licensed to do this when I had to do it. And you have to pay $1,000 for this platform a month that I used to pay, where now you can pay $15 a month. Sounds like a pretty good deal. $15, and that's what kills me. People are like, why wouldn't you want to spend $15 on this data? It's like, you know, and by the way, I don't work for NASDAQ, okay? They don't pay me to do this. I'm here to kind of just find traders that can help me find guys out there in certain stocks to find these 54,000 share sellers on these specific stocks so we could trade together. And if you notice that, then you know what? You're not going to be too hard to educate and teach you how to do it. All right, let's do another one. All right, everybody have a little fun right here. Tom has a question. How do you see total book for New York Stock Exchange? Well, Thomas, basically, the NASDAQ market, New York, it's all on one book. They all share it. It's just, you know, it's just what book you want to trade on. Now it's not like you have to go to New York Stock Exchange and trade, or if you trade on stocks on the NASDAQ, you go to NASDAQ market, you pretty much could trade all these stocks on every market. Okay. Now let's look at this stock, INO. All right. So is INO, is it moving up or down, guys? What do you think? Let's put this to the test. Let's have a little fun, right? What do you think this, looking at this chart, what do you think it's doing? Is it going up or down? Go ahead, guys. Don't be shy. Nobody's going to pick on you. Up or down? What do you think? We had someone that said up. Up. How is this thing's going down? If you said down, congratulations. You just passed the first test of being a successful trader. I know it's a very stupid question, but the thing is this. I just want to make sure we're on the same page because it leads to this next question. You ever own a stock and it goes down, right? And you're like, oh my God, I own the stock at 1450. The market's been open up for about less than 45 minutes. I'm losing money. What do I do? Do I sell it? Well, the goal is this. Who do you need to get this to go back up? What do we need for the stock to stop going lower and start going higher? What do we need, guys? What do we need, traders? Buyers, right? We need buyers. Do you see a buyer in the chart? No, that's only what happened in the past. How do we find the buyers? Gotta go check on level 3. So INO, we're looking at the NASDAQ book viewer, and for some coincidental reason, there are 73 people around the entire world on the NASDAQ exchange right now making up 219,000 shares at 1260. What do you think is going to happen at 1260? What do you really think is going to happen? I mean, I don't want to be shorting at 1260. So the thing is this. As much as you thought the stock was going to go lower, guess what? That guy actually helped run it back up. And the stock went from 1260 to 1360. You ever like realize, like you ever trade and like, you know what? I thought the stock was going to go lower, you know, like, or you ever thought like, as soon as I buy it, the damn thing, you know, goes down, and every time I sell it, it always goes, you know, it always goes up. It's like you feel like they're watching you, right? And I tell everybody, when you're in that predicament, that's when you got to quit. But guess what? They're not watching you. You're not watching them. That's your problem. You have to learn how to watch them. And that's all you have to do. And by knowing what they're doing is exactly you know, because you probably wouldn't have sold it. You probably wouldn't have sold like, you know what? I'm losing money, but I got a big buyer out there, you know? So as much as a Fibonacci or MACD or an SMA or whatever you want to call it, whatever you use, the 2 billion, you know, indicators out there, I'll take that 219,000 share buyer any day. Now, eliminating everything else, where do you think resistance levels is in Uber? Where do you think, like in theory, looking here on the book, on the NASDAQ book, where would you think resistance levels, when do you think a stock is gonna back off? At what price? What do you guys think? See what you guys come up with. Well, remember, resistance is sellers, right? Where are the sellers? On the right. Get it right here. What are we looking for? A big iceberg order, a big block order. And as we work our way down and like, oh, we got 1,500, 200, 800. Oh, wow. 96,000 shares. 88 people around the world are making up 96,000. Seems like everybody wants out at 36. Guess what? Without even thinking twice, okay, stock right now is at 35.52. I could tell you right now, you're only 50 cents away, less than 50 cents of coming up to a very big order. And it's not one order, it's 88 people that make up that order. So when you look at this, hold on. I keep going back and forth to kind of change things here. So when you look at this, you're like, can anybody tell me what you think this stock is doing right here? What does this chart tell you? Stock going up or down? Up, right? I mean, everything. Look at the candles. Look at the colors. Everything indicates the stock is going higher. But remember when the stock that we looked before, we said, you know what? 36 is resistance. I mean, it's a big seller. But when you look over here, you're literally 5 cents away coming up to a very major resistance levels. And you know what? You could sit there and like, you wouldn't even think 36 in your mind is resistance because the way the stock is going up and as fast as it's going up, you're like, this thing could go to 1,000. Well, guess what? They didn't do that. It came right to that 36 and then boom, and right back down to 35.20. Once again, are you watching them? And if you're not, why aren't you? This, fellow traders, this is like, I hate to say this, is like kindergarten stuff. This is like the foundation of trading. If you don't believe in buyers and sellers, I'm not the person for you. But if you believe that there are buyers and sellers and you want to see what they're doing and you want to see it live in the market, then you guys got to come to my trading room because I'll show you this all day long. Most importantly, finding these stocks. You know, I mean, like that's part of our strategy. So a strategy at Cyber Trading Veracity, let me reiterate what we do. So what's great about what my topic was all about is that, you know, we're going to a presidential election. And, you know, when we're debating who's going to win and what stocks are going to be affected and the ones that are going to, you know, profit and succeed. Well, how do you might think one thing, but sometimes it never even comes to fruition. But what does come to fruition is looking at the big percentage gainers and losers. And right away, like I'll give you an example. Did everybody see what happened to Tesla? Huge run up, right? Huge run up. Did you watch NIO? Did you watch Plug? Did you watch other electric cars in the industry or people that build those parts for those cars, how well they did? You know what I mean? So it's an industry that moved. So, and if you heard if Biden wins, you heard what he said, right? He wants everyone to get an electric car. So why do you think Tesla would do phenomenal? Why would it not do phenomenal? So like, you know, so these are some of the things that you have to kind of, you know, if the government said, you know what, we're mandating no more gas, no more fracking, you know, from now on, you got to get solar panels. Now, in your back in your mind, you're like, that's not going to really happen. But you know what? It could. It really could. And if it could, what do you think is going to happen in the solar industry? All those stocks are going to go up 200%, 300%, 400%. I'll give you another example. COVID, right? Who profited from COVID? Zoom. Zoom benefited from it. You could have bought Zoom at 120. I remember one day it went up 100 points. Way to go to 500. You really didn't know that was coming. You really didn't see that coming. You know what I mean? Like, but, you know, regardless, was expensive. I get it. But how did we know that? We were following it every day in the trading room. And not only that, but how do you see it? You keep seeing people bidding up for the stock. So here you are like, I don't think it's going to go higher. Well, you know what? Did you check the street and see what they're doing? Because if they keep buying, then you know what you should buy. When they said then sell, then you sell. A couple of questions here. How do we get account or fake orders that may, quote, shake us out, traders? Okay, that's a great question. First of all, let me just tell you something. This is not fake news, okay? There's no such thing of fake orders because, first of all, if you know a brokerage firm that will let you put fake orders, please let me know who does that because I will be a gazillionaire tomorrow, okay? And I'll throw you a nice bone, all right? Now, can somebody cancel an order? Of course they could. We could cancel an order. And the beauty about what this is, you could see it. You could see it, and which we're going to talk about the next slide. We're going to actually talk a little bit more about that. Okay. Philip says, does this work for future contracts? Well, listen, you have some futures people here talking. I don't trade futures. I know how to trade futures. I like to trade stocks. So, you know, and my thing is this for everybody here, if you're an options trader, if you're a Forex trader, a futures trader, whatever it is, can I just be honest with you? If you're not making money within 2-3 months doing that, you probably should look, and you love this, you love the financial industry, you might want to trade a different market. Okay. Just because you spent all this money, you know, and made all this investment into doing that, I tell everybody, if you're not making money within, I actually say 30 days. It should really I mean, I'm not like you're making gazillion dollars, but you shouldn't be like, you should be meeting, you know, being successful, consistent. If you're not, it's time to move on. All right. So what I do is I just like to trade the stock market because I live in New York. This is basically what we do here. I know if you live in Chicago, you're probably a big fan of options. I mean, that's what they do there. I know if you live in Texas, you're probably in the oil business. That's what they just do there. All right. So it's just how it is. If you're in London, if you're in England, you're probably in the Forex market because that's what they do there, you know? So that's really what it comes down to it. So let's talk about the fake orders, okay? Which basically comes to some of your questions. You didn't think that was coming, huh? All right. So anyway, how do we know if the guy cancels or if he goes out there and he gets executed? Well, there's this nice little window. It's called time and sales. Time means what time a transaction took place because that's the time of the sale. So we have them segregated in two colors. We got them in green and we got them in red. Green means that the people on the offer are getting executed, and red means the people on the are on the bid are getting executed. So the red are the buyers, the green are the sellers. Remember, it takes two to tango. So by seeing this data, you know, gives you a sense of direction. If you see those orders out there, you'll know if they got executed or not. Now, I know some of you here, I always get people ask me, I try to use it. It moves too fast. Listen, the reason why a lot of people do not use time in sales is for two reasons. Number one, the number one reason is they have the defaults wrong, okay? The second reason is they're trading a stock that is way too fast. So, and because they see a thing like thing moving too quickly. So if you had someone who trained you how to do it, then you basically could kind of fix that, and that's what we do. So anyway, let's get back to our level 3. So here we're looking at SRNE. By the way, anyone see this stock? Anyone trade this stock? Tom, these basically are dark pools too. Okay, you know, that's basically what I used to do. You know, I'm the one that actually started it. And like I said, there are a lot of people out there that talk about dark pools. Where do you think they learn? Some of them were my instructors. Some of them my students. But that's a lot what we cover right here. Okay. But the real big thing that should concern you more is not more the dark pools. It's more of the high frequency trades and the algorithms. That's really what you should be really concerned about. But here you have a high frequency trade, an SRNE of 110,000 shares. So now in theory, you'll think like, wow, that's a pretty big buyer. I got to be careful of that. That's definitely, you know, or like if I'm looking to buy it, that's the place I should be focused on, where charts to say with support levels. Now, the thing is this. There's 17. Let me get my crayon here so you can see. Is this working? Yeah. So there's 17, right? Well, guess what? That 17 guy right here, he got executed. 17, 17, 17, 17, 17, 17, 2,400, 1,900, 1,000, 12, 5,000, 2,000, 3,000, just keeps going down, down, down. And then guess what? If you saw a big order and somebody actually executes that person, you should be crapping in your pants. And that's the reason why the stock went from 17 down to 13 like that. Ever get into a trade and like, I don't understand. I was looking at the chart. There was such big support levels. Mr. Fibonacci said so. And then Mr. Bollinger Band said so. And then the 200 moving average said so. What changed? What made it drop? It's not about the past. It's about predicting the future. And by seeing the future of those orders and seeing them getting executed, you should have seen that coming a mile away. And guess what? If you didn't get out, you could be the one that could be holding the bag when stock goes from 17 all the way down to 11. Has it ever happened to you? Because it happened to me many times until someone told me this is what I should be looking at. And it's like almost like common sense. And you know what the funny part is this? When I was sitting there, when I first walked into a boardroom and I was trying to get a job as a trader, and they were showing us that, this is what we're going to be learning and stuff like that. And all I kept on saying is like, why would anybody not why is people so ignorant? Why aren't they using this data? Because back then we used to trade on something that was called an Instinet machine. They're like, why would nobody want this? They're like, well, first of all, a lot of people don't qualify. Okay. Which makes perfect sense. And you know that not everyone qualifies to trade. Secondly, people don't want to pay for it. People don't want to pay for it. They want everything for free. And it's just for free. It's not for me. Okay. I would rather have a good deal than get something for free. There's got to be a catch. There's got to be a catch. Listen, if anyone offers you something for free, there's got to be, no one works for free. There is no such thing of free lunches. As much as there's a free lunch. Oh, they get free lunches. Yeah. Yeah. Who's paying for that? You ever go to dinner and like, oh, he's picking up the tab. Oh, we're going out to dinner. It's going to be free. Really? Well, I never heard of it going out to dinner for free. What's the catch? There's always someone paying. So the thing is this. When I started, I had to pay $1,000 a month for this data. $1,000 a month. Now, a 22-year-old, you know what that is? $1,000 a month. That's like me telling you now, yeah, you can get this data. It's going to be about $4,000 a month. Now, in your mind, you're like, it works. It's good. It tells me 70% of the volume where it goes. 4,000 is a lot. Guess what? My mentors told me, said, listen, you want to make the $250,000, $500,000 a year? Is it really that bad that you have to dish out $30,000, $40,000? It's like rent. Okay. So this is one of the main reasons why. You learn something new you learn something new. Well, listen, that's part of trading. You got to learn how to play the game. Let me change the slide here. Let me actually erase all this. All right. So don't get confused when you're looking at it. Just do it the right way the first time. Learn how to play the game. One of our mottos is called the KISS method. Just keep it super simple. The more complicated you make things, the more bells and whistles you do, the less you're going to react, and the more you're going to overthink things, and you're going to get yourself in trouble. Just follow the money. That's all you have to do. Because guess what? To make this a very successful career, you really don't need to make a lot of money. If you traded 1,000 shares on a stock, $5 stock, $10 stock, right? Stock moves 50 cents. That's $500 a day, 20 trading days a month. That's $10,000 a month. That's over a 6-figure salary. Who doesn't want that job? You really think about it. You think 50 cents, 50 lousy little stinking cents. People are like, what the hell's 50 cents? $120,000 at the end of the year. You ever thought of that? Listen, this is not Las Vegas, not Atlantic City. You're going for the weekend. You're going to try to make all your money in one shot. It doesn't work that way. Okay, it doesn't work that way. You got to be very consistent. You got to be focused on it. You got to have mentors. You got to get good traders with you. You got to do your homework. And then, you know what? It's all it takes. Keep it simple, stupid. I know. So I came up with my own theory. That's an architect's theory. I mean, an engineer's theory, which, by the way, 20% of the traders in my room are all engineers. So if I have any engineers out there, you're probably going to make a lot of good friends. So just to let you guys know, Cybertrade University has, been endorsed by more brokerage firms than anyone in the industry. And let me tell you, if it's good for them, it's obviously got to be good for you. Why they do this? Because you know what? I'm going to tell you point blank. If you're in my trading room, I'm going to tell you if it's for you or not. Okay? It's not for everybody. And that's okay. It really is. Don't feel like someone's going to tell you something you don't want to hear. You're not going to have any choice. But you know what? You got to try it. You literally have to try it first. Get into the game, see what it's all about, and see where it goes from there. But guess what? You go into an election year, you're going to be coming up to certain industries that are going to be really hot. You're going to see infighting going on, okay? The polls keep switching. It's going to be exciting. I'm looking forward to it. Every day I come into the morning is just something new. I mean, you heard what happened to one of the Supreme Court judges. Ginsburg passed away. I don't know. Could that affect the market on Monday? It probably could. You know what I mean? Big time. Big time. If President Trump's able to get somebody in there, forget about if he doesn't even get elected. The Supreme Court is so big. The person there forever could change everything. Certain industries, certain markets. You know what I mean? So these are things that you could capitalize on. So why not do it? But you got to surround yourself with good traders. So anyway, this is what I'm looking to do. I want you guys to come to my trading room. I want you to see people just like you. We start at 8 o'clock in the morning, Eastern time. I know some of you West Coast, you could trade the afternoon. The afternoon's pretty good too. But we only trade about an hour in the morning and about a half hour into the close. That's it. We don't care everything between. It doesn't, we do our classes at that time, whatever it is. But what I want you to do is come into our trading room, the original trading room that I started 25 years ago, and just see what we do. See how we get in on a position, see how people work together, how we buy, how we sell. Listen, it's not the Fausto show. Okay. I'm not going to hear pound my chest. You're not going to see people brag. You're not going to see us go out there and say, hey, look how much I just made $3,000 on a trade. I mean, I don't know. That was when I was 24 years old. Yeah, maybe I had a little ego, but you're not going to see anybody here in the Wolf of Wall Street in here. These are real, true professional traders. We have no tolerance for that, but everybody is working together. You ever, any business owners out here ever hire an employee, a bad employee? It's like cancer in the whole office. You could take down your whole company. Not that the person sometimes a bad person, just probably not a good fit. But how do you know what it's all about without trying it first? So this is what I like to do. I want to make sure that you say who you are. So I'm looking to give you a really good promotion to everyone. I'm not asking for a lot of money, okay? I just want to know this is an application fee just to let us know if you're a real person. So for $9, okay, you can get into my trading room for one whole week, okay? I'm going to teach you buyers, sellers. You're going to get a morning and afternoon watch list. You're going to get a crash course on trading. You're going to be able to talk to somebody on the phone. You're going to get weekly live Q&A sessions, all for $9. That's it, $9. Now, people look like, why so cheap? I just need to know if you're a real person. That's it. Just need to know if you're real. So if you want to know the real truth, and if you're a Forex trader, if you're an options trader, futures, we invite you, please come in. You might like this better. Listen, it's only about 30% different than what you're doing. I think the hardest thing about trading is more of the psychology and the discipline You know, that's really, you have to come over that hump. That's one of the biggest things I focus on trading more than anything. But listen, just try it out. You got nothing to lose, right? And guess what? If you do register, I will actually even give you a personal coaching class, because you know what? If you're going to be part of my team, there's no better person to talk to than me. Let me sit there. Let me evaluate you. Let me see if you know how things work, and we'll go from there. The link, let me just give you the link right here. Sorry about that. Let me go to .co. Just give you the link. Count you in. All right, there you go. Here we I think this is the link right here. The entire audience. There you go. So I post a link up there. You actually can get it right on our homepage or our website. And and by the way, if you want to watch that video on NASDAQ where I go into more detail, actually I did this at the data center. You can see it right there. But right here it says day trading trial right there. Just click over here, and that's where you can register. So I got the link right there for you. All right. Now I got about 10 minutes, I think, about 5 minutes, something like that. Give you guys some time. I know you probably want to get ready for the next presenter, but does anyone have any questions? Anybody have any questions?
We had a question that I promised that you would address on your behalf from YouTube.
Okay.
I was hoping you could kind of talk a little bit about the differences between level 2 and total view. For some of the exchanges that don't offer NASDAQ total view, how does level 2 compare to that?
So level 2 is only showing you the best bid and best offer of an exchange or a brokerage firm. That's it. It's not showing you all the bids and all the offers. You're basically getting 20 times up to maybe 50 times more data than level 2. Listen, level 2 is free. It was great in the 90s. It's outdated in 2000. Okay. And, you know, they were originally supposed to get rid of it, but I guess, you know, people like it, and, you know, and it's free, and they see like the buttons and things glittering and stuff like that. It looks like real live data, but it's really not really helping you out. It's actually doing more harm than good for you. So if you want to see all the orders, you got to get the total view. Now, listen, there are other ECNs out there. I'm just using NASDAQ as an example. There's Archipelago from the New York Stock Exchange. There's EDGX. There's a couple of them out there. And when you come into my trading room, I'll even show you something that's called level 4, which I didn't even get into that, you know, because obviously, you know, with the short time that we have. But if you want to see something really sick, wait till you see how we aggregate all the different exchanges on one order, because you might see a big block order on the New York Stock Exchange and it might not be on the NASDAQ. You know, so right now you subscribe to only one book. I'm only talking about that one because it's a brand that everybody knows. All right, nobody knows, you know, EDGX. That's where a lot of institutions trade. Maybe Goldman's on there or something like that, or Merrill Lynch, you know, or, you know, Morgan Stanley. But NASDAQ, I mean, NASDAQ is pretty big. I would say about 50% of the volume that makes up of the total stock. But that's really what the big difference. But you know what, Jeff, the best way to look at it is get in a trading room, you know, and see it live. It's only the best way to see it. Any other questions?
Yeah, Robert wants to know if he can sign up on October 1st.
So anyway, if you register now, you can't activate until you talk to an education advisor. So because we got to explain to you what you're going to do when you get in there. So nothing's going to happen immediately. So if you want to start on a specific date, you could do that. You know, I mean, I recommend you to do it like on a Monday to a Friday. Have the weekend to review some of the course content, stuff you're going to learn, because you're going to get in there. You can be shocked. It's like you're on the floor of the exchange. You can be like lost. You're going to hear certain lingos, things that people use. You know, you really want to have the total experience of us giving you an introductory of what to expect. Because listen, I would rather you know that trading is not for you than going out there doing a real trade. Any other questions? Order imbalance, is that a different? Well, order imbalance is basically just seeing different, you know, an imbalance of orders on one side versus the other. You're going to see that live, Joe. All right. Any other questions?
I'm not seeing any. Oh, is it level 2 or level 3 overemphasized? Isn't candlestick patterns shows the effect of investor sentiment anyway? That's a kind of an interesting phrasing of that question. I'm not sure. Any thoughts?
Well, listen, I like to use candlesticks for birthday cakes. I tell everybody. So, but when it comes to trading, I mean, if you as a day trader, listen, there are things that you have great presenters here that are big indicators and stuff like that. It doesn't work for me for day trading because I'm trading in such a short period of time. I can't have time to think about. I have a 200 moving average, being so delayed. Why don't you use a 5-minute chart? Why use a 1-minute chart? Because I'm 5 minutes behind. I got to know what's going on, and I got to see where those orders are before it gets there. So as a day trader, we're a little bit different. We just focus on making our days pay. That's it. A lot of people like that concept. You could sleep at night and everything else. But when you start implementing all these other crazy things, it's where you get in trouble. And by the way, this is the best way I explain it, Jeff. I tell everyone this. If you're doing something and, I talk to people like, oh, I've been doing this for 2-3 years. And I'm like, great. Are you making the 6 figures? Like, oh, hell no. They're like, you're wasting your time. You're wasting your time. I mean, maybe you're trading something, making it more complicated than what it is. Why don't you dummy it down a little bit or try something different? And you know what? That's okay. You know what I mean? You don't got to make things work. If you're in a bad marriage, divorce is okay. It's just expensive. You should have known, but you should have knew before you got into it. But it happens. It happens, and you're better off cutting your losses now because you don't want to get yourself in trouble. Any other questions?
Yeah, one more from the Deca in YouTube. What is a good monthly point game?
A good monthly what?
Point gain?
A good monthly point game.
Well, monthly.
Monthly. Okay, so I usually kind of teach my traders how to make $1 a day. That's really what the ultimate goal is. Okay, so that's really what and then you're going to make money, you're going to lose money, and we have a graph. We have this really cool program that will, when our students, we actually go review your journals, which you should be doing. But the $1 a day has usually been the whole theory behind what traders look. $1 a day, 1,000 shares, $250,000 salary. That's really what comes down to it. So that's really, and it's all numbers too. I mean, you don't look at, as in shares, because shares just add to it, So one thing you'll notice in the trading room too, when you join us, we don't talk about money at all. Everybody talks about points because we don't want to discourage new traders with the advanced traders. We're all focusing on points. That's where it really comes down to it. But that's actually a pretty good question.
All right. That seems like the end of the questions. So good job, Fausto.
No problem. Listen, guys, thanks for having me, Jeff. And really miss you. I miss everyone at Metastock. I miss all those great times we had at the Vegas show, at the expos and stuff like that. Hope you guys are doing okay with COVID where you are. And
we are. I think we'll see you next year, Fausto. I have a good feeling about it.
I think so. I think we're going to have a good time. And you know what? It's actually, surprisingly, it's been, this market has just exploded. And so, and I'm glad you had a great audience, a great show up. And, it just shows you the interest of people that now starting to realize, you know what? They're really going to go back to work. Like, they deal with that. Might I just do this? But what's the most important thing for everybody before I go to leave you off with something? You got great presenters here. Metastock did a great job of getting some of the greatest masterminds into this industry. Listen to everybody. Buy a little bit of something from everyone. Try something. Don't be scared. Okay. You're not going to know unless you're actually into it. Sitting there and listening to these webinars are great, but if you don't make that little investment, you're never going to learn the real truth behind it. So stop pretending and start changing your career for the better. What's the worst thing that can happen? You make money, or you might find out it's not for you. You love this job, but you just got to surround yourself with people that have been doing it for a long time that could take you under their wing, because you want to learn from people that made mistakes. You don't want to make those mistakes. So that's how you become successful at it. If anyone owns a business, I tell everyone, why open up a business? Work for somebody, find out the mistakes they made, and then you open up a business if you like it. And that's how you got to do it. So thank you very much. And guys, be safe. And
thanks, good having
you. Thanks for having me. Thanks, everyone.
All right. Very good. Thanks, guys. Another great presentation from Fausto. Let me go ahead and make me the presenter. And I want to say thanks for everybody that's bought something from Metastock today. I appreciate that. Thank you. We have kind of calmed down a little bit. You can still get a hold of us. The good news is there's not going to be as much of a wait right now. So we are still offering the Trader Summit Action Pack. That includes the 3 months of Metastock, the 3 months of data, all of the add-ons we've talked about today. Normally $5,000, $19.85 today at the show. 800-882-3040, metastock.com/saleschat, metastock.com/summit deal. Or the after 7 hours, I have a hard time talking, I guess. Do want to thank Stocks and Commodities for being the sponsor for today's event. If you haven't claimed your free issue yet, go to metastock.com/trader summit. You can traders-summit. You can sign up for a free issue there. And Oscar Carboni is already in the room, ladies and gentlemen, but you're in for a big treat. Oscar is one of my favorite presenters. I keep inviting him to do events like this. Some people might call him a force of nature, but he does a great job. I love him. He's definitely, we saved the best for last. Well, we saved a good presenter for last. Let me put it that way. How are you doing today, Oscar? Yeah, we can't hear you.
Very well, Jeff. Thank you. How are you doing, sir?
Doing great. Doing great. I'm going to get you right on here. I know you want to tell us who is going to win the election with 100% accuracy.
Yes, I do want to tell you who's going to win the election. I'm just not sure if I'm going to be right about it.
Yeah. Well, I just shared this. Well, I'm not going to really put you on the spot like that. Let me put you.
I have no problem with it. Here's what I think. I think that there's a silent majority in this country. They're not rioting. They're not typing on the internet. They stay home. They take care of their kids. They work. And I think that silent majority will come out and probably keep status quo for another 4 years.
All right. Well, let's see. Let's get your screen up here.
All right.
I can see it. All right. Let's see. Oscar Carboni runs OmniCamp. I'll let you talk a little bit about that, but he's a great partner of ours, and I love watching him talk about the market. So I'm going to get out of the way.
Well, Jeff, thank you. And Metastock, before I even begin, round of applause. Great, great company, fantastic software. I started using Metastock at 18 years old, somewhere around 1982. I've been a beta tester during the 80s and 90s because I was a programmer who traded all the way up to 2005 or 6. I beta tested for just about all the software companies out there that are prominent today, TradeStation, you name it. If it's out there, at some point I interacted with them. And here I am, 39 years later, still using Metastock. So, Jeff, thank you. Everybody, Scott, thank you guys. Thanks for the invitation. So, traders, if you don't know me, Oscar Carboni, I started in this business 39 years ago down on the trading floor. And I will tell you that the business itself has changed, but the trading of the business has not. After 39 years of doing this, I can tell you that it's important to keep matters simple. But before I get into that, let me just mention something that's extremely important for everybody to know. This is a very risky game. It doesn't matter to me what you think about this. If you trade options, who told you anything? This is a very risky game. In my 39 years, I've seen more people by accident blow themselves out, lose their accounts, and end up in deficit, owing their trading companies another check than I can shake a stick at. And those were people that didn't follow their trading rules. And I think one of the main things that we need to discuss in this presentation is that you've got to have a specific approach with trading rules. So I'm going to get right into this because I've really got no product to sell you. At the end of this, I'm not going to offer you a product. I have a free live trading room where I spend my life trading 24 hours a day. It's open, available to all of you. It's free, no credit cards, no nonsense. You join me there and you'll just live with a trader who lives his life like I'm in the trading pit still, but the trading room is my pit. You know, we have traders from all over the world. It's a great place to go. You watch this presentation and then you let me know if you think it's a good idea to come join us. So I will tell you after 39 years, there are some simple rules that you better know. Otherwise, this is not going to happen. One of them right off the bat is keep it simple. What you want to follow is the simple stuff on a chart that the street is following, and it's easy enough to find because if you notice something like a parallel channel, well, obviously the street is trading this parallel channel because if you look at the way it behaves at the top and bottom of the channel, you can see someone out there with a lot of money knows what to do when it gets to top and bottom. Simple stuff you want to look for, right? So we like to keep it simple. That's absolutely a rule that you must keep in mind at all times. The market is always right, traders. It does not matter if you were wrong today. It does not matter if your system worked. It does not matter if grandpa gave you a trading tip and it didn't work. Wherever the market goes every day, you need to know it was right and you do not fight the market. When you plan a trade, then you trade the plan. Big step here. Number 3, big rule. You need to know how to plan a trade, and then you've got to stick to that plan every day like a professional. Now, 39 years of trading just about every day of my life. This stuff I'm not making up. I started on the trading floor. There were no computers. I kept charts. This is a real chart that I kept up myself. Point and figure with a pencil on the trading floor when gold was trading $265. In fact, on the other side of it is my book where I had a bunch of orders I had to execute for people. So there were no computers when I got involved in technical analysis. I was here from the beginning of it all the way through today. I am telling you, I know what I'm doing when it comes to reading charts, and I will show it to you as I do in my trading room every day of my life. So look what's going on here. So we're going to plan a trade. And if you don't trade the plan, you might as well just randomly take pop shots, which is gambling, which we don't do. Rule number 4 is always place your protective stop first so that you are not a statistic of the people who think that they have more money than the market can move. And I'll tell you right now, a market can move further against you than your account can handle. So it's a risky game. How do you take the risk out and make things simple? Put your stop in first before you trade. Before you enter into any trade, options trade, futures trade, ETF trade, put the protective stop in and make sure that you know where you'll be knocked out. Then there's a couple of quick things that you need to know, and the rest starts to become clear to you. Number 5, a chart. What you are looking at on my screen right now is nothing more than a visual look of all the news, all the fundamental reports, all of the government reports, everything that's ever happened comes out on this chart. That's what it does. The chart is pure. The chart has no opinion. The chart doesn't think about what happened during the day and write an article for you to read. The chart understands everything that happened without any human thought or emotion. And I am telling you now, the chart is nothing more than the market itself. It is a visual look at all the news, all the reports, and traders' reaction to such right in front of your eyes. And if you can read a chart, you've got it all. And here's what I'll show you. So this is true, and I'll show you why. If you followed my last presentation, I did a Metastock Summit. And in that summit, I showed you a series of charts. And in those charts, I said, look, parallel channels are the flavor of the month. Sometimes it's a head and shoulders or a flag or a flat, like a plateau, and there is no formation. Sometimes they're pennant flags. There's always a formation building due to price movement. And what is the formation of, or the flavor formation of the month? So the last Metastock presentation, I showed you parallel channels working so well. Wall Street is literally bouncing off these channels. When the market reaches these highs and lows, the algorithms know when to kick in. Wall Street is buying and selling it. And we looked at channels and channels and channels, and they were all over the charts. That's basically all we had. So this is different now. I'm going to take you on a little ride for the next hour. You come on a ride with me. I'll show you what I've been looking at all day. Then after that, I'll open up to questions and answers, and we can talk about whatever questions are on your mind. So hold them. I'm going to get started now and just show you what I think is happening. So we had these parallel channels, and I showed you how to use them in our last presentation. Well, something different has taken place, and believe me, Wall Street knows how to read this. It's all built in the algorithms. There are bear flags building all over the markets that is defined by these lines right here. It's basically a series of quick down days that makes your flagpole and then a sideways consolidation. That is called the bear flag. Now, while we were inside this channel, I closed my eyes to what looked like bear flags. Like this right here, you can easily shape into a bear flag. While we were in this NASDAQ channel, if we hit the bottom of that channel and stopped going down, I wouldn't worry so much about a bear flag like this one that was forming, unless it broke out on the downside. Then, of course, I would acknowledge it. But while they were forming inside the channel, I sort of would shut my eyes on this day. And then if Omni flipped to the buy side, I wouldn't worry about the bear flag much. So we moved along and the channel expanded. We got above it a little bit. We got below it a little bit. And look what happened here. We got below the channel and then created the bear flag. Now that, my friends, is different. The markets are morphing from channels to flags, and you'll see that before we're done. Besides that, one of the big street watchers, if you will, one of the things the street watches that's quite simple and easy for all of us to know is the 50 bar moving average. No secret behind it. It's no, it's no magician. It's no magician's tool, but the street follows it. You should too. I'll tell you that much because I certainly do. It's not my end all be all by any means. And in fact, the analysis I'm showing you has almost nothing to do with the Omni analysis, which allows me to get in and out of the trades. I'm going to show you the abstract analysis, which allows us to tell where the market should go next week with very high level of accuracy. So where is the market going next week is all we're going to worry about in this presentation. Not selling anything, not buying anything, what you should do next week if this pans out. So you've got the bear flag in the NASDAQ below the 50 bar moving average, and it's got a projection. Now, not every bear flag is going to work. I just showed you one here that absolutely did not work. So I have found in my 39 years, if you find 10 bear flags in a row, 8 of those in that 10 bar sequence are going to work for you. So if you take every bear flag that you see when it sets up, you will find consistency in those flags. And I sort of like to look at formations and use that consistency. So here we are with a bear flag below the 50 bar moving average. We're falling out of these parallel channels that used to be wonderful indicators of direction and when you should get back in and out. And now we've got a projection off of our bear flag in our NASDAQ down to 10,300, 10,260, if in fact this bear flag is going to produce and bear some fruit. So that is your NASDAQ. It's got a nice, decent sized bear flag, but NASDAQ's not the whole market. It's a piece of it, right? It's a sector. So let's check out the rest of these markets and see if there's more that we need to worry about. I think we'll look at the E-mini S&P next. So your E-mini S&P, in my last presentation, I was jumping all over these parallel channels and telling you, you want to keep it simple? Well, look how simple this works. This parallel channel, fantastic from top to bottom. It hits the top, it breaks to the bottom, hits the top, breaks to the bottom. Wow, what a roadmap. So we were talking about channels at the time. Well, here we are. Now the market is morphing into something different. Now another bear flag on the E-mini S&P below the 50 bar moving average. And if you might note, the entire time this channel ran up, that 50 bar moving average ran up with it. It was a very interesting look. In any event, now we've got bear flags. Channels are no longer the flavor of the month or the week, and flags are. This bear flag also has a projection. That projection is down to 3175, maybe 3150 E-mini S&P December. Now, that flag has formed mostly or partially below the channel. Of course, we're now below the 50 bar moving average, giving more credence to the flag. And likelihood is news is coming out in the chart first. The flag is the formation that shows you some kind of news is coming out. The news should come out next, which we'll find out why that flag was sitting on the chart for 5 days, giving us an indication of what comes out next. And that is how they generally work. So you've seen NASDAQ and S&P. Great bullish channels, parallel channels, worked for a long time. We're starting to fall out of them, and something new is beginning to take fold. So we will take a look at a few of these charts, and we'll look at the entire market. And we'll see if the internals look that way. Is it just the indices? What's going on here, Oscar? What's going to happen next week? Well, the beauty of it is I wouldn't know personally, but these charts I'm looking at with you, they're going to tell us. So next, let's go take a look. I think we'll go look at the Dow Transportation Average. Now, interestingly enough, the Dow Transportation Average has maintained itself inside of the channel. The last flag we talked about was here. It was a bull flag just above the golden cross. The street loves this golden cross, so I always keep it on my chart if I see it. That's the 50-bar moving average getting above the 200-bar moving average. That's a bullish golden cross. I showed you this bull flag in our last presentation, and look at how well it worked. The market absolutely went up. Now, transportation average is not agreeing with NASDAQ, nor is it agreeing with the E-mini S&P, because look, it's staying in its channel. And I'm not going to argue with that, but it's one. We've looked at several, and we will look at more. So let's make this channel nice and dark so we can see it. So transportation average has maintained itself inside the channel, no bear flag at all, and is actually creating a new channel now that is starting to point even more. It's more of a steep channel, right? Giving you possible buy indication. But that's the transportation average only so far. Maybe there are others that agree with the transportation average, and this will show us that NASDAQ and S&P are incorrect, right? If more of the markets are looking like the transportation average, staying in their channels, well, hey, then the tranny is right with the others, and NASDAQ and S&P is wrong. So that's what we're looking at now. As far as I'm concerned, we've got 2 down versus 1 that looks possibly like it wants to go up. And then we'll go to number 4. We'll see what this one looks like. So chart number 4 is your Dow Jones Industrial Average. Golden cross, nice bull flag, broke out, was inside the channel, but look here. Bear flag building, or built already, under the channel, which almost never gets breached, right? This time it got breached. It doesn't usually get breached. If you get near it, it pops. It's been a good channel. Well, it got breached, and the bear flag is built under it. So that's obviously not going to be happy for the market. Now, the nature of flags is that you could literally have another bar on Monday, back up, and head back to the top of this flag, and it's not finished building yet, is what that would mean. So more days in the flag, you extend the flag out a little bit, and you say, okay, I guess the flag's getting bigger. If, in fact, that's the case. That's what you do with a flag, and eventually it'll break. But right now, we're at the bottom of that flag. This day doesn't exist. The flag ends, as far as we're concerned, right about here. And we'll see what's going to happen on Monday. But this is as bearish as the S&P and the NASDAQ, if not more bearish. And I'll just blow up that flag a little bit so you can see it's clear as day. There is a bear flag there, no doubt. So this is the main market, right? The Dow Jones Industrial Average. That's a pretty thick piece of the market. NASDAQ thinks it might be going down. S&P thinks it might be going down. Technically, when you look at the picture, and the street knows how to read these things, Dow Jones Industrial Average thinks it might be going down. Transportation Average, we'll hold that off to the side for now. So we've looked at the main markets, the indices markets. Now, they're made up of major stocks, right? Now, the major stocks that are making the NASDAQ and the Dow and you name it move, we know are our FANG stocks right now. Those are really big and have a lot of weight, if you will, in the movement of our markets. So if the Dow looks like it's got a bear flag and it might want to crack and it's hovering around the 50-bar moving average, and the NASDAQ, which is also made up of stocks, has got a bear flag and it's hovering around the 50-bar moving average, just getting under it, and the S&P made up of other single stocks, and that's doing the same. Well, let's go look at some of those single stocks. That would make sense. Now let's look at the internals and see if they agree. We're futures traders by nature. We're day traders, right? we're looking for Monday's trade, we have no choice but to see what all the indicators are. The different markets together, they'll give us a picture. So let's go see what we can find. And right about here. Apple. Apple's a big piece of this market, right? Biggest company in the country. Was in these wonderful, wonderful bullish parallel channels. They were great. Well, the flavor has changed. Now, bearish flags are the flavor of the week and the month, if you will. And look at this. Apple, a big, big industry leader, drops out of the flag, proof that flags work, is now below the 50-ball moving average and is about to test the low of the channel. Wow. So a big internal saying that NASDAQ and S&P is probably going to be a good day trade on the short side for Monday. This is a big bearish flag, or at least a well-defined bearish flag. After going up for months on end in this fantastic parallel channel, now we're below the 50-ball moving average. And keep something in mind. We don't usually get below the 50-ball moving average. Look, that doesn't happen a lot. Once you get above, you stay above. It's strong. The street loves it. In fact, we're looking at internals. Let's step back and go look at. Now I'm thinking, let me show you how this works. Let's go step back and take a look at, it should be open right here. No, let's just go like this. Open. Let's go back to the S&P chart for a moment. Now, forget flags. Forget the flag. Goodbye. We're going to get rid of it for now. No flag. It doesn't exist, right? We don't know what a flag is. Flags don't exist. And let's get rid of it. We do know that there's a parallel trend line. So forget the flag, pretend it doesn't exist, and let's move this parallel trend line out of the way for just a moment. If it'll allow me. Bear with me, children. All right, it won't let me move it. I'm not sure why. All righty. Let's just cut it out of the way. So let's get rid of the bear flags. Let's get rid of the parallel channels. Let's know one thing. As far as we're concerned, the 50-ball moving average is where you get long. Boom. That's where you get long. Right? Here, it even worked for a couple of days. Something's changing. You see that? Now, I think there's another. Look at, if you look at this. Let's move this out of the way. Move that channel out of the way. Let's pretend that this flag doesn't mean anything. Oscar, you're a nut with your flags. What is wrong with you thinking these flags work? Would you stop showing us these make-believe things you put lines around and you call a formation? Oscar, we think you're crazy. All right, so let's get that out of there. There are no flags. Oscar's a nut. Let's say that there's no flag here. Well, this 50-ball moving average is absolutely the best place to buy. Look at that. It is just a great place to get yourself long. The street knows it. It works every time you get near it. Monster run. And we are here now. So is there a bear flag? Does it even matter? Oscar, we're supposed to buy the 50-ball moving average. Well, that's true, but that's why we're looking at all the other charts to see if the internals are already below that 50-ball moving average, meaning the other indices will come down with them. And that's why I brought you to Apple. So just to keep that in mind right now, the indices are not below their 50-ball moving averages, except for NASDAQ. Little bit of S&P, but not much. But the Dow, hey, baby, that's holding as far as we're concerned. Now we'll continue our search. So we go back to Apple, and Apple below the 50. This is what makes the indices move. They're made up of individual stocks, right? Take every stock at the end of the day to have a settlement price. Count up if you're in the NASDAQ 100, add all the settlement prices add up all the settlement prices, divide by 100, you have the price of the NASDAQ. The indices made up of the prices of stocks, right? So big stock in the indice telling us you're going below the 50-ball moving average, Mr. NASDAQ. That's your Apple stock. Let's go look at another. We'll look at another FANG stock. Amazon. Whoa, what happened here? We were in this fantastic channel. You could count on it. right? It was so accountable. What a channel. But now we're under it. Now we're into something a little different. It's an Oscarism, if you will, known, I've dubbed it the F flag. And that flag can continue on for quite some time, but when you break out of it, boy, oh boy, if you're on the wrong side, you will get F'd. It's my F flag. In any event, another flag, but look, Amazon way below the 50 right now and breaking down from a flag. NASDAQ didn't finish breaking down from a flag or under the 50 completely. S&P not under the 50 completely. Down not under the 50 completely. But look what their internals are telling us. So channels were the flavor of the month. Flags have taken over the controls for now. Flags are at the helm, you know what I'm saying? You have to know how to read them. Flags below the 50 ball moving average, the street is paying attention, I assure you. So now we've looked at Amazon. We've looked at Apple, two of the major components that make up our indices, but we need to see more. What else? Is it just those two? Are the other FANG stocks above those flags? Are there even flags in the FANG stocks? Well, this is called homework. So now we're going to go check more of them. Let's go see what Google looks like. Whew, that one's almost scary if you ask me. All right, so channels no longer rule. See this purple channel here? It worked really well, right? Purple channel looks great. I showed you a little red channel here, and then I showed you this channel here. All right, so we've got those. Channels were the flavor of the month. Now flags are, and that's it. If you can't visually see that, you're not paying attention. Now the street makes up their algorithms based on market movement. Well, market movement is what these formations are based on. I kid you not, you are doing the same thing algorithms are doing, except for they're doing it, they're tabulating it. You know, it's coming out digitally. It's that stuff, just doesn't seem that way to you. It's the same things I'm showing you, and here's why. If algorithms didn't know to buy it down here, well, why did it go up? If algorithms didn't know to buy it down here, what made it go up? We're all in sync. Algorithms are built on market movement. Technical analysis is built on market movement. We are in sync. You just need to know what they're looking at. So Google, keep it simple, traders. You fell out of the channel way below the 50 ball moving average. There is absolutely a bear flag here. You are heading towards the 200 ball moving average. Now that basically is the top and bottom of a market as far as fund managers on Wall Street are concerned. Not that they stick to it like glue, but there's this mentality out there on Wall Street that if it holds a 200 ball moving average, the street will buy it. If it gets below, the street starts to get out or maybe even sell short that same product, stock, commodity, you name it. So right now you are well below the 50, and it looks like you're going to maybe come down and test the 200. That's an interesting thing. That would create a whole new piece of analysis towards the downside if it actually broke the 200. So we'll let the market tell us. We do know now that we're out of channels, and they're not what's holding the market anymore. And flags, right now these are bear flags. Earlier we had bull flags earlier in this channel. But bear flags for now are ruling the quarter, not channels. But that projection off of this flag, I mean, if you don't think flags work, then you don't realize how the market works, because that's pretty simple. Look what happened there. Exactly what you would expect to happen when you come out of a bear flag. And I can give exact projections. I did that for you in your NASDAQ and S&P. I don't know that I'm going to teach that here and now. You come to my Omni camp, I'll teach that to you. It's another story. But I can give exact projections on where these flags should bear fruit. So now we've looked at the NASDAQ, the S&P, Dow Jones Transportation Average, the Dow Jones Industrial Average. We've looked at Apple. We've looked at Amazon. We've looked at Google. There's one chart not pointing towards the downside so far. That's the transportation average. You see the picture starting to build. Let's continue on our ride. Next, of course, we'll have to pull up Netflix. And Mr. Netflix, where are you? Here we go. Whoa, scary. Worse. Netflix falls out of the channel. Goes from channel being wonderful in green. Two things taking place. Bear flag, just like I showed you, which is below the 50. I'm going to consider that one thing at this point. Second thing is new channels are building. Look at this. New channels are forming. And they're not forming on the upside at this moment in time. They're forming on the downside. Right at the top of a bear flag, channels formed, boom. And what if we stay in this? We got some downside to make up for, right? So look, if we stay in this channel, it could be in this channel for a little while. And I'm not saying it has to by any means. We don't do that. We don't tell the market where it's going to go ever. We just follow the signals. Now, this chart shows more on it than you're paying attention to. If you haven't noticed, let me show you what I'm getting at. Let's make this a little deeper so that we can actually see what I'm looking at. Look at the participation level of the 50-bar moving average. Once it gets involved, watch this. The channel gets created right here. Bull flag gets created, bounces off the 50-bar moving average. From that day forward, the 50-bar moving average and the channel become one, like sisters. Look at that. Is that not amazing? Here. This differs. That is different. Things are changing. The picture is changing. The climate is changing for now. And new channels are starting to form towards the downside, below the 50-bar moving average, after we've broken under a flag in another one of our FANG stocks. But we can only find one chart so far out of the big charts. It's not pointing towards the downside. Looks like it's getting a little easier to think that the market has some pullback coming, right? So, of course, Facebook has to be thrown out there. And there we go. Facebook, Oscarism known as an F flag, bared fruit already below the 50-bar moving average, broke below this wonderful channel that held since the day it formed. Once it was formed, it held, didn't hit, but market scared the market back up, held, broke. Something different now. The market is morphing. Things are changing. Signals are changing. Channels are no longer working. Flags are telling you what to do, but another new channel is building here as well. Facebook's another big internal in this market, kids. That's a channel undoubtedly starting to form on the downside, under the channel that was taking us up, below the 50-bar moving average, under an F flag. That is a bearish picture so far. Next week, starting the week off, we're day traders. So after Sunday into Monday, I don't know what I'm going to call for, but so far Sunday into Monday, we're looking for selling short as day traders. That's what my work's starting to show me. We're certainly not done, but I'm getting that picture from this. So there are some other things going on now. It's the dollar movement that has created so much of this upward movement in stocks, because as dollar gets less expensive, stocks become cheaper for us. This becomes an interesting thing. Well, here's what really happens. When dollars get less expensive and bonds are cheap, there's nowhere else to put the money. You got to put it in the market. You got to put it in the stock market and or the commodities markets, assets. So with the dollar going down, almost forcing the price of stocks to go up because of low interest rates and cheap dollars, foreigners can come in with their expensive dollar, with their expensive currency, buy our cheap dollars and buy our stocks. It's almost a bargain for them. It's a mentality and it's actual. So if you're in Europe, you've got an expensive euro and our dollar's getting cheaper, you're getting more dollars for your euro, you can buy more stock. And that's what's created this whole channel all this time. If you ask me, that's what's created the channel, or one of the many things that's created this channel. So let's go look at some other things now that are inflating due to this dollar. This I also brought to your attention. Every chart that you looked at, by the way, we looked at in our last presentation. Now I also brought this to your attention in my last Metastock presentation, and I told you, listen, the Wall Street loves the 200-bar moving average. I started on Wall Street at 18. I'm 56. I'm still on Wall Street, even though you don't have to be physically there. Take my word for it. So I showed that to you, and I told you that in my last presentation. So the 200 moving average gets breached, smackdown happens, right? Look what they do to it. All right, so that's what happens when you get under a 200 ball moving average. You get over the 200 ball moving average, at some point, something different happens, because look here, same thing. Underneath it, they crack it, right? It was here. As soon as it got under, it ended up here. Then eventually it ended up here. But the street watches it. When it cracked here, boom, very quickly, it ended up here. All right, so what happens next? This is basically where I left you guys off. We were just getting above the 200 ball moving average. This channel did not exist. There was no blue channel. Since our last presentation, and I mentioned dollar going down is forcing soybeans up, look at the run that has taken place in soybeans. When? As soon as you got above the 200 ball moving average. If you don't think the street sees that, it's not magically moving when you get above the 200 ball moving average. It's moving because the street is moving it. Next, soybeans daily bar. Love that look. Comes to the bottom of that channel. Certainly we can buy it again. What comes up next? Well, let's look out there. And we'll see what we have on our list to play with here. Boom, look at this one. Wheat. 200 ball moving average, you get above it, it's listed right here for you. You end up here, right? Boom. You get below it, you end up, boom, first here, and then all the way down here when you get below it. You tried to rally, failed, all the way back down here. But look what happens this time. You get above, come back down and test it in the form of a bull flag. Flags are all over these charts. And bam, it gets above the 200 right here, and look at the explosion. Now, does that look like the street was paying attention? The day you got above the 200 in that flag, it just exploded. This is how this stuff works. Now, let's look at the dollar index, because that's what's making a lot of this happen. The dollar index, being in this tailspin, this constant decline, is causing commodities to rally up. And guess what? Once again, to prove that the street pays attention, see how it fails at the 50 ball moving average? I'm not making this stuff up, kids. This is as simple as it gets. You just have to pay attention. Look at the failures at the 50 ball moving average, stuck inside of this channel moving down. Now, the stock market stopped going up for a little while. You want to see why? Because the dollar just went into a plateau. It went into a flat. It's not showing a formation. It's showing nothingness. The market's not liking that. The market is used to the dollar moving down. When the dollar moves down, the market moves up. So here, let me show you the plateau. We're stuck in a plateau at the moment. I'm sorry, that didn't move. So I can understand why the stock market stalled. It makes sense to me. We just got stuck at a plateau in the dollar. Dollar's been a lot of the reason why the market's gone up. It all works together. I kid you not. It's one pretty picture. All the commodities, all the stocks, all the indicators, they work together to create one beautiful painting or a symphony of music. You just have to know how to listen to it. So if you look back here at the back end of this dollar chart, something interesting here. Look, see if I can make this darker for you. That's not the one I need. Just give me a moment. I'll make it clear what I'm getting at. There we go. Look at this. Black, large. This is a pennant flag, or an apex, if you will. Right here. These black lines create an apex or pennant flag. Let's just chop this moving average out of the way for a moment. And we'll even move the bottom of this parallel line just to show you what's happening here. So see this black apex? Wonderful thing takes place. You break out of it to the downside, and it gave a wonderful projection. The projection literally was down to about here on this apex. and it just about got right to the projection of that apex perfectly. But in any event, the market created that apex before it fell apart. Now, a market doesn't have to fall apart when it comes out of an apex, because it could blow out through the upside, and then it would go in this direction. We go up, 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 up. So the dollar moving down created an apex, which broke out to the downside. Follow me on this. It broke out to the downside, right? Breakout was here, and it breaks out to the downside. That's interesting, isn't it? All right, so look at this chart. Look at this chart. This is gold. It's got a pennant just like the dollar did. But the difference between gold and the dollar is the dollar's been in a tailspin on the downside. Gold has been in a parallel channel on the upside. See that? All right, so gold started to fall out of the parallel channel a little, but let's make that parallel channel a little thinner for a moment so it's out of our view. Maybe we'll even change the color. Let's get it out of here for a moment. Let's forget that. Let's look at the pennant flag. Remember that gold's been in the bull channel, dollar's been in the bear channel. Dollar put in a pennant flag and went down. Gold's putting in a pennant flag, and here is what happens usually when dollars go down. When the dollar goes down, gold goes up. Commodities go up. That's the way this works. This is dollar here. These are dollars. This is gold. When gold goes up, usually the dollar is moving down, or when the dollar forces itself down, it forces gold up. And that's an inherent relationship, because dollars and gold have this relationship. The price of gold is priced in dollars. The more dollars there are, the more inflation or inflationary that dollar is towards gold. It takes more dollars now to buy less gold. So that makes gold go up and dollars go down. So back to where we were. If gold looks like this, and it's been in a bullish parallel channel, then it created a pennant flag and broke, and we don't know what's going to happen. Dollar, as you've seen, was in a bearish channel for quite some time. Let's make that a little thinner so you can see all of it. So dollar's been in a bearish channel for quite some time, but when it created its pennant flag, it went down. So if this dollar moves lower out of this plateau, then gold is likely to break to the upside of this pennant flag. And where's that gold chart? It'd be nice if it just showed up there, but it's not there. We'll find it right here. Sorry, kids, for wasting your time. There you go. Gold should actually do the opposite, and that pennant flag should break out to the upside. Now, nothing says it has to. There are no rules and no law that says gold has to move towards the upside, but it makes sense to me. Now, that's the picture I wanted to present to you about where we are now and where we should go next week. If you'd like to join me, please come to livewithoscar.com. If it's www.livewithoscar.com. If you've got a membership, log in. If not, click the register button. Simply fill this out: name, email address, phone number. That's it. You're done. No questions asked, no credit cards. Come to the site. It'll bring you to the site where I have my trading recommendations for each day, and of course a chart to illustrate why I'm calling for that trade. And join us in OmniChat. This is where you'll find me live. Just go to the chat room. You'll click OmniChat, log yourself into the chat room. Trading room. You'll click this one right here. And I've already got mine open. Here's what will happen. You'll end up in this trading room where I will be on camera and microphone. Usually there's a camera above me like the one you're seeing now, as well as a microphone that you can hear me speak from, and another camera facing me so that we can communicate and go through these rough and tumble markets together. I'm not charging a fee for this. You can just come to my trading room. We will give you a free trial of that room. I mean, it's always free, but we'll set you up with your free trial. Just come to livewithoscar.com or contact Jeff at Metastock. And I have basically shown what I was hoping to show. What I didn't, of course, show is how I come up with exactly where we buy and sell. This is very abstract technical analysis. What I didn't show you is what I would teach you when it comes to the Omni at OmniCamp. OmniCamp is a different thing. I only hold 4 of them a year. Very high level. I choose 3 students. I bring them out to Las Vegas. And for 5 nights, 4 days, I teach you the Omni methods on how to use these charts and how to get in and out of the markets as a day trader successfully if you follow the Omni plan. Now, it requires discipline, and all of us have trouble with discipline, right? Following a plan that trade that plan, that requires discipline. As humans, we have difficulty with that, myself included. But if you do follow that plan, you will find it becomes quite consistent. It doesn't matter if it's my Omni plan, if it's your plan, if it's a guy you're following, a gal you're following. If you can somehow follow their plan consistently without interfering, it would probably work. One of the biggest things about doing this and getting it right is never, ever interfering. So if we look at this list I have up here, not interfering, that should be something that you don't even know. That should be second nature. You don't need to write it down. You don't need to know this in a list of things to do. It should be second nature that you never interfere with a trade, because once you've planned the trade, you've got to trade the plan. There is no other way to do this. You must have an approach. That approach must be consistent. It's got to be consistent every single day. Markets like consistency. Question came to me today before we started the presentation. Who did I think was going to win the election? Well, what I'll tell you is this. The market likes consistency. It doesn't care about Democrats. It doesn't care about Republicans. If there's an incumbent president who's already been elected and he's in for 4 years, the market wants to see that guy come back for the next 4 years. Doesn't matter if it's a female, a male, a Republican, a liberal, a Democrat. The market doesn't care about that. Markets do not like change. The market doesn't need to know now it's going to have to price in a new mindset to a new administration. So the markets would like to see Trump win just because he's the same. Take his name off of it. Forget the word Trump, the name Trump. The market wants to see the incumbent president stay where he is so the market can continue on for the next 4 years. Markets love consistency. If you are consistent, the market will love you too. I can teach you that consistency at my Omni camps. That's a completely different thing, though. That's pretty high level. You need to come to my trading room. You contact me there, and you let me know if you're interested in camps. I'm not here to sell those to you by any means. So, Jeff, I am finished with my presentation as far as what I was hoping to show. I am open to questions and answers.
Yeah, great job, Oscar. Let me just plug in my headphones real quick. We did have a question come in through GoTo that wanted to, it was, let's see, where was it? Dan wanted to know if you look at the Russell.
What happened to the camera, by the way? It
Your
just
camera,
disappeared.
well, your camera has been freaking out for a little bit. Like you're just holding. So your camera, I don't know if it's a bandwidth issue, but your camera basically has stalled out in GoToWebinar. If you can turn it back on, you can try. You can also sometimes unplug it and plug it back in. I was having an issue, and I think it was bandwidth related with my camera earlier. So that might be the case. I don't know, but in what we're seeing is a picture of you, a static picture of you with your fist in the air.
Did you hear the audio at least?
Actually,
Yeah,
Jeff,
of course.
I
Everything
took
that
his
actually was
picture
pretty good.
down because he looked like
it's
he
just
was,
the camera's been
he was trying to punch somebody.
kind of stuck for a minute.
Yeah, you know, the camera on my, I have 2 trading rooms open where so I could have 2 cameras. The camera in that trading room's frozen as well. Last night we had a power shortage here for about 40 minutes, and I can't tell you how many hours it took me to get ready for this presentation today. I couldn't get the computers back up.
Oh, yucky.
I was a little sweating at 4 o'clock, but then I was ready at 4:30.
Well, it's funny because I went to bed last night without any internet, and I was like, well, if it's not up in the morning, I'll have to drive to the office, right? So I get up and it's working, and then like 30 minutes before we're supposed to start, it goes down again. So
the good thing you weren't like between 12 and 20, because you might have had to consider suicide solution. I mean, you had no internet all night. What would you do? What would you do?
We had Kelly ready to host. It's really what it came down to. So Dan wants to know if you look at the Russell when you're doing your market analysis.
Absolutely, we look at the Russell. In fact, there should be a Russell chart sitting here somewhere. I'll pull one up. Russell 2000, and let's just label that for you. So if you're watching this, you'll know what we're looking at. Russell 2000. Let's see. So what you've got here is basically, if I make it smaller, you're looking at the same thing, right? You're looking at some kind of a weird flag that's building right here. And I think that we can expect it. In fact, let me clean that up for you. I think we can probably expect it to work because of what we just witnessed together. I tend to think that those flags are real and that the market will have a pullback based on those flags. Maybe it's just called an election pullback. Maybe it's just called a weekly pullback. Maybe the last 3 days, we don't know, but this is a flag as far as I'm concerned. It's just like the rest of them. So this day here is actually part of the flag pole, but you know, I just didn't feel like making the line look so weird. So we're going to say flag, make it nice and thick. And I think we're going to fall out of that flag on Monday and move down with the other markets, because that would make sense to me. Now, Russell would be the other one that's a little bit higher and acting a little bit better, just like the transportation average. But everything else that we looked at looked pretty shady to me, like it wanted to fall apart. Now, again, this is a really big combination. Well, let's get rid of this. Having that bear flag building at basically the 200 ball moving average is a big combination to look at. If it starts to crack, it's going to be big. The street will see it. At the same time, if it's going to hold, that's a fantastic thing. But we just spent about 40 minutes proving that it doesn't look like these markets will hold, even if they went up for a little while. So here you had an F flag, by the way, the opposite, which is a bullish flag that built above the 200 ball moving average, right? And it's right here. Well, you know, one little bar jetted through it, but basically this would be a really nice looking flag that built over the 200 ball moving average. So to show you how well they work, let me just make this a flag for you as well. Create a parallel, make it a little darker, and boom, you've got a flag that would be bullish, which worked, and it was above the 200 ball moving average. So this is a bull flag, and the other thing that you're looking at would be considered a bear flag. Now, they don't have to look exact by any means. Bull and bear flags, to the eye, need to look like a flag. They do not have to be symmetrical in any means, in any way at all. And that's a bull flag. And we'll make that a little bigger for you. So yeah, flags do not have to look exactly like one another, and they don't have to look like the last flag you've seen, but visually it should look like a flag to you. So on the way up, Russell puts in a bull flag above the 200, runs up, and now made a bear flag, but is still above that 200. We'll see what happens. Scary enough, though, if you guys know me well enough, you know that this would end up fitting into some kind of a weird head and shoulders if that right thing filled out, right? If the right side starts to fill out, let's grab another circle. If the right side starts to fill out, you could end up with a head and shoulders here at some point. Maybe that's what the flag's taking us down into, to build another shoulder. But that's in the future, we'll see. So that's what I'm thinking of the Russ for now. This head and shoulders does not exist. I just thought I'd give you something to think about.
Oscar, we don't have a lot of questions, but some comments that I think are worth saying.
Okay.
Sylvester says, Oscar is always on point. Great presentation. Jurgen says, excellent markets overview. Thanks much for the learnings and the offer of the trading room. I'm coming in, sir. Don.
I'm glad to
Don
hear that.
says, here's actually a question that I almost missed. Dan wanted to know, where do you think we have hit bottom and the bulls will come alive again?
So I can answer that in an almost way. Let's get down to the projection first, right? Because that's my first call now. If the flag's going to work and we hit that projection, I will then take a look at my year-end targets because, yes, we're in a piece of analysis now pointing towards the downside. I still have much higher year-end targets for December. And we have an election to get through. Who knows what that'll prove. So I have year-end targets. For now, I'm going to call 10,300 in the NASDAQ, not a bottom, the target where I will then do analysis and decide whether we've reached bottom or if there's another projection to the downside. So if I call bottom from here, I would basically be telling the market what it has to do. I'm going to listen to the market when it gets to my projection, if it gets there, and figure out what it wants to do next.
Okay. Roger wants to know if you look at indicator divergence as a component of your analysis.
Yes, in the 80s, 90s, and even 2000 through 2008. Since 2008, not as much. No, divergence doesn't seem to catch my attention as much anymore as the signals at least turning together. Well, the indicators all turning around the same time. But divergence doesn't catch my attention as well as it did before 2008-9.
All right. And that's it. That's all the questions we've had. It's livewithoscar.com. Sign up, take a look at it, see if you like it. And good job, Oscar. Appreciate it.
Thank you so much. I wish you guys would have had the camera because I was pretty animated, but I didn't know if it was on or off. I just went ahead with the show.
We had it up until a point, and then it looked really good because you were very animated in a still frame sort of a manner. All right, very good. Thank you, Oscar. It was a great presentation. You did a good job. Everybody loves you.
It. So. Omniacs, have a great weekend. Traders alike, please enjoy yourselves.
All right. Thank you, Oscar. All right, let's go ahead and wrap this up. I hope you enjoyed everything today. I hope you learned something. I want to thank you for coming, and thanks for all of the experts that spent some time with us today. What a great day. I do want to say thank you to Stocks and Commodities for sponsoring today's summit. If you haven't yet, you're going to want to do this right away because I'm going to go through and send all of the free trials over to Stocks and Commodities today. But go to metastock.com/trader summit and sign up for any Trader-Summit. Sign up for any of the free offers that you want. For those of you that came in through GoToWebinar, you're going to get a little bit of a survey. Give me any feedback that you've got. You can. It's a 3-question survey. Give me your feedback. Tell me what you liked, what you didn't like. If you have something you want to tell me and you're with YouTube, drop me an email at jeffrey.gibby@metastock.com. If you are watching on YouTube, do us a favor. If you enjoyed the session today, give us a like, subscribe to the channel. It does help. It helps quite a bit, and we appreciate it. So I will, the other thing, let me go ahead and put this back up, the Traders Summit Action Pack. $48.05 is what you would normally pay for this. $19.85 is the price that you'll pay today. It's going to include everything we talked about today. Metastock, data, all of the add-ons, the Veracity, the Fulgent AI, the Trade Trend, Patterns for Profit, Barry Burns Top Dog, the Learn Metastock subscription, the Unleashed Power of Metastock, 2 years of Stocks and Commodities, and then somebody to help you get everything installed and running and answer your questions and that kind of stuff. 1-800-882-3040. You can chat live with us if you have questions, metastock.com/sales-chat. Or and you can also place an order live, metastock.com/summit deal. So I want to thank all of the great presenters today. So awesome to have all of these good presenters come in and give their opinion on the market. Want to thank you for joining us. I appreciate that as well. I do hope you learned something. Appreciate any feedback you have to give us, and I hope that I'll be able to speak better, but I also hope that I'll be able to see it the next one. So we'll see you later. Thanks for coming today, guys.